Hoppers, welcome home. All systems engaged. Portal open. Ladies and gentlemen, welcome to
Habs Global. Okay. Ladies and gentlemen, you're welcome to Hops Global. You know how we do it, bringing you up to date information about crypto and all that concerns crypto. The long awaited date finally is here, and we are here for it. Consensus 2025 is here, and we have amazing speakers who have been invited all over the globe in every sector and in every department are going to be talking on the platform. And for that reason, we've come to witness it. So I'm going to be doing a live commentary of the program. Now, for those of you who are new to Hubs Global, please hit that like, subscribe button. You can input your commentaries, okay, and based on what you hear on at the very comment section, so that we can have a discussion. Tell me what you think about what someone has said or what a CEO or a speaker has said regarding a matter or concerning blockchain or anything that has to do with it. Right now, we'll be going over to the place. For those of you who are tuning in because of Pi Network or relation to Pi Network, you'll be happy to know, yes, Sir Nicholas Kokalis is one of the speakers for this very important program or conference. So without further ado, I'm going to be streaming the whole thing live. Let me just have a look. We're still waiting for them to come fully. For some reason, I'm pretty sure they are preparing one thing or the other, and getting it ready for the whole program to begin with. So as of now, there are about a number of people who are waiting on the site for the show to start. Obviously, just as myself, sometimes it takes. Okay, so I think they are coming now. So I'm going to go over there, and we will all have a look. So you'll be able to hear the audio and everything. If you can hear for one reason or the other, please do let me know. Okay. Okay. So this is live on Coinbase, Consensus. I think I'll be somewhere there. Yeah.
Hello and welcome to CoinDesk Live. We are coming at you live at the CoinDesk studio at Consensus 2025 in Toronto, sponsored by MoonPay, the global leader in crypto payments. This is the most influential event in crypto and the #1 destination for deal flow. I'm Christine Lee. Joining me to kick things off this morning are my CoinDesk colleagues. We've got Sam Ewan, Jennifer Sanasi, and Ben Schiller. Hello.
Hello.
Welcome to Canada, folks. So, Jen?
Christine and I are from Canada, so Sam, Ben,
Thanks
welcome.
for having us. It's great to be
Yeah.
here.
We've got
we have
the
free country representation.
Yep.
Oh, yes.
good.
Well, that
We really
is the
do.
nature of crypto. We've got the live band rip roaring, ready to go,
Sounds pretty
playing
good.
some Canadian tunes. We've got these amazing booths set up all over the conference floor. Well, Ben, you had such a key hand in organizing Consensus. Tell me a bit about the programmation highlights you're looking forward to.
Absolutely. We've got a packed schedule ahead of us for the next 3 days. And some of the highlights on main stage, which is just behind us here. We're going to have Bo Hines from the White House. He's going to be explaining White House crypto strategy. We've got people like Dave Portnoy. He's a massive kind of social media cultural crypto phenomenon. We've got other people like Eric Trump, son of someone else called Trump.
Security's high.
And many
Mr.
other
Trump.
luminaries from the world of crypto and beyond. So we've got 6 stages, many speakers, and it's going to be quite a packed schedule.
And Sam, you had a huge hand in organizing the one of the stages here as well.
Yes, tomorrow I'll be running the Crypto Brand Summit, and our goal this year was to focus on who are the biggest brands in crypto that are going mainstream. So folks like MoonPay and like Galaxy, we're talking with Enron, which should be an interesting conversation. They actually have a lot to say since their meme coin actually got sort of taken over by the bots. So they're announcing something on stage I think will be really interesting around that. But we're going to have just some fantastic conversations with some wonderful builders in the space. And I'm really excited just for all the energy that's in this room right now.
Right. Sam brought up Enron. Christine, I know later you're going to be talking to DeLorean. There's a booth on the floor that is modeled after Blockbuster. A lot of old brands making a Web3 resurgence here at Consensus.
That's right. That's right. Well, you know, we're going to go back to the future or back to the past. We'll try to figure that out as we go along. You know, at the intersection of crypto, we've seen AI, we've seen space, we've seen fashion. What about time travel? We'll figure it out.
Time travel is the one thing that kind of freaks me out. Out of everything you've said, I'm okay with AI. Time travel is where I draw the line.
Well, what segments are you most interested in, Jen, in the upcoming layout of Consensus?
Well, like Ben said, there are 6 stages, so I think we're going to hear a lot of conversations, not only about brands and crypto, but we're going to hear a lot on regulation and policy. I think it's interesting. The reason Consensus is in Toronto this year is because when we were planning it, a lot of brands didn't want to go to the United States. We were in a different regulatory environment. The United States is much more friendly now when it comes to policy and regulation. And so I'm curious how that conversation is going to go and what we're going to hear when it comes to the regulatory landscape in Canada versus the US as it stands today.
Yeah, that's interesting with Canada now because we've obviously just had an election here, so we're in a kind of new environment. Everyone's wondering what the crypto regulatory space is going to be now with the Carney government, so that's another big question for us here.
Yeah, and Canada is the birthplace of Ethereum, the second largest crypto project by market capitalization. And if you believe that Peter Todd is Satoshi, possibly the birthplace of Bitcoin.
Canada's where it all happens.
Peter Todd is here this week. I heard he was out and about last night, so he may be...
Wait, Satoshi was out last night?
Satoshi
Nakamoto himself or herself was here.
On the streets of Toronto. Well, it's not only
know.
the birthplace of Ethereum, I think CZ is Canadian as well.
That's right.
A lot of Canadians innovating in this space. I like to always highlight that.
I mean, not to put the boot in about Canada and crypto, though, but you know, I mean, Ethereum did start here, and Vitalik was born here, and a number of other big names were here, but they didn't stay here, and Ethereum didn't get incubated here. They went to Switzerland. So I think that's the question for Canada going forward. Is like when the next Ethereum comes along, will it actually stay here in North America?
Yeah,
so
I think that's a question for all jurisdictions, all countries, governments. If you want to keep innovation, how do we bring regulatory clarity while also balancing consumer protection interests, but not to the point that it forces entrepreneurs to leave.
Right.
So
well, I also
that's an
wonder,
ongoing
you have
conversation.
municipalities like Dubai. We were all in Hong Kong together a few months ago. Singapore, now the US, really trying to court these entrepreneurs to come and set up shop in their locality. So to Ben's point, is Canada going to say, especially under a Carney government, you're welcome here, or are they going to say, we actually don't want to play that game, we'll let it go other places?
You know, Ben, I knew you were going to bring this up. I don't know, something at my sixth sense told me you were going to bring this up. And then I thought, Christine and I can't even defend ourselves because we went to the United States, so we can't even defend what's going on here in Canada. But I wanted to bring up on the point of innovation that the University of Waterloo will also have some representation here at the conference, and a lot of the innovation in tech in Canada comes out of that university.
That's right.
Yeah.
BlackBerry came out of University of Waterloo. So yeah, it's going to be fun to have some of the local universities here. We've got a big student representation here, which is always good to see. Yeah, so I'm kind of fascinated for that conversation about Canada and where does it go from here after the election. And then there's this kind of arms race about regulation, right? So the US is now opening up. All these jurisdictions that Sam was mentioning, much more liberal than Canada is. So if you are a liberal, regulation sensitive startup, then you have a choice to make about where to base yourself.
I think that's what the Trump administration wants to reverse, and I think Eric Trump's presence here really shows that they want to go after crypto. They want to really hone in on this digital asset industry. They see the opportunity, the potential, and so I think it speaks volumes that they're making a presence here, even though they are getting flack in the New York Times this morning.
Oh, really?
For there is a tiny company with Chinese ties that has said that they are going to invest $300 million in Bitcoin as well as Trump's meme coin.
Right.
So
I'm sure we'll hear all about that this week at Consensus.
I'm sure it's a safe, reasonable investment for them. Yeah.
You know, guys, we're expecting 15,000 people on the ground here in Toronto.
Wow.
100 countries, 450 speakers. I think Consensus always really is the top tier when it comes to these types of events. And we talk a lot about how business gets done here. Because crypto, as we know, is very nomadic. People want to go and hang out all over the world. There was a big conference 2 weeks ago. There'll be a big conference 2 weeks from now. What do we think makes Consensus so special?
Consensus is the OG. I mean, if you wanted to be in crypto in early days, you went to Consensus. You went to New York for the anchor event of New York Blockchain Week. But now we've spread out. It's a festival feeling. Crypto is global, so we have gone to different countries, cities as we progressed. But Consensus is what started it all. So
I think one thing that defines and makes different Consensus versus all the other events is this big tent nature. It really has always been the kind of meeting of the tribes, whether you're Bitcoin, whether you're Ethereum, whether you're meme coin, whether you're more into kind of corporate blockchain stuff. This is a place for you to come and meet other people like you and people who are also different from you. And it's about that cross-pollination conversation that I think is so important.
This is the 11th Consensus, I believe. And, you know, I think back to probably the last two Consensuses, Hong Kong and Austin. And each time I hear people here at the desk and out on the floor saying, you know, it feels like it's maturing. It feels more serious. It feels more polished. I can come here. I can have the conversations that I've been wanting to have with folks. And I think that's what kind of differentiates it for me from some of the other conferences. And I want to come back to the Canada conversation for just a second, because Sam went through those stats, and we came down a little bit on Canada, but as one of the Canadians at the desk, I do want to say that there are more than 80 Canadian speakers here, more than 40 Canadian sponsors, and more than 65 Canadian community partners, and I think that that says a lot.
Yep.
Absolutely.
I was not knocking Canada, by the way. I was just saying that it is a race for attention these days. Yeah.
Ben and I did have a great poutine the other night, so I will say we are supporting local culture.
You got to get the poutine.
There's
the beaver tails.
What else?
Maple syrup. We've got
we're going
the
home
bacon.
with maple syrup.
Come on, we got breakfast for
This is
you.
how we do it.
All right, and we're gonna win the playoffs. All right, let's check out the main stage where we will hear opening remarks from CoinDesk CEO Sarah Strataberta and Consensus Chair Michael Lau, also Canadian.
Please welcome to the stage Michael Lau.
Good morning, and welcome to Consensus 2025. I'm so excited to be with you all here at the largest crypto industry-wide North American conference. We have so much planned for you in store this week, and I'm so glad that you're here. Before we begin, I'd like to acknowledge that we are gathered here at the Metro Toronto Convention Centre on the traditional territory of the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and Wendat peoples. As we come together to shape the future of blockchain and crypto, let's honor the enduring stewardship of this land and commit to building a future that respects all communities. My name is Michael, Chairman of Consensus, and I also happen to be Canadian. Born, raised, educated right here in Toronto at the University of Toronto. Toronto's a great city to host a big conference like this. From venues like the Metro Toronto Convention Centre, plentiful international direct flights into Toronto, an extremely multicultural city with tons of great food and cool neighborhoods to check out, and a lot of sports. Go Leafs go. I really hope you get the chance to see and experience all the city has to offer while you're here. Over the next 3 days, we're excited to welcome over 15,000 attendees from more than 100 countries. We'll hear from 450 speakers across 6 stages. We've got a packed show floor with 135 sponsors, 300 startups, over 1,000 developers competing in the hackathon. And not only that, but the crypto community is taking over the city with over 200 side events happening this week. A couple months ago, I came through Toronto to connect with a couple of folks in the crypto and Web3 community, and it dawned on me that Canadians have played an outsized role in the history and development of blockchain and crypto, and still do today. As it turns out, there's a lot of founders that are at the global leadership level across the industry who happen to be Canadian. And in case you didn't know, a couple of them are joining us as speakers this week, including Anthony DiOrio, co-founder of Ethereum and founder CEO of Decentral, Lorian Gable, co-founder CEO of Figment, Smokey Berra, co-founder of Berachain, Ethan Buckman, co-founder of Cosmos, Nam, core contributor of Bonk, Mike Siligetz, founder of EtherFi, Roham from Dapper Labs, and Don and Alex Tapscott from Blockchain Research Institute. Toronto specifically also plays a pretty unique place in this space. From the early days of Bitcoin meetups to the founding of Ethereum, there's a long-running history of innovation that was birthed right here and continues today. Not to forget also the amazing development talent that's coming out of the Toronto-Waterloo corridor. Could not be more proud as a Torontonian to be hosting this year's Consensus here in the city. With that said, Consensus has always been known as the big tent event that brings the global industry together. And we have many of the leading founders, CEOs, and executives from across the border and across the world joining us here this week. To all of you who traveled far to get here, we appreciate that, and we're so glad that you're with us. I remember back in my previous career in capital markets, a major hedge fund manager once said to me that you cannot make a fully informed decision without hearing all sides of the debate, and that the quality of decision, regardless of outcome, is where value is found. It's on this premise that I've always believed that high-quality, substantive content that provides insight, authority, or novelty can lead to higher quality decisions, whether it's on that deal, or building a business, or writing code, or navigating the future. And that's exactly what we strive to bring here to the stages at Consensus. And I believe you'll find incredible amounts of value here this week. When we approached the agenda for Consensus, there were a couple of major themes that we felt that were worth leaning into. And so I kind of wanted to take a moment just to kind of walk through a couple of those things and highlight some of the speakers that you'll be seeing here this week. The first theme is crypto in the context of the macro environment. I think it's pretty extraordinary that just within the last 7 days, we're back into Bitcoin above $100,000. There's been major news and developments on the tariff front being made, and Canada also just completed the election. With that, we have a number of expert speakers lined up to talk through and give their insights as to what's going on in the macro environment, including Kevin O'Leary, Anthony Scaramucci from Skybridge Capital, Dan Moorhead from Pantera, Dan Tapiero from 10T, Tom Lee from FS Insights, and also tomorrow Dave Portnoy, just to name a few that are going to be here. The second theme was what I would refer to as tailwinds from the top. When I reflect on the different chapters of our industry, the best way to describe the first chapter when you think about the adoption story is that it was a bottoms-up, grassroots, peer-to-peer led adoption story. But in recent years, what we found is that the second chapter started, where we're getting these tailwinds coming from the top, primarily expressed as public government support, as well as regulatory clarity. Most notably, in the last couple of months, has been the major shift in the US government on their stance towards crypto. And with that, later today, we've got Bo Hines, Executive Director of the Presidential Council of Advisors for Digital Assets at the White House, speaking together also with US Congressman French Hill. And on the regulatory front, we'll be hearing from both sides of the border as we have the Canadian Investment Regulatory Organization, Ontario Securities Commission, and New York Department of Financial Services taking the stage this week. The third theme is major industry developments. At Consensus, we want to make sure that you're on top of some of the major newsworthy and market-shaping events that are happening. A couple of weeks ago, you probably heard that Cantor Fitzgerald made waves with the announcement on the partnership with Tether and SoftBank Group on the launch of 21 Capital. And with that, we've got the chairman of Cantor Fitzgerald, Brandon Lutnick, taking the stage this afternoon. Earlier this week, just on Monday, American Bitcoin announced that they are going public on the NASDAQ through an all-stock merger with Griffin Digital Mining. And with that, we've got Eric Trump and Asher Ginut, co-founders of American Bitcoin, speaking tomorrow for the first time since the announcement was made. And then also, as you probably saw yesterday, Robinhood announced the acquisition of WonderFi, of which we've got both Johan Kerbrat, crypto GM of Robinhood, as well as Dean Skirka, CEO of WonderFi, taking the stage later this week. I think it's pretty cool that all of these things happened all within the week that Consensus is starting. The fourth theme is use cases.
Architecture and interior design? Find a 3D designer today. Fiverr, start now.
Stands on its own. Much of the traction that we've been seeing has been on the financial application side. And I can tell you that when we look through what audiences and what people here at the conference are interested in, stablecoins takes it at the top. And we've got a lot of speakers this week talking about it. We've got folks from Ripple, PayPal, Stripe, BitGo, and many others talking about it, as well as Zach Folkman and Zach Witkoff, co-founders of World Liberty Financial, who recently launched the USD1 stablecoin, speaking on Friday. Outside of the financial applications, I really do think that we're still seeing experimental kind of proof of concepts going forward, but the conversation around digital property rights, amongst other things, is one thing that we see some traction taking over. And tomorrow we've got Yatsu, founder chairman of Animoca, taking the stage. And also later today, for all of us Canadians, we're fans, including myself, with the lead singer of Our Lady Peace, Rain Maida, taking the stage to talk through his journey of what Web3 has meant to his company at Fandrop. The fifth theme is what I refer to as the trajectory of tech innovation. One of the things that's incredible about this space, I'd say, is the continuous innovation that we'd see around protocols, around the technology that fills this particular ecosystem. We brought in some of the most notable founders of ecosystems, including Charles Hoskinson from Cardano, Sergey Nazarov from Chainlink, Sunny Liu from VeChain, John Wu, president of Ava Labs, to join us. And we've also got a stage today referred to as Protocol Village, where we've got sessions dedicated to each ecosystem to give updates of what's happening there in their ecosystem. We've also got a hackathon, as I mentioned, that's hosted with our partners at EZA in parallel to the conference. And starting tomorrow, we'll have the CoinDesk Pitch Fest, where we hear startups talking about the latest things that they're developing in hopes of being able to win the prize. The final theme I'll just highlight is AI and blockchain. I think these are probably the two most important technological themes of our generation. And for the most part, they've been running on parallel tracks, and a lot of the conversation has been somewhat siloed. But I do think that we're starting to see the convergence of these two things, and staying on top of that, I think, is of critical importance, because if they are independently two of the most important themes in our generation for technology, the convergence of that will also be significant. And with that being said, we have an AI summit on Friday where we've got a stacked lineup of people speaking on this and talking about where these two themes are converging, of which we've got a number of people that were worth highlighting, including Dr. Lehman Baird, co-founder of Hedera, Shaw Walters, founder of Eliza Labs, as well as David Goyer, who co-wrote the Dark Knight movie, where there's going to be a discussion to talk about how creators are using AI and Web3 to unlock creativity and retain their IP, amongst other things. This is going to be an amazing week, and I can't wait for it to get started and for all of you to be able to experience what we've got planned for you. With that, I also like to thank our sponsors, especially our 5-block sponsors, Stellar, 4-block sponsors, BitGo, FastX, Spacecoin, and American Bitcoin, and long-term sponsors, Grayscale, Rootstock, Waxmit, and Circle, for your partnership in supporting Consensus. And one final thing. I'm also excited to announce this morning that in 2026, Consensus will be returning to Hong Kong from February 10 to 12 at the Hong Kong Convention and Exhibition Center. Only this time, we'll be taking on the largest hall in the venue. With our inaugural Consensus Hong Kong earlier this year selling out at nearly 10,000 attendees, with over 75% attending from outside the city, over 350 side events, and over 300 speakers, we're so excited to be going back. In addition to that, we recently announced that Consensus is also going to Miami next year, a major crypto hub, and a unique gateway that's going to connect both the North and South American ecosystems together. I'm so pumped for 2026. It's going to be amazing. Consensus Hong Kong, Consensus Miami. Ticket sales go live today. Please go and sign up. It's going to be absolutely go and sign up. It's going to be absolutely huge. I hope you have an amazing week with us, that it's going to be incredibly insightful, value-adding, and I look forward to seeing you around. Thank you.
So that was a wonderful presentation, an introduction coming in from the organizers of the program. Um, and we are going to be looking forward to more to come. Like I said, reputable mention, and then most especially for those who are pioneers, is that Dr. Nicholas Kokalis is part of the speakers who are going to be speaking on this event. The date for his presentation is on the 16th, which is 2 days' time. And don't forget, the event runs from today all through to the 16th. So he's been represented, of course, as the founder and head of technology in the Empire Network. Okay, and his work is not going to go unnoticed. So keep in touch, stay on here. If today's your first time watching me, I'm Hobbs Global. You're welcome. Yeah, we've been here a minute or two, getting things together, primarily talking about the Pi Network and also occasionally bringing in relevant information about other cryptocurrencies which you need to know. Currently, the Pi Network is doing great. Today, there's going to be an announcement, hopefully by the end of the day, in the Pi ecosystem. And like I said, Dr. Nicholas Kokalis is going to be is part of those giving the presentation. So stay tuned. Every now and then we'll be coming in with the commentaries. As he rightfully said, next year's consensus is going to happen in Hong Kong, and the tickets for that goes live today. So if you're interested and you're someone who follows cryptocurrencies and you want to actually jump in on this, yes, today will be the best time or great time to make purchase and also book your tickets and other stuff so that you can be able to join in. So we're just going to go back to follow and see what next that they have for us. And I'll be coming in occasionally to give my two-piece and some commentaries on it. So far, it looks very interesting. The presenters did a very great talk that came in. I think was great. They touched on some few things about the fact that Canada is a hub for crypto and various crypto innovations, and I agree with that. So we'll keep to it, and I'm gonna return back so that we can have a good time. Enjoy.
Please welcome to the stage Andy Baer, Anthony Scaramucci, Jonathan Steinberg, Pascal St. Jean, and James Seafart.
Let's go. All right. All right. Pretty good crowd for this early in the morning in the first panel. So thank you everyone for being here. We have a pretty star-studded panel up here. We're going to be talking about, can we call it an asset class yet? How serious investors can and should engage in crypto. So let's set the baseline here. Let's go to you, Jono. What's the current baseline for what institutional investors are looking at this space? Like, obviously we have the ETFs, there's some private funds. How are serious investors looking at this space right now in 2025?
I would say, we have a strong lineup of crypto.
Really still trying to understand how the networks function, what is a validator, what are all the different classes of cryptos, because here we are on stage a bunch of experts in the room and people who are in the day-to-day space, and we just blanket everything as people who are in the day-to-day space, and we just blanket everything as crypto as an asset class. But the reality is when we go to an ETF conference, no one there is talking about is are ETFs an asset class? It's what are in the ETFs. So there's still a lot of that education to take place, but they're starting to move forward. But Bitcoin, of course, is leading the charge. But I'm impressed by the level of understanding that these larger institutions are starting to take shape, and you're going to see a wave of that coming in the next 18 months.
Andy, to you. I mean, one thing I will say is, like, I feel like education has been what we need to do in this space since I started covering it professionally in 2017. I feel like it's probably always going to be. Yeah. But, like, what else do we need to do to make this asset class more recognized, more standardized, more acceptable to serious investors and institutions? What are you guys focusing on?
It feels like 1999. Right? It feels like when tech stocks in the United States started to become more accessible with easier online brokerage, right? The E-Trade ads with the babies, and people started buying names that they knew a lot about, then they started buying names that they knew less about, then they started buying names that were going up that they saw in the Yahoo chat rooms. And there was a lot of froth, and around that gathered this QQQ ETF, right? One of the first ETFs, which was this liquidity container for 100 NASDAQ stocks. That took on a life of its own. It moved from being an institutional kind of liquidity mover to an allocation engine into tech. So we think that there's a lot of trading. Crypto is a trading asset class yet. We don't think it's quite an investment allocation asset class. There's a lot of trading, there's froth that will come away, but out of it, you need these liquidity containers that ultimately become benchmarks and that ultimately become the tool that retail will use to allocate to the space.
Yeah, it's funny. Henry Blodgett, the CEO of Business Insider, he was on one of my colleagues' podcasts recently, and he was talking about what he was doing because he was covering tech stocks in '99, and he basically told people, buy 5 to 10 of these things and hold them for 5 to 10 years. And that's how he ended up in Amazon so early and a few other things. A lot of them blew up. Seems very similar to what's going on in this space. So I think a lot of the stuff in this space is going to be worthless over time. But I want to go to you, Anthony. We talked to your colleague, John, before, and he was saying how you guys wanted to really go into the space in a big way in 2018, and it just wasn't ready. There weren't institutional backdrops. Things weren't set up for you guys to really go into the space. Obviously, you have leaned way more heavily into the space. Can you just talk about the growth that has happened and what you think still needs to happen for big institutions to jump?
So, guys, just say I do notice there's some lag every now and then. It's not from my side, okay? So if you do notice that, just do pardon me, but it's coming from that side. So I'll keep quiet and I'll let them talk.
We were 4 years out from Mt. Gox, and I was uncertain where to put it. And then the regulatory issue, I think, was hanging on us. By 2020, you could store at Fidelity or NYDIG or places that I felt comfortable with. And then you guys may remember this, the IRS deemed Bitcoin intangible property. Well, once that happened, in the US, property laws are fairly sacrosanct. They're bipartisan. There's 900 years of common law dating back to the Magna Carta. And so I knew it was going to be impossible for somebody to take my Bitcoin if somebody like Elizabeth Warren wanted to make it unlawful. So we made our first investments in October of 2020, but I think this is a metric thing in terms of dollar value. I don't know what the space is right now. It's about 4 trillion. John?
I was going to say 3, but
Okay, just cross 3 trillion again.
So 3 trillion is like a Mag 7 stock. 20 trillion is an asset class. And so if you tell me that Bitcoin can get to 500,000, people will be writing stories that Bitcoin is an asset class. I believe it is today, but others don't see it yet. But I think that's really what happens. Numerically, it's got to trade the overall market cap of all crypto, but more specifically, Bitcoin's got to trade closer to gold.
Yeah, it's funny, you talk about like the institutional custody, and I remember like thinking back in 2017, even through 2020, talking to people in this space,
they were like, institutions are going to come, and like they can't understand the mismatch between like, you don't want to hold your own coins if you're an institution or you're running a pension fund. Like you need institutional grade custody, and there's this mismatch in people that were early to the space and people that are coming now between what they need and what's available. Go ahead.
Maybe I could just jump in a little bit here. I think why we're all, no one's surprised, but surprised at the same time that Bitcoin dominates this cycle compared to everything else, because this is more institutional capital coming into this space, and Bitcoin has overcome a lot of the things to potentially be deemed an asset class like gold or other things. It has hedging mechanisms, it has different wrappers. It's a little bit easier to understand. It's a digital gold for a digital age, whereas everything else, when we talk about the concept of a governance token or a utility token, it's a little harder for institutions to wrap their minds against what exactly am I owning? Am I owning the rights to future, basically fees from a decentralized exchange? No, you're owning the right to a vote on the protocol. That's still something they haven't wrapped their minds into, which is why the index and everything they're doing, and we partner with them, and I know Wisdom Tree has as well, is it enables at least the abstraction of that complexity into something a little easier to understand, working mechanisms to try to have more institutions in the space.
I was going to, even before the plug, I was going to agree with you that your journey about custody and about Bitcoin, your world as an active manager was Bitcoin and venture, right? Like those were the two spaces. And that leaves out the public trading of everything else. Yet the public trading of everything else is vibrant and accelerated around the world. So I agree, that's the biggest problem, that the asset class, the crypto asset class, is a bit hamstrung by the fact that there's this giant singular thing standing there that people have to understand first, and then everything else becomes a trail. Yet you miss out on real blockchain technology, layer ones, where all these tokenized products are going to settle, infrastructure, DeFi. You miss out on all that if you don't dig deeper, but it's a little bit hard to get past it, and that may just be an earliness thing. But hearing both of these kind of coming of age stories, I think that's where we are right now. This is the time to push, though, especially in the last couple of weeks when the rest of the space seems to be kind of resurrecting itself.
All right, we've been talking about dancing around this topic, but Bitcoin dominance is at like a 4-year high here. When I look at ETFs, that's obviously what I focus on. If you look globally, Bitcoin ETFs have 80 to 90% of the assets, no matter what you're doing. Now, granted, there aren't a lot of other ETFs available besides Ethereum. There's some Solana and XRP in the US. The US dominates, but Jana, let's go to you in Europe. What's happening? Are people are they just focused on Bitcoin, or are they looking at this other thing, the venture side of things that Andy kind of alluded to?
Earlier it was spoken about the queues and the basket of 100 public companies that made up the queues. So many of the cryptocurrencies have no value beyond speculation that it's very, very, you have to be very cautious. So a CoinDesk has to, if we licensed the DAO, the Crypto 20, you need to be the Wall Street Journal. Can't only be a cheerleader. So there's a lot of risk here. So Bitcoin was amazingly well constructed. It's not digital gold because we actually have physically backed tokenized gold, which is gold, and it travels just as smoothly over the blockchain. But Bitcoin's done a better job selling the need, this alternative store of value, than gold has done. But I think Bitcoin is dominant. It is here forever, I believe. Some will emerge, but we have to be very, very cautious. I think that's sort of my take for the moment.
Yeah, so I could jump in a little bit here. The US has launched some futures-based ETFs, right? But Canada's been quite innovative at pioneering the ETF space globally, as well as staking. So we were the first to launch staking in an ETF with our Ethereum product, and recently launched our Solana SOLQ product. That one is attracting both retail and institutional capital because we're solving the complexities of a lot of things. So how do you package the technology, the staking, the security, the right custodians in an easy to access wrapper? This is quite appealing for investors. And the other thing as to why institutions are starting to come in is they also start to understand layer one. So Bitcoin, they understand. Now they're starting to understand layer one, saying, okay, if all these applications in the future of finance need to settle on chain, I don't need to start picking which application is going to win. Like, is it Google or is it Facebook, right? Or is it Microsoft? You just own HTTP. You just own layer, just own the layer one. And so people are starting to allocate through these vehicles because they understand what it is. And at the same time, through these staking mechanisms, they understand that they're participating in the security of the blockchain, which is a plus for them.
So everything that Pascal just said, we couldn't say 5 years ago. Take it back to 2020. And so I'm an early investor in SolQ, in Pascal's ETF, because it meets all the metrics that you would expect it to meet from an institutional investor standard. So we, I guess we were first money in, or started getting this thing started. And I expect them to have $1 billion fund. And as Solana continues to grow its ecosystem, I do think it will be one of the things that we end up tokenizing everything on. Stocks, bonds, real world assets, et cetera. I'm not saying there won't be others, but Solana has a big lead, it's fast and it's cheap, and the guys there have done a great job of building that ecosystem. And so this is the combination of a great story and a great asset management firm coming together to scale that for individual and retail investors.
This is great, and I agree, Solana is amazing, and I think the product's amazing, and democratizing staking yield is critical, right? It educates while it pays. Henry Blodgett's point about picking 5 NASDAQ names and holding them for 25 years, probably would have had Intel, and probably would have not had NVIDIA, right?
Yep.
And understanding layer ones, you would have got it. You might not have had Ripple or Stellar, right?
Yep.
You probably would have had Ethereum, and it would have been difficult. So staking's critical, and institutional grade staking is important. Solana probably won't be the Intel. It probably won't be the NVIDIA. It might be the Apple or the Amazon, right? So again, for people who want to make that 10-year bet, you just don't want to pick, right?
The index, 100%.
You want them all in there, and you want some benefit of staking yield. In the meantime, these products, I think, are a gateway. A SolQ is a gateway to making the whole environment a little bit more friendly, and kind of distributing some of that yield to holders, which will be a great feeling. So,
can I ask John a quick question? John, in the United States, they prohibited staking on the Ethereum ETF. Do you think that the current SEC, the new rubric of the SEC, will change that and reverse it and make it consistent with Canada and other parts of the world, or you think we're stuck with that?
I believe it'll evolve to allowing staking, but that's not like the SEC has given that visibility, but I believe that that's going to be the trend. We're coming off of what was such a restrictive SEC. It was completely unreasonable. So, and the ETF really mainstreams these exposures for all investors, whether it's retail or institutional.
Yeah, so I can actually answer that. The SEC's final deadline for the 19B4, which is like basically when they have to say yes or no, you can do these things, for staking is going to be in October. Our view is it's going to be approved. How long after it's approved before all the plumbing is set up properly or the SEC is comfortable? But I do want to give a shout out to the OSC, the regulator up here in Canada. Pascal kind of hinted at it, but Canada always beats the US to market, first to market for every new type of ETF out there.
I thought these guys
I don't want to brag.
I thought you were the socialist country.
It's not the OSC, it's 3IQ pushing.
Oh, okay,
that's okay.
All right, well actually, everyone here probably knows about the Grayscale lawsuit with the SEC. I'm assuming maybe people up here in Canada, if you are actually Canadian, but 3IQ, or before that, actually fought a similar battle with the regulators here in Canada. Can you just talk, right now we've gone from super massive headwinds over the last few years. It seems like we have a lot of tailwinds behind us. Can you just talk about what happened with that 3IQ lawsuit and where things are going?
Yeah, so fundamentally, it was working with the regulators to basically, understand what they have the right to regulate and what they don't have the right to regulate. So fundamentally, originally, they came back, in the early days, because it took 3 years, in terms of, where are you going to custody with, how are you going to have your market makers, your banking, all the complexities. And so 3IQ went to go solve all that and brought together a lot of the parties that today make the infrastructure that manage most of the ETFs in the market, right? Once we came to them, then they kind of denied it again, at which point it became infrastructure solved, And so why are you denying it? Because the regulator in Canada is not allowed to dictate which asset class can or can't be invested in if you solve for those problems. And that was the particular lawsuit, was now you're picking and choosing what you're allowed to invest in, and that's not your right as a regulator. And that's how we won, relatively straightforward, because it was basically saying we solved the infrastructure problem, now you don't have the right to pick and choose. And I think it was a similar case potentially with the SEC. But that was the 3-year journey. Since then, basically, they've been quite open at working and listening to asset managers at fitting within existing 81-102 regulations. So what's missing in Canada to really take off compared to some of the other jurisdictions that are building crypto-native regulation is that we don't have crypto-native regulation, so everything we do has to fit within existing laws, and so you really have to, open up your paradigm shifts and educate and think this through in terms of what does it go into to get all these different products approved. So it's a slower process, but it's working, and it's keeping assets safe, secure, and so far simple for investors.
Yeah, this, to Jono real quick. I mean, our view here at Bloomberg is like things have kind of switched in the US from what is going to get through, how can it get through, to like where is the SEC going to draw the line? Because pretty much everything is likely to get, they seem to be more libertarian minded. We don't know for sure. But I'm just curious if you could, at Wisdom Tree, if you kind of think things have shifted enough that way, and also if you can compare and contrast, like you have a lot of products in Europe, obviously, like what's the difference in working with these regulators has been?
So if we do sort of beta, we want to be sort of first to market with beta or near first. When the SEC held our application for Bitcoin for like 5 years, and so that when they did approve us, they approved us with 11 other firms, not really an ideal environment for actually the asset manager. Funny though, Gensler created just what he didn't want. In the US, there are more Bitcoin ETPs than S&P 500 ETFs. So he created, by allowing 11 firms to say we're first, he created a tremendously competitive and mature foundation for Bitcoin, which I think is just very good for the asset class. I agree it's more when, not if, and I'm expecting there to be a lot more competition and exposures to come to market.
See, I think one of the things, when you talk about is it an asset class or not, can a bank, a money center bank, a large U.S. institutional bank, custody Bitcoin? Meaning if I own 50 Bitcoin, can I move it to my account at JP Morgan and have them hold it for me? When do you guys think that happens?
I think that's happened. I think Bank of New York has gotten that approval.
So it has happened.
It's just, I mean, if it hasn't happened, it's about to happen, but I believe it has happened.
I think in Bank of New York, maybe I didn't understand it, but I thought in Bank of New York's case, it was like a trial balloon. They were letting them have a trial basis, one bank. I'm talking about the proliferation, Jono, of like all banks. You walk into your bank, you're going to move assets over, you can move your crypto too.
Is
that 5 years from now?
No, I think it's sooner than that. I mean, there was, regulated financial services, you bow to the regulator. You can't go afoul of them. No one is more difficult than the OCC and the banking regulation. And so they were really discouraged, the big banks, from touching the asset class in any way. And that is falling away. And so crypto should be able to sit side by side with other asset classes and other services, be normalized. And that's where, and I think that journey is happening. ETFs were a part of that journey. These regulation changes are a part of that journey. And I expect that it'll be pervasive. Now, custody is a tough business, and it's a scale business. So, Coinbase has a fight ahead of them.
I think, custody is one thing, derivatives also important, right? If you don't have index derivatives that are liquid, even on the biggest derivative platforms, you have a lot of liquidity in Bitcoin, some in Ethereum, and then it trails off. If banks really start to develop structured products or hold or trade or serve customers, suddenly statutory capital is going to be something you have to manage. And Bitcoin alone, optionality isn't going to solve that. So you need other big containers. QQQ did this really well. Options market for tech stocks exploded. The futures got better. The index options got better. ETF options will handle some of that, but that's a very capital expensive way to manage risk. So we do think that derivatives, custody, and ETFs. You put all those three together with the right kind of scope, that will help distribution, that will help risk management.
But I don't think there's any argument on the stage that it will, like everything we're talking about is on a journey of happening. The question is, it's slowly then suddenly type of analogy. So is it 18 months, 36 months, who knows? But globally, regulatory clarity is happening. A lot of mid-tier banks are custodying and bringing in crypto-centric clients. Structured products are happening in certain jurisdictions. So fast forward, right, just the mental model shift over the next 3 years. If we looked at the space in 2017, like Anthony was saying, it was non-investable for Skybridge, and now all of a sudden they're one of the leading players in the space. Do that in another 5 years, it's an asset class, guys.
So can I just
go ahead,
say
Anthony.
Just a couple of things why we may not actually be bullish enough. Number one, proliferation of capital into the public markets for things related to Bitcoin and other assets. Kraken is going public, would be an example, but other companies are going public. American BTC spinning out of Hut 8 as an example.
Yep.
Does your home have an RTS meter? It's a switch box near your electricity meter, often labelled radio teleswitch. From June, the signal that controls RTS meters is being switched off, and some homes could lose heating and hot water. So if your energy supplier has contacted you about getting a new meter, act now. The RTS switch off is on the way.
Wikipedia. But what I'm getting to is we both know that Wall Street is a selling machine. Yes. And BlackRock is just turned on the dial of thousands of consultants going out there. And so you saw in April, after quote-unquote Liberation Day, Bitcoin sort of was not super correlated to the Mag 7 and others. So I'm just wondering, proliferation of capital, copycats, introduction of wider regulation, Wall Street selling machine for these ETFs and other products, we may not be bullish enough.
One thing I will say on that is I work at Bloomberg, and I have a lot of clients who don't take this asset class seriously, which is exactly what we're talking about. And some of them saw what you were talking about that happened in April, that kind of like, I don't want to say the word, but it kind of disconnected from what was happening in the markets, or at least it didn't act the way most people expected. And that prompted a lot of people who were like, maybe I should take this a little more seriously and look into this narrative. You want to say something, Pascal?
I was going to say, so we've seen moments, so like during the banking crisis in 22, Bitcoin completely disconnected to the upside, right? And so we cannot forget the impact that, for example, the cash and carry basis trade is having on Bitcoin right now. These ETFs are being used to run that trade. And when liquidity, basically there's a liquidity crash and you need to get out. So everyone has to get out. And so Bitcoin becomes correlated.
Pascal, explain the trade. Explain the trade.
So basically there's a disconnect, and this happens in every commodity, but essentially in crypto right now, particularly in Bitcoin is very popular, but if you go down the chains, particularly those that have futures, you have a very large spread between the spot asset price and the derivative asset price. And basically, if you want to do a market neutral trade, you go long the base currency, so in this case Bitcoin, and you short their futures or you short the perpetuals, and you basically achieve what you call the contango spread in the middle. And for now, that's been close to high. It's beating treasuries almost by double right now. So it's a very popular hedge fund trade. A lot of institutions, some pensions are executing the trade. We're trying to package that trade in an easier way for individuals. And so it's becoming popular. But when there is liquidity crunch, and that is your source of liquidity, Bitcoin's very liquid, people unwind the trade. And so it does get Bitcoin to get correlated to everything else. But in moments of stress, you've seen Bitcoin succeed at its job at bringing in risk assets.
Yeah, so I'll just add, like if you just look at the spot Bitcoin ETFs, about 15 to 20% of those assets are in hedge funds likely doing this trade. And we saw billions flow out. They went from a peak of $40 billion inflows. $5+ billion came out from February through the end of March. And almost all of that was unwinding the basis trade because you went from double-digit yields on basically risk-free to single-digit yields, and people just took their money out. And then the outflow kind of stopped, and now it's gone back in, but that basis hasn't gone up. So this money that's come in our view, over the last month or so, billions of dollars, we're now at a new all-time high of inflows, isn't because just the basis trade like we saw was happening.
This time here, yes.
Yes.
Yeah.
So I want to talk to someone we kind of were hitting on before. We were talking about headwinds turning into tailwinds. Something I've been worried about since November, and we're starting to get more signs that this might be the case. I want to go to you, Anthony, on this one. Has the pendulum swung too far from a headwind into a tailwind with some of the things that the administration has done with the Trump coin, Melania coin, some of the things happening World Liberty Financial? I think a lot of people want this to be bipartisan. They don't want it to be an issue. They don't want too many things to be happening. And it almost feels like this is giving more ammunition to the people who are anti-crypto solely for political reasons to fight this. I want to hear you just talk about this for a minute.
All right, well, so don't ever forget this with the president, okay? I just want you to imagine you're at Mar-a-Lago and there's a buffet table, okay, and you have to eat everything at the table, okay? You can't take your tray over to the buffet table and say, I want pro-crypto regulation. I want a little bit of banking deregulation. I'd like some lower taxes, okay? And then you walk back to your thing and you drink your Diet Coke with the president. You don't do that. You got to eat everything at the table. You got to eat the meme coin before the inauguration. You got to eat the Canada's the 51st state. Sorry about that, Canada. You got to eat the. We're going to take Greenland. We're going to take Panama. We're going to have tariffs on, tariffs off. Liberation Day, no Liberation Day. I just blinked. You get everything. The $400 million plane. Okay, and so you have to understand that you have to eat everything at the table. So to me, if I'm just talking about our industry, he's better for our industry. If we're going to be objective about it, Jono just cataloged briefly some of the things that went on in the last administration. And so, yeah, is there some headwind now? Is there a slowdown for the stable? It's so funny that these things are called stable and genius, so we'll just call them the stable genius legislation. Is there some slowdown related to that because of what Trump is doing with his family? I think that there is. What I would say to Eric and Don, I assume, because I know those guys well, that they're not doing anything wrong. So just be as transparent as possible to reduce the fight, the tension. They're business people. Their dad's the president. They're allowed to be in business. You see what I mean? But I do think that stuff gets passed by the August recess.
Go ahead, Andy. You want to say something?
I couldn't agree more, but when the
What are you eating at the buffet table, though? What do you like most? You like everything, or you just
start with A, go all the way to Z?
All right, you like the plane the best, I think. You like the $400 million plane from the Hamas Qataris.
$400 million
you like that?
plane would be nice. Why stop there? The weekend that the Trump coin went live was an amazing demonstration of liquidity moving, and I think it pointed to. I just love the volume that went through. Nature will take care of things that shouldn't be in the ecosystem, and 10 years from now we'll look back. But that was a build. That was an amazing feat of global coordination of liquidity to have that happen. So
on Solana,
and when did you? Who had on their bingo card that the president would put up a website with a Solana address at the bottom? That was pretty cool. So it doesn't matter how it happens, but it did advance a lot of things and it educated a lot of people. So the right and wrong will wash away with time, but it was a groundbreaking thing that was pretty impressive to watch. And for investors who want to stay at the quality end of the curve, yeah, you got to have some Solana. You don't want to, this week proved you don't want to bet against Ethereum too hard. You may not want to pick which layer ones, but you want that top layer of infrastructure because all that stuff is going to be happening up there. So, Trump is not in CoinDesk 20. It won't be, it can't be, but the results of it, the picks and shovels are in there. And so it was impressive.
So when we looked at advisor surveys and investor surveys, the number one reasons people gave for not investing yet in crypto was there was no wrapper they liked. Most of them preferred an ETF. We now have the ETF specifically in the US and elsewhere globally. And the other one was regulatory clarity. We got a decent amount of regulatory clarity when the SEC approved the Bitcoin ETFs and Ethereum ETFs. It may not be explicit in some regards, but that was pretty well done, right? But there's still a lot of regulatory clarity that needs to be sorted out. You mentioned the Stable and Genius Acts on stablecoins. Anthony obviously thinks they're going to get done. We probably need a market structure bill. I guess I'm going to go to you, John. Are institutions that are thinking about entering the space, how much are they relying on some sort of, legal framework coming out of Congress in the US, or are they worried about regulatory clarity in order to get into this space?
I think that you can't generalize. All institutions aren't the same, and there's certainly those that are sort of the early adopters. You are seeing the financial intermediary, now that you have the ETF wrapper, embrace it. If you had asked, 2 years ago or 3 years ago, how many advisors had put their clients into a crypto or Bitcoin, it would be a zero, while their clients had actually bought it on their own. So this, and in the US, money moves through the financial intermediary. That's a big money channel as opposed to direct to retail. I think this isn't so different from ETFs where, it's not a straight line. The regulations take time. The American Stock Exchange was in front of the SEC for 7 years before the SPDR was approved. And then it started with only equity indexes. And then it went to fixed income indexes a couple of years later, self-indexing after that, commodities. So it's a journey, but I think we have that momentum. It is happening. Writing the legislation, though, isn't easy, and some of it may or may not get approved. I'm not as bullish that it will actually get done, but I'm not sure it needs to get done for the asset class to thrive. You just need the SEC not to regulate through enforcement.
See, Pascal,
so we speak to a lot of advisors, of course, and before the ETFs, it was hard because you had access through SMAs. You just say to your client, go on Coinbase or go on Kraken and just buy and just do what you have to do. So today, the ETFs are available. From that being said, Bitcoin, again, why we're seeing the dominance is the easier one to explain if client demand is there. We're seeing some of the asset managers being a little more innovative and just adding Bitcoin as part of their global macro portfolio. So now everyone gets Bitcoin without having to be sold Bitcoin. And so people are solving for the access problem and the problem of the advisor not having to have career risk by saying, let's go 3% Bitcoin, and then all of a sudden volatility kicks in, and he's got 200 clients calling him like he's trying to golf. He doesn't want that, okay? So basically, the advisors are saying, we're comfortable with Bitcoin, we're comfortable with these macro funds. What we really want is an index and a basket. Because then we can go to our client and say, it's a diversified, professionally managed solution, and we're going to put that in your portfolio, and I could go golfing.
We call them 5%ers, right? The advisors manage in the United States over $100 trillion, and there's trillions in retirement funds, trillions in annuities. You don't want that 5% allocation to be 20% or 50% of your headaches, right? That ultimately we feel will have a Bitcoin chunk and we'll have an index chunk. We hope CoinDesk 20 will be that index chunk. And then that's what you hold for 10 years or 20 years or 30 years. And by then I think that's a pretty solid bet.
Anthony, you had something you wanted to say?
Well, just briefly, I think Jonathan's ultimately right about legislation. It's very cumbersome, as a huge sausage factory. But I just want to remind people that Fair Shake, the crypto pack, came in 24, dumped $250 million in. Other crypto aspirants gave the president something like $150 million to help him win that election. And I find it very hard to believe that the Democrats are not going to be at least crypto neutral by the time we get to the 26 election season. So that's the reason why I'm optimistic. But Jonathan and I have a lot of experience with this stuff, and we can go haywire when you're in the Congress, but I think the incentives are there to get these bills passed.
Yeah, if you're not optimistic on this asset class and more broadly after this panel, you probably weren't listening too well, but that's all we have time for. Thank you, everyone, for coming early.
Great job.
Always good to see you. We're going to see you this summer, I hope.
Hopefully. I'll tell you.
Welcome back. We're coming to you live from the CoinDesk studio at Consensus 2025 in Toronto. I'm Christine Lee, joined by my colleague, Ben Schiller.
Good to
Ben.
be here. Thank you, Christine.
All right, so we're kicking off things. We heard from our Consensus chair, Michael Lau. We also heard from a panel about Bitcoin as an asset class, Anthony Scaramucci, Andy Bear, ETFs, et cetera, You've had a key role in programming the sessions at Consensus, so give me a sense of what you're looking forward to. What are the highlights?
Yeah, so that session we were just watching with Anthony Scaramucci and the founder of Wisdom Tree and others was really talking about this idea of Bitcoin as an asset class and really coming of age in this cycle since the election. And they were talking about some of the politics around crypto regulation and then the impact of the US on other jurisdictions around the world. So that's one of the themes of this conference is that, you know, post the American election, we're going to see other places like Canada being more front and center with crypto adoption in the capital markets.
I found it interesting when Anthony Scaramucci was talking about, you know, when people think of Bitcoin as an asset class, I mean, everyone here already thinks of it as an asset class. It has to hit around $20 trillion.
Yeah.
It's at $3 trillion now. And then we have a whole slew of altcoins. Bitcoin dominance is at a 4-year high.
Yep.
And so where are we in the cycle now? I mean, it's getting more mature for sure.
Well, it's interesting for anyone who's tracked crypto for a long time because a lot of people have obviously predicted that Bitcoin would become less and less important over time as more and more altcoins, different digital asset products came on the market. But actually the opposite has happened. There's been this flight to quality, which is Bitcoin. And Bitcoin is as dominant now in the crypto market as it has been for 10 years or 8-9 years. So 65, 70% still. So it's just been interesting in this kind of moment when some of the other assets are going down. Bitcoin has very much been the asset in the crypto market. And to a lot of people on Wall Street and other financial centers of the world, Bitcoin really is crypto. There is no crypto, it's just Bitcoin, which is obviously music to the ears of Bitcoiners around the world who've often said that, you know, Bitcoin is crypto and crypto isn't a thing really. So
it's interesting, you know, you can really tell, well, now, I mean, Bitcoin is the OG, but you can also tell when people got into digital assets, you know, they're hardcore Bitcoiners. And then there was cryptocurrencies with Ethereum, the ICO boom, and then we started calling it, Bitcoin, or blockchain, not Bitcoin, but nowadays, definitely Bitcoin, not blockchain. And then it started being called Web3. So, but at least at Consensus, we embraced it all. We're just here for the digital asset revolution.
Well, that's true. I mean, we're sort of fairly agnostic about different chains, and that's one of the ideas of Consensus is to really bring all the tribes together. And we believe in the technology of blockchain decentralization as much as single assets like Bitcoin. So to us, you know, let a million flowers bloom here, and you can see that very much represented across the 6 different stages here and the different speakers we have here. So it's not a Bitcoin fest.
We have 15,000 attendees from over 100 countries, over 450 speakers, over 200 side events. That's another thing about crypto conferences that I love. Whenever you have an event going, there are so many people from the crypto community also just throwing events, just getting people together, wanting to show their innovation, wanting to make deals happen.
And that's decentralization, right? And you can see that in this conference and in other conferences as well. It's like we're offering a platform for people to come in to Toronto, wherever we are, and set up their own event. And if they're interested in some esoteric art thing or some like esoteric finance thing, whatever they want to do, they can do their own event. And it's still part of the mix here, still part of the conversation. And we like to be very inclusive into everyone having a voice.
Just one note though on Bitcoin. When Bitcoin goes up, it rises all boats. I mean, we're seeing a boom in Ethereum, which was the most hated coin for a while there, but now it's really surging. Let's take a quick look at Ethereum and Bitcoin actually. Okay, Bitcoin right now, $103,293. It's trading pretty flat today. Let's head on over to Ethereum. Yeah, Ethereum is at 25.72. Yesterday was ripping over 9%. You see that in the chart up there. now it's still holding a sizable gain. So we're seeing a lot of acquisitions, mergers in this time because people are excited again. They want to they see that the crypto market is back up and people are ready to make deals again.
Yeah, I mean, it's interesting to see Ethereum come up. Obviously, people have been complaining in the Ethereum community, in the wider financial markets, that Ethereum is a laggard in this cycle, that it's not running with Bitcoin, but it's now very much up in the last week, 25-30% from where it was. So, you know, that's encouraging to see.
And as I mentioned earlier, Ethereum was born in Canada, in Toronto to be exact. Canada is the 10th largest economy in the world, with a GDP of over $2 trillion. It's a resource-rich country with plenty of blockchain adoption opportunities in sectors like energy, agriculture, healthcare, and finance. Joining us now to discuss is Kalea Carrington. She's the Executive Director of the Canadian Blockchain Consortium. Kalea, thank you so much for joining us.
Thank you so much for having me here.
So, I mean, Canada has quite a history in developing the crypto industry. And so tell me what is the latest that Canadians are doing to help this industry thrive?
I would say that we're very actively engaging with our policymakers and regulators. What we've seen in a lot of other G20 countries, looking at Singapore, Japan, the UK, even into like El Salvador, Middle East, a lot of times when these industries are starting to thrive, including the States, we're seeing legislative and policymakers producing the kind of policies that allow for regulators to interpret in such a way that it can become more friendly. So we're just engaging very strongly from a regulatory and policy perspective to help create a framework that makes Canada a more friendly place to do business.
So we just had an election here in Canada, but crypto was not really on the agenda very much, not like it was in the US election back in November.
Wait, I'll qualify that.
What?
I mean, Pierre Poilievre, he was a Bitcoiner. He said that.
But he wasn't really discussing it during the campaign so much, right?
True.
So why was that? Why was crypto not really a thing here?
So I would say when Pierre had come out very pro-Bitcoin at one point, he had purchased some shawarma with Bitcoin, it became quite a big news story where the opposition or the leader, Justin Trudeau, a lot of negative rhetoric came out. So I'd say from our industry's perspective, we're actually quite happy that it didn't turn into more of a partisan-based issue where the conservative, or if you're used to American terms, Republican Party was very pro, and then the Democratic Party was very against it. So they didn't table it mainly because they didn't want the controversy, and they recognize that over 35% of Canadians actually interact within this industry, so neutrality was actually a better position to take than positive and negative opposing views.
What do we know about Mark Carney and his views on cryptocurrencies and the wanting any innovation in the digital asset space and wanting regulatory clarity?
So historically, from what we've seen, because as he's been Prime Minister, we haven't seen any recent developments or statements regarding our industry, but historically he's been very pro central bank digital currency and very pro blockchain innovation. We are hearing that there are members within his ministry and caucus that are very pro digital asset space and interested in within this innovation. So we're definitely hoping to see a more positive lens from our Prime Minister coming towards this industry, but I think it's going to take the right policies put in front of his desk that help him understand the actual economic benefits that this industry brings, the jobs, the growth, the ability to support meeting a net zero standard through utilization of the technology. So,
and how much are we dependent on the central government of Canada in Ottawa versus the other provinces of Canada to make regulation?
So I would say, like, if we're looking at provincially leading the pack, it would be Alberta. So Alberta's taken a very strong position on this industry. We have the Premier, she's actually had multiple ministers that are mandated to support the file. A lot of digital asset miners are looking at coming into the ecosystem, so they've made it very clear, even traveled to events in the States that are put on by the Texas Blockchain Council. Alberta's open for business for this industry. Our Alberta Securities Commission regulators are considered one of the most friendly in Canada. Of course, they focus really strongly on consumer protection, but a lot of companies come in to engage with our regulators first. We have some of the most crypto-friendly banks through through ATB Financial. Of course, it's not guaranteed to get a bank account, but they are always willing to explore and see if you're within their risk tolerance. So we have friendly government, friendly regulators, friendlier banks. We'd love to see that taken all across Canada, but right now we haven't seen that coming from other jurisdictions as of yet.
All right. Well, Kolea, thank you for joining us and your insights.
Yeah, thank you so much for having me here.
All right, that was Canadian Blockchain Consortium Executive Director Kolea Carrington. Now, will Drake make an appearance at Consensus? You know, Toronto is the home of crypto tech and Drake, Ben. And folks on Myriad Markets are placing their bets on whether the king of the six will make.
Here's how I got my team to use Monday Sales CRM and actually like it. Let me start by saying it's so easy to use that I won them over right away. Onboarding was seamless, and now every little detail of our pipeline is in one place. Whether it's legal or sales, everyone can find the smallest details within a few seconds. From changing a status to sending an AI-generated mass email, everything is quick and simple. Then, my team saw how drag and drop.
So obviously, ladies and gentlemen, there. I think that's like a poll to show. I don't know why they're bringing up Drake, but I guess Drake has a lot of fans in Canada, and being from Canada, um, they just want to get the attention of the crowd. But the stagnation is not from my side. For some reason, is showing a poll of a consensus whether Drake is going to make an appearance. Personally, I don't really see the significance of it. Maybe Drake. I don't think Drake is into crypto, but maybe he is that I'm not aware of. But just a quick recap of what has been talked about so far, at least to the best of me gathering it. Um, they talked about the fact that new regulations are going to be coming in, and these regulations are going to be key, with the United States of America as a key player when it comes to this new regulation. And hence, we have the likes of Eric Trump, who is also part of the speakers for the consensus 2025. With that being said, they also made mention about ETFs and the fact that new networks or new cryptocurrencies ETFs are coming. But once again, it boils down to regulations and these networks adhering to the regulations as being set. They made mention of the fact that Canada have a much wider or broader tolerance for crypto because they automatically are aligning with their regulations as compared to the United States of America, which is being regulated by the SEC. So it's quite interesting. It's quite interesting. We'll see how things progress. I'm going to switch over to them. I don't know why their feed is acting this way, but we'll be here, and I'll be coming in to give some commentaries on what I think is actually going on. But so far, let me know in the comment section what you think about the consensus 2025. Is it off to a good start? Are they talking about issues and topics which are relevant to the crypto industry or do not? Which of them do you find, or whose presentation so far do you find very interesting? I know a lot of people are waiting for Dr. Nicholas Kokalis to come on and give his presentation, which is going to be on the 16th. But it's also important that we keep an up-to-date information on any other cryptocurrency that's going on. They also did mention about the fact that there is possibly going to be an American Bitcoin, which I'm yet to find more information regarding what that is all about. I mean, Bitcoin is Bitcoin. I didn't know we have an American Bitcoin, but we always learn each and every day. So yeah, we'll keep that in mind. With that being said, I'm gonna read out some few while we wait for their feedback to come in. I'm gonna read some few commentary that has been made here. This is from South African homesteader. Said, could Dr. Kokales be Satoshi Nakamoto? Well, that will be a big. That's going to be a big reveal if Dr. Nicholas Kokales turns out to be Satoshi Nakamoto. That's going to be a big blow to the entire world of cryptocurrency. It could go north or it could go south. If it can go positive or negative, positive being that that will mean that a lot of people are going to trek to Pi Network, seeing that the dream and the aspiration for which Bitcoin was made has actually been realized or been achieved in Pi Network, which is a real world utility of Pi coins, and now we can see it being used for so many other things, purchasing of items, etc. and etc. So other things to make notice of is also Alfredo also said something, said my friend didn't give his passphrase to anyone, uh, give passphrase to anyone. He was surprised and disappointed at the same time when he saw his recently moved coins to available balance got wiped out just like that. That is serious. Like I said, whatever be the case, someone must have had access to their account, and hence the reason for what we are seeing.
Times and will MoonPay President keep
Okay,
growth
it
to
seems
more than
we
all right,
are back.
join in
Yeah.
on the fun at Myriad
So
Markets.
let's go back
Meanwhile,
to
Coinbase
listen.
is the largest U.S. crypto exchange with over 100 million users worldwide. Its Canadian arm, Coinbase Canada, is registered as a restricted dealer with Canadian securities regulators, making it the largest international crypto exchange registered in Canada. And joining us now with more is Coinbase Canada CEO Lucas Matheson. Lucas, thank you so much for joining. So we just had a whole conversation on how Canada is addressing the crypto industry and innovating and such. So where is Coinbase Canada positioning itself, especially with news that we've just heard that Robinhood is acquiring WonderFi, and so there's competition coming in.
Yeah, Canada is actually a thriving crypto ecosystem. It's a third most crypto-aware country of all the international geos that we operate around in the world. And Canadians generally really understand the opportunity for crypto adoption. So Coinbase has been building a business here in Canada for the last couple of years. As you mentioned, we're registered as a restricted dealer under the CSA. We're pursuing our CRO registration to get our full dealer status. And our role here is to help expand the opportunity for Canadians to get access to digital assets. And we work very closely with regulators to provide more regulatory clarity in market and expand the types of products and services that Canadians can use. Today, we're actually launching our electronic fund transfer, which allows users to connect directly to their bank accounts and transfer more money in and out of their bank accounts. It's the most requested feature that we've had in our app over the last couple of years, and really excited to be able to service a more broad, diverse group of Canadians and higher net worth individuals that are looking to move more money in and out of Coinbase. So yeah, I'd say crypto is thriving in market right now.
There was also news that Coinbase had acquired Deribit for $2.9 billion to establish dominance in the derivatives market. Is that going to be a product available to Canadians? I know Coinbase Global had that deal going on, but will Canadians be open to that market?
Absolutely, we're really excited about the acquisition of Deribit. It positions Coinbase to be the number one, to have the most comprehensive suite of crypto derivatives in the world, and we're really keen to bring it to Canadian market. One of the opportunities for us as an industry in Canada is to work with our regulators to expand the opportunity, and this includes options, derivatives, leverage, and products like yield on USDC. And so we have a lot of opportunity in Canada to expand the types of products that we bring, that we can make available to Canadians. And that's really the opportunity for the industry over the next couple of years.
How do you see the recent election with Mark Carney coming in as Prime Minister? How will that change the conversation around policy on crypto?
Yeah, we're really excited to work with Mark Carney and his new administration. Yesterday, Minister Champagne was announced as our new finance minister, a key role in supporting crypto adoption in Canada, specifically around regulating stablecoins, which is a key theme for us in the industry. We're very keen to have our federal government recognize stablecoins as a payment instrument. Currently, we are defining in Canada under our securities regime, and the direction of travel all over the world is to treat stablecoins as money, define them as money through market structure bills, and to make sure that they can be fully utilized as they were intended. And so one of the opportunities that our industry has been working on over the last 2 years, specifically with our federal government, is regulating stablecoins at a federal prudential level so that we can integrate it into our Retail Payments Activity Act, our open banking, and allow Canadians to use stablecoins for everyday payments.
What is the state of stablecoin offerings at Coinbase? I mean, Tether is the largest stablecoin issuer by market cap, followed by USDC. Coinbase also has its own stablecoin. So how is that? How are those product offerings being offered on Coinbase right now?
Yeah, so yesterday actually we made an exciting announcement that Coinbase invested in StableCorp to help partner with StableCorp to bring QCAD to market. QCAD is a Canadian-denominated stablecoin that has been working over the last few years with regulators to bring QCAD to market, and we're really keen to bring a Canadian-denominated stablecoin into market. We need to make sure that Canadians have access to digital assets and be able to diversify and use stablecoins in market, and we're excited to have a Canadian-denominated stablecoin and hopeful that over the next year we can bring that to market successfully.
And how is Coinbase interacting, engaging with policymakers to influence crypto policy in Canada?
Yeah, one of the big initiatives in Canada right now is Stand with Crypto Canada. It's actually been a huge success. We've had a lot of people sign up to Stand with Crypto, and the idea with Stand with Crypto is that we gather advocates in Canada to help bridge the gap between our members of parliament and their understanding of the opportunity for us to embrace this technology and integrate it into our economy. And so Stand with Crypto is a really great opportunity to help us connect our constituents with their MPs. But more broadly, Coinbase is very active in working with our Bank of Canada, working with members of parliament, and working with policymakers and regulators to help define a clear path for regulation in Canada.
Apart from stablecoins, what other things would you like to see policy-wise?
Aside from stablecoins, the things that we're really keen is just helping expand the pie. So today, as an example in Canada, if you wanted to buy a digital asset that wasn't Bitcoin, ETH, Bitcoin Lite, or Bitcoin Cash, you were limited to $30,000 a year. And so we have quite a narrow scope of regulatory opportunity in Canada, and derivatives, leverage are two of the areas where I think we have a significant opportunity. Following on the back of our acquisition with Deribit, this is a natural extension of crypto solutions, and derivatives and options are an important part of an investment strategy and profile, and we're very keen to bring products like that into Canada to help Canadians.
I just want to follow up on your comment on Stand with Crypto. I mean, in the United States, Stand with Crypto, as well as other blockchain, crypto policy lobbyists and whatever, had a huge impact on the US elections. They went in there and they supported candidates on the congressional level as well, able to eliminate Sherrod Brown, someone who really hated Bitcoin and cryptocurrencies, was able to get an incumbent like him off, and someone who's more business friendly into his seat, more friendly to crypto as well. So do you see that impact happening in Canada? Will it become an election issue?
So we just finished an election in Canada, and our hope for Stand with Crypto is that we can educate our member of Parliament, our new cohort of elected officials in Canada. And one of the exciting things that we saw with Stand with Crypto in the US through the US administration was that we saw a Congress educate themselves on the opportunity to embrace crypto. And now we see 80% pro-crypto on both sides of the House, 90% in the Senate. And the goal with Stand with Crypto here is to educate and bridge the gap between some of the misunderstandings of crypto and the opportunity for us to build a national strategy in Canada to embrace this technology, to prioritize it at a federal level, and to put people in charge of coordinating across our government. And so our federal government has a pretty significant opportunity to embrace this technology and to prioritize it. And Stand with Crypto, I think, will help bridge that gap and connect constituents with their members of parliament to help them appreciate that Canadians care about crypto. Canadians are passionate about crypto. We have, as I mentioned, we're the third most crypto country of all the international geos that we operate in. We always say Ethereum was founded here, and Canadians have a sense of pride around the fact that we used to be leaders in crypto here in Canada. And we believe that we have an opportunity to embrace this technology and to empower Canadians to build on Web3. As you know, we have an incredible, diverse group of Canadians that are building in Web3. We have a very strong university system, strong computing science programs. Thousands of Canadians are building on-chain and in Web3, and it's important that we provide that regulatory clarity so that these businesses can help drive growth and economic growth in Canada.
All right, yes, seize the opportunity, seize the day. Lucas, thank you so much for joining us.
Thank you.
Thank you.
All right, that was Coinbase Canada CEO Lucas Matheson. We're going to take a quick break. Coming up, we've got the Tezos co-founder Arthur Brightman speaking with us next.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Berachain is a layer 1 blockchain focused on DeFi, innovating a unique proof of liquidity consensus that blends staking and liquidity provision. Its testnet launch in late 2024 drew significant developer interest, signaling strong ecosystem growth. Joining us now to discuss is Smokey Bera, co-founder of Berachain. Smokey, thank you so much for joining us. I'm so glad.
You're speechless.
I'm speechless. But tell me the anonymity for folks who may not be so familiar with crypto culture.
I imagine that a couple people were a little bit taken aback by this, so apologies in advance for any scares. I think the root of Berachain was very much in crypto native culture. We started this more than anything else as an NFT project for fun more than anything else. Like close to 4 years ago in the summer of 2021. And what spawned out of that was now a layer 1 blockchain that's been live for the last few months, millions of users, a couple billion in TVL sitting on the network, and a pretty active and raucous community. I think the anonymity came from a number of different angles. One was that as we were starting to build Berachain, that like summer 2021 timeframe, I think the regulatory climate was meaningfully less certain when it came to crypto as a whole. And alongside that, we saw that some of the best developers that we actually knew were not, I'd say, those who were crypto natives devs, if you will, but there were people who were spending their 9-to-5s or, like 3 hours a day working at a FANG, and then spending the rest of their time, I'd say innovating in the trenches in DeFi and consumer, in NFTs and social and everything in between, right? And we very much thought that by actually building ourselves as anonymous founders, we were enabling a lot of that ecosystem to actually form in a manner that gave those people a shot on net, right? Whether it was that they had their own family and they weren't really ready to take that leap as of yet, or whether it's simply were unsure about regulatory, or whether they wanted to dip their toes. I think that actually lowering the bounds for incoming new developers was something that worked very much in our favor, while also very much allowing us to play to a crypto native audience of those, tens, let's say hundreds of thousands of people that live their lives on chain. And that actually became a really good group of initial community members, sticky users, and folks who truly want to engage with interesting new primitives being built in an on-chain world.
Okay. And I love the Bera community. There's definitely so much vigor in the Beras, which is amazing. Do you think that with the regulatory clarity that is developing, especially in the United States now with the Trump administration, if that becomes more progressive, do you think people will be more open to being not anonymous?
Yeah, I think so to a point. That being said, I feel like every day we see different types of threats pop up. In that even in Toronto, we've had various CEOs of crypto exchanges get kidnapped. I think earlier this week we saw someone in France, CEO of a large company over there, have their family attacked. There does remain an increasing concern around security, which is like terrifying in a different sense, right? So I think I see both sides, truly. And I don't think we've ruled out any possibilities for ourselves in the future. On one hand, I imagine that we could see a bunch of pushback if people are like, oh no, they sold out, they're finally doxed and in the public. But at the same time, I think lots of people have met us at conferences, lots of people have seen us wandering around at events. Thankfully, I do not walk around with a bear mask on all the time. That might be both impractical and a bit defeating for the purpose.
And maybe hot as well.
You know what? It's not too bad over here. It's an outdoor panel in Singapore that really gets you.
I hear you on the concerns with the kidnapping. I mean, we do have people attending this conference who have been kidnapped for their Bitcoin and crypto and whatnot. But we also want to talk about Berachain. So, I mean, for a 10-year-old, explain to us what proof liquidity is, and why we need another layer 1 blockchain in this very crowded and competitive ecosystem right now.
A great question, a very fair one. I think that if we're trying to do like the ELI 5 version, if you will, the best way to think about it is a little bit like the App Store in a sense. And I think that many chains can use this analogy, but the real value here, the real differential, if you will, between a base app store, if you will, and a Berachain app store, is that the app store itself is actually helping to power and give incentives and rewards to its applications. As we see it, or if you look at a typical proof-of-stake chain, like Ethereum, Avalanche, Solana, whatever that might be, they have a carrying cost, right? The chain or the application, whatever you want to, the base layer or the operating system, if you will, has a cost to live. It has to give out emissions to validators, these nodes that secure the network. And normally they're paying for security, which is great. But at the same time, one has to note that security doesn't really do the job of growing an ecosystem by itself. So if you really want the App Store to flourish, and if you want to have lots of applications that people want to use, one could argue that the best use of those emissions or those costs or those rewards that have to go out should actually be towards the apps themselves. So if one is to look at Bearchain in a nutshell, the thesis is that the carrying cost of the chain or its emissions should go towards supporting applications and users of those applications, as opposed to people who are simply statically holding a native token or sitting idle, if you will. So in the classic blockchain context, it's taking inflation and it's pointing it into the app layer as opposed to out to the validator layer. And in that operating system context, it's like saying, by using Windows or Microsoft Office, you're actually getting rewarded for using Word and Excel and PowerPoint along the way.
Okay.
And why do we need another L1 blockchain, which is a very reasonable corollary there, is because right now there actually are 0 blockchains that exist in this manner, right? Where they're actually, I'd say, mechanistically designed to drive value to their application layer. On the other hand, that is really Bearchain's core purpose. It sits and it exists to effectively reduce the customer acquisition cost and accelerate, positive user behavior loops within the application layer itself. And if we were to believe that, a future of chains is dictated by breakout apps and things that one can actually do on-chain that you cannot quite as easily do off-chain or in the real world, if you will, then we almost think about this in a venture portfolio or Y Combinator-esque approach, right? If you say there's going to be 100+ applications building on this chain, Bearchain's role here and Bearchain's ability is to actually help accelerate each of these and give them a better shot on net by reducing their customer acquisition costs or user acquisition cost, increasing LTV. Then you hope for 3 or 4 unicorns out of that batch, and that can spawn the next Uniswap, the next pump fund, the next virtuals, the next whatever you want to call it, that has been a breakout in crypto. And that's sort of the thesis at a very high level.
Do I have the, Ethereum was born in Toronto.
Okay,
in
ladies and
Canada. Do I have it right
gentlemen.
that Bearchain was
So,
also a Canadian-made
just
project?
to
And what
say,
would you want to say to policymakers to
just to jump in and say a few,
this industry
I'll
thrive?
Yeah,
temporarily.
100%. I mean, I think we've
A
actually
lot of
seen
people are asking some
reasonably
questions, so
meaningful
hold on.
steps in the right direction from policymakers recently. Like even the OSC has recently
All right, so I've just lowered the volume a little bit just to address some few things.
My co-founders are born and raised in Toronto. We all went to school at Waterloo at different points in time.
So, regarding some of the stuff that they have been talking about, and I just want to address some few things. I noticed they are all going in one direction, or they have maybe slightly different views, but all that they're talking about has been addressed by the Pi network. Let's take, for example, what the CEO of Tezos came to say regarding real-world utility or usability of any cryptocurrency network. Now, if you look at Pi Network has been used in the purchasing of telecommunication network top-up credit cards or credits in Italy. Okay, now that's just one of it. Pi Network D apps do offer real-world usability where merchants make real purchases. So on that note, I'll say Pi Network covers that already. With regards to what Bearchain co-founder is saying here, with regards to nobody actually using the token to help, okay, using the token to actually help developers, that is also being addressed or has been addressed by the Pi network. And specifically with regards to what Pi network is actually doing right now, where Pi network has brought in the incentivization of or the introduction of its app network. So developers are able to earn money as a result of people utilizing Pi network, okay, or pioneers coming onto their D apps, developers D apps, to watch, engage, play, watch, use it for whichever activity that the app is offering or services that the app is offering. And then as a result of that, the pioneers get to watch an advertisement which earns the developers money. So with what they're saying, I know both what Bearchain and Tezos is talking about has been addressed by the Pi network, and in that case, and to me, I think it defeats the purpose, or Pi network covers that. So it will be interesting to see what Pi network actually comes to offer. Dr. Nicholas Kokalis, he's presenting it on the 16th. Okay, so I'm really liking how the whole thing is going. So we're gonna go back to it and we'll see where it goes on from there. So every now and then I'll come in. If you have any questions, just pop it on the comment section. If I can, I'm going to read it. If I can, I'm going to present it out for each and everybody to see.
Our next guest is a longtime fintech executive who's calling 2025 the year of the stablecoin, and he's leading that charge at Ripple. Jack McDonald, Ripple's Senior Vice McDonald, Ripple's Senior Vice President of Stablecoins, join us now. Jack, welcome to the show.
Thanks for having me.
Well, I got to start here, Jack. We have stablecoin legislation that we thought we were going to get in the United States. Now it's a little bit rocky. You called it the year of the stablecoin. Is it still going to be the year of the stablecoin?
Yeah, stablecoins are having a moment. It's a bit of a thing. I think politics are playing out, but the conversations we've been having, we have a full policy team in Washington, D.C. that keep their ear to the ground, and it certainly feels like stablecoin legislation is coming. Still working through some nuances, but my sense is it's going to come, and it's going to come sooner rather than later, which will be a huge unlock for the industry.
Is it becoming a bipartisan issue? So we're seeing the Democrats reportedly delay stablecoin legislation, concerned about ties with crypto and President Donald Trump, that he is unjustly enriching himself using his public office for personal enrichment. Is it becoming a partisan issue now?
Well, a lot of politics become partisan, and I'm not here to talk nuances of the bills as much as I think there's general direction of travel that both sides of the aisle want to have a more meaningful environment, a more constructive environment in the US for digital assets. And stablecoins, I think, represent really the lowest common denominator. It's really the least crypto that you can have. And so it's something, particularly for newcomers to the space, to really wrap their heads around because of how they work. And certainly and the whole premise of this legislation is to provide regulation and clarity around stablecoins. And so being dollar backed, being rated, I think is something that both sides of the aisle are getting behind.
I mean, there was talk on the Republican side that they were hoping to have stablecoin legislation by the summer. Trump has said that. Do you see that happening?
I'm optimistic, but I'm a half-full kind of person.
I was going to say, you're one of the only optimistic people I've heard from on that topic.
There's been talk that it's going to be part of a market structure bill. There's been talk that it's going to be on a standalone basis. My sense is that there's a lot of motivation and momentum behind it, and I don't want to throw a date out there, but my sense is we're going to have stablecoin legislation here fairly soon.
We talked to a lot of stablecoin issuers at CoinDesk, little platforms that offer stablecoins. For you, what is that killer use case for stablecoins? Does it have to do with remittances? Does it have to do with real-world assets? Does it have to do with providing infrastructure to the traditional financial institutions and rails? What's that killer use case for you?
Am I only allowed one answer?
Yes.
Or can I have two?
Okay, you can have two.
So clearly global payments, cross-border payments is right at the crux. I think most people believe that stablecoins are the killer app for cross-border payments. Ripple's had a front row seat in that business since our inception, and certainly a part of the origin story. And payments are range, remittances, treasury movements, charitable donations, payroll, paying of consultants and whatnot. We're really, really excited about capital markets as well. The recently announced acquisition of Hidden Road is a quantum leap forward, I think, in terms of our ability to lead the charge of bridging the divide between traditional finance and crypto Web3. Stablecoin is right at the crux of that. We'll be able to use a stablecoin as a piece of collateral to cross-margin assets between those two different industries. And so I think the next couple of years are really going to play out in meaningful ways about how capital markets are really reinvented by using stablecoins. So I'm really excited about that part.
Okay. Well, I mean, Tether is the largest issuer by market cap. And how do you see RLUSD competing and trying to grab a share with that? And do you see that dominance by Tether coming down below 50% in the coming years?
Well, you know, in many ways, hats off to Tether for starting this industry, right? I mean, they've created a meaningful business, Circle to follow them. The two of them dominate the space today. We're not entering the space because we think it's not going to grow and it's strictly going to be a market share gain. We think the space is going to grow meaningfully. So you talk about the addressable market, and whether it 5X's or 10X's, you know, from here over the next couple of years, we're going to be a leader in that space, and we're going to take our fair share. I think different stablecoins have different use cases that they're targeting. They also have different business models that they're using to approach. Our focus is on serving institutions. We want to do it in a regulatory compliant way, which is what all the Ripple businesses have done. It's always an enterprise focus. It's got regulatory compliance at the forefront. And so we're approaching the market going forward a little bit differently than some of our competitors. And we think there's meaningful upside for us. We're quite excited. The launch of RLUSD is ahead of plans. We've got some great partners coming on. And so we're excited about the future. We're excited about what we're going to do with Hidden Road.
All right, and before we let you go, what are you excited about for Consensus? This is our first day. It's the morning. A lot of events still to come. What are you looking forward to?
Well, it's just a great atmosphere here. Obviously, there's some positivity in the air with all the regulatory changes, the price of Bitcoin. I was talking to your next guest about Bitcoin over 100 has this mood-enhancing element to it overall. So I like the vibe here. I like the builders building, and it seems like the traditional institutions are also leaning in. So we've got a good mix of people here, and I'm excited about the next couple days and appreciate everything that the hosts have done to have us here.
I know you said that. I know that we said you have to go, but I want to talk about Bitcoin over 100,000 for just a second. We have a prediction market on Myriad Markets at Consensus 2025. People are putting bets against if Bitcoin will hit $110,000 while we're here. Maybe you're not allowed to make a price prediction, but what do you think? You think we could get there?
I'm not allowed to make a price prediction. I'm not allowed to make a price prediction.
Okay.
I think XRP will outperform. How's
Wait,
that? Yeah.
here's another one. Okay, we heard also earlier that for crypto, for Bitcoin to be considered a asset class that institutions really understand, it has to be 20 trillion. For the stablecoin market, where do you see that market cap hitting in the next 5 years?
Very interesting question. I don't think about it from a market cap perspective. I think stablecoins are taken very seriously today, which is part of your question. And I think regulators, and there are conversations going on right now around the world with different regulators. If stablecoins can be treated as good collateral, if it can be used as regulatory capital with the regulators, for example, that is a huge unlock from a capital market standpoint. And the logic behind having a stablecoin treated as good collateral or reg capital is because the underlying assets for some issuers like us have treasuries, cash, and government money market funds, and those assets are treated as good collateral. So if those assets are, and you just simply have a digital representation held in a bankruptcy remote account, held by a fiduciary, there's really no reason why they shouldn't be. And if you can pledge a stable-coin as collateral, the sky's the limit in terms of where this market can go.
Jack, thanks so much
Thanks
for
for
joining the show. Enjoy the rest of the conference. All right, that was Ripple's Senior Vice President of Stablecoins, Jack McDonald. We're going to take a quick break. We'll be right back. Thank you. U.S. President Donald Trump's second term in office has been a roller coaster ride for the markets, driving Bitcoin to an all-time high of $109,000 and plunging U.S. stocks to historic lows. Joining us now to discuss is Anthony Scaramucci, founder of Skybridge Capital. Anthony, welcome to the show.
Good to be here. Thank you, guys.
We were just talking about that massage you got this morning.
My back is my back better? I don't know. Does it look good from the angle? I don't know. I'm working on my posture, ladies.
Sitting up straight. I like it. Yeah.
Yeah, when you're vertically challenged like me, every little bit of posture helps.
You got to get ready for the crypto ring.
Yeah, by the way, that's a great idea. Getting massage. If you speak at a CoinDesk event, you get a massage.
You gotta see it to believe it, folks.
Trying to market for you people.
All right, Anthony, you famously lasted 11 days as the White House communications director. You've seen firsthand Trump in the office. You've campaigned with him. What has changed from his first term to his second term in terms of how he's approached the presidency?
I think the central thing that has changed is that he is more confident in himself with that job. I think and I think this would be true for anybody that's had the job. It's a job that George Bush, Bill Clinton that's had the job. It's a job that George Bush, Bill Clinton, they would all say for you that no job. Somebody like Gary or Steve Mnuchin was like, all right, we're not doing that, and threw it in the waste bag. And so
President Trump's involvement in
Right.
crypto projects and President Trump's involvement in
Right.
crypto projects and stablecoins. Curious to hear your thoughts.
Well, I think it's still going to get done. I'll make a prediction on your air that legislation gets passed before the August recess.
Oh, wow.
That's a bold prediction.
Yeah, it's aggressive, but I think it's necessary for everybody because if you step back, I don't think the Democrats want to deal with the political action committee that hosted lots of Democrats in 2024. And I don't think the Democrats have found an anti-crypto voter. There are pro-crypto and in some cases single-issue crypto voters, but there's very few anti-crypto voters. So I don't think the Democrats want to be on the wrong side of the stablecoin bill. Are they protesting right now because some of the things that President Trump is doing? I don't like it. I can understand why they don't like it. 2 or 3 days before you're getting re-inaugurated to the presidency, you're launching a meme coin. Let's just go over this quickly.
Yeah.
58 wallets, 10 million apiece. They make over $500 million. 794,000 people lose $1.1 billion on the coin. It's not right, guys. Okay,
Well,
and so they can justify it any way they want. But
Last
that's
night, the New
what's
York
going
Times
on.
released that article showing a company with ties to China has said that they are going to invest $300 million into Bitcoin and Trump's meme coin. And so this is raising questions about buying influence to the presidency in public office. Your thoughts?
Well, listen, if you buy enough Trump meme coin, you can have dinner with the president and get a tour of the White House. So to me, it's too conjoined. I think you're over the line of what is right. Remember, there's the spirit of the law, and then there's the letter of the law. Even if he's inside the letter of the law, he's outside of what the spirit of the law is, and I think I think it hurts the country. I think it makes us look bad. So he can defend it any way he wants. It's not right. By the way, don't go by me. Ask Laura Loomer and ask people like Ben Shapiro. You know, they're Trump supporters. I'm no longer a Trump supporter. They are dead set against some of the stuff that he's doing, which is in a direct violation of the emoluments clause in the U.S. Constitution.
Is this grounds for impeachment?
Grounds for impeachment. I'm not sure. I mean, I hope the country doesn't go down that road again. I mean, the only way if Donald Trump was going to get impeached, it would have to be something even more egregious than what we're talking about right now. But you would have to get the Republicans on side with the Democrats. I don't think impeaching him again and having a partisan vote in the House and then a partisan vote in the Senate is the answer to America's dysfunctionality. I wouldn't recommend it.
I want to turn now to Skybridge Capital. Have you adjusted any of your investment strategies based on Trump's more crypto-friendly policies?
No, not really. You know, we sort of same as we've always been. You know, I was on this desk in Davos 3 years ago. We're getting demolished because, you know, we were tied to Sam Bankman-Fried and Bitcoin was at 16,000. Bitcoin, I think, is what, ladies? Where is it now? 103.
Over 100,000 for
yeah,
sure.
So, you know, listen, I mean, we stayed long every one of those positions, and so we're 5-1 from that bottom. I'm not allowed to talk about our performance, but I'll just say this: we've got 35% of our business is tied to digital assets, and so if you just take a look at what digital assets have done over the last 2 years, we've done very well. And but listen, I've been humbled by markets and I've been humbled by life. So I'm not here bragging. I'm just saying we're doing well right now.
Yeah. Buy the ticket, take the ride. It's going to be a roller coaster.
Exactly.
You've got the
I don't even know if I reached the height requirement for the roller coaster that my life has been, but I'm doing the best I can.
I also want to ask you about the tariffs because that has been a roller coaster ride for the crypto markets, for the stock markets. What do you make of the game that is going down?
It's misguided policy. President Trump's wanted to do that for 40 years. He's got a group of willing sycophants that are willing to implement the policy alongside of him. It doesn't work. The market and the bond market, equity market, bond market, told you that those policies don't work. And so he had to walk back those policies. And so they're even the tariffs right now.
But was that his plan all along?
I'm sorry?
Was that his plan all along?
No, I mean, come on, you know that was it.
Incredibly high tariffs.
He's playing
Anthony, most people who sit at this desk say that was his plan all along.
That was his plan all along. Okay, he's playing 19G chess, okay? He's not, okay? He's sitting in the corner eating the chess pieces. He's not playing 19G chess, okay? And so, you know, the plan is not the right plan for America, and it's not the right plan for the integrated global economy. If you want to make the trading system fairer, there were a lot of different ways to go about it that would have been better for the country.
All right,
you didn't need this level of volatility and chaos.
I guess that's true. I have a mental image now of those chess pieces being eaten in the corner.
They look like McDonald's French fries, but they're like shaped in chess pieces, just to give you the full visual.
Just before we let you go, Anthony, I know you have to go in just a minute, but you keep coming back to Consensus. You keep sitting at this desk with us. What is it that keeps bringing you back to Consensus?
You guys. Look, listen, I'm a long-time crypto investor now. You know, this is my 6th year in the business. Bought I bought my first Bitcoin in October of 2020. We own a lot of Solana. We own a lot of Avalanche and some other assets, Casper, et cetera. And so hopefully you'll continue to invite. Tell you what, if you continue to invite me back, I'll keep coming back.
Fair. I think that's a deal. And we'll have a massage chair for you ready.
Thank you. Yeah, that was great. Big shout out to the massage team here at Consensus.
Anthony, thanks very much.
Good to be on with you guys.
Always a pleasure.
That was founder Anthony Scaramucci.
Okay, so ladies and gentlemen, as you rightfully heard, yeah, he makes some very straight to the facts about crypto, pointing out key things which he doesn't agree with Trump's administration, and I mean some of the moves are clearly influencing some people that if you buy Trump coins, you get to have dinner with the president. It's a bit of a long stretch, but it is what it is. This is Trump. Come on. Like him, hate him, whichever. He does what he has to do. Now, so also just to let people know, if you're tuning in for the first time, please hit that like, subscribe button. You're welcome to Hubs Global. Today we're doing a commentary on the Consensus 2025, and we're going to be talking about other issues too. We're going to be making sure that we're bringing you up-to-date information and making sure we're bringing you Dr. Nicholas Kokale's talk, which is coming on the 16th. Okay. Now the program that you're watching is being sponsored or hosted by CoinDex, okay, and sponsored by MoonPay, which is a crypto payments platform or system. This is a Consensus 2025. It's which brings about all tech giants talking about cryptocurrency and the way forward. Now, fortunately, Dr. Nicholas Kokales, who is the founder and leader or technology leader of Pi Network, is going to be speaking on this conference or in this conference on the 16th of May, which is in 2 days' time. The conference runs from the 14th, which is today, all the way to the 16th. And Dr. Nicholas Kokales is going to talk about. So far, all that they mostly touched on and said about Pi Network literally covers everything. Real world utility, making sure that developers are getting their money's worth.
Welcome
All
back
these
to
have
Coindesk
been
Live.
so they're
2025
back. We're
brought to you
gonna
by
listen,
MoonPay, the global
and
leader in
then we'll
crypto
keep going
payments.
on
MoonPay
with
recently
this.
made 2 historic 9-figure
Enjoy.
acquisitions in iron and helio. Building on its vision for the future of payments, I'm Jen Sanasi, here with my co-host for about the next hour, Andy Bear. Andy.
Hey Jen, we're at Consensus.
We are at Consensus. Andy and I do this thing where we just travel around the world and talk to each other. It's my favorite thing to do.
But we're in your backyard now.
We are in my backyard. I am a Toronto native, and so I love that we've brought Consensus here to Toronto, here to Canada. Talk to me a little bit about you coming here. I know you were telling me you used to travel to Canada a lot when you worked in traditional finance. Talk to me about the significance of Consensus being here.
I think it's always been a big scene for the pension community. The Canadian pensions have always done advanced strategies using a lot of derivatives and a lot of global allocation. So it always made sense to come up here. And it's easier to get here from New York than Boston, and you just fly, hop on a Porter's flight, land in Billy Bishop, and you're right there. So it was wise to have Consensus here in springtime, maybe not in February. That would have been a different experience.
That would have been a completely different experience.
Hong Kong in February, and then nice place in the spring. So always a delight to be here.
I don't think we would have had 15,000 attendees in February in Toronto, and so I'm happy that it's happening here in May.
Yes, that's right.
Yeah.
So and looking forward, I guess we've announced, so next year we've set some dates out. We'll get those later for Hong Kong in 2026 and then down in Miami. So
yeah, next year we're going to be in Hong Kong, we're going to be in Miami, no cold weather for us, but we're going to keep I guess the maturity and seriousness of Consensus going, Andy. Every time I meet you at Consensus, it feels more serious, it feels more mature. Talk to me about the types of conversations you've been having at the events of the last few days.
A lot of it has been about, I guess, moving crypto from this trading asset class to an investment asset class. To us, as an index company, that means putting portfolios together that people can hang on to for 10 years. And not have to worry about picking individual names. So we just did a panel with Anthony, who was just on, and with Jono from Wisdom Tree, who's going to be on with us in a few minutes, and with Pascal from 3IQ about, what would you buy now that you could put in a drawer for 10 years, confident that you're going to end up with cycle survivors on the other end. So we like CoinDesk 20 doing that, and we feel a lot of progress in that direction, certainly since we were in Austin last year.
What did they say? What was their answer?
I think that they've all commented that in the last couple of years, there hasn't been as much acceleration of progress as there has been in the last couple of months. We're catching up with Europe, which is sometimes an unusual feeling when it comes to technology and adoption, especially for investments. So we are catching up. a lot of legislation ahead. We have the stablecoin bills that we're trying to muscle through. Then we have more structural legislation around crypto, more ETF approvals, in-kind subscriptions and redemptions, laws around permitting staking for proof-of-stake tokens, which Canada has, again, done before the United States. So there's a lot of near-term stuff. I think long-term, we want, I think maybe it was Anthony who said, Wall Street's just a big distribution machine, and they need simple, understandable things to distribute, and I think ultimately that's where we want to get.
That's interesting. I know last year in Hong Kong, there was a little bit of an event for institutional players that happened before the conference. That happened this year?
It did, and you know, the funny thing about Asia over the last couple of years, a lot of it was about RWA, which to old-timers means risk-weighted assets. Why are you talking about risk-weighted assets? Of course, in this generation, it means real-world assets. Tokenization has now landed here, right? And you have great products by WisdomTree and by Fidelity and Franklin Templeton, and they're getting used, right? They're being used to enhance collateral. They're being used to keep sideline money still earning. So those are super exciting. Of course, stablecoins now up to about $250 billion in TVL. That's super exciting too. Millions of use cases there. All of these things need to sit on blockchains. So people, you know, Ethereum is up, what, 35, 40% in the last week since the Petra upgrade. So Ethereum's not going anywhere. Solana's remains strong and has a lot of new products. So it's a really exciting time up near the top of the quality curve. Once you get down into the other stuff, then, you know, buyer beware.
Yeah, we don't need to get down there. You know, both of our last two guests, Anthony and Jack, said that they think that we will get stablecoin legislation before summer recess. Curious to hear your thoughts there, Andy. And the reason I'm asking you is because most people after this last vote are saying kind of iffy now as to whether that will happen.
We would love to not care. We would love to be able to be patient. But I think that the idea that we need legislative momentum, right? Last year we had a lot of Bitcoin adoption momentum.
Yep.
We need to have legislative momentum here, get the naysayers out of the way, get stuff done now to provide a platform on which more legislation can be passed. In the meantime, when it comes to the kind of stuff we're doing, we hope to be as legislation neutral as possible and just get better products in the hands of distributors that make sense, easy to understand, that can get them out into investors' hands.
All right, Andy, you and I are going to be talking all about markets, so it only makes sense to take a look at what the markets are doing. Let's take a look at the price of Bitcoin before we get into our interviews. $103,412 right now. Andy, I don't know if you know, but we have a prediction market going on in Myriad Markets. Will Bitcoin hit $110,000 during consensus? What, I know you're not a betting guy, but what do you think? I mean, we're looking pretty good.
Bitcoin shape-shifted from a tariff tantrum mooring, which it did a great job, to an all-time high seeker in the last 2 weeks. So never bet against Bitcoin upside. That's what I got to say.
Never bet against Bitcoin. All right, before we get to our next guest, let's take a look at the price of Ether quickly. 2,588 right now.
Sitting at 1,600 for so long. What's going on with Ether? The thing that had no steering wheel, no rudder, all of a sudden back in the game after the Petra upgrade last week, although it's hard to see if that was really the catalyst. And now we're back. But look, again, $250 billion in stablecoins.
Yep.
A lot of tokenized stuff. All of that has to sit on blockchains. Ethereum is kind of the gold standard for security. So even if things are settled, even if they're not executed on Ethereum, that still counts. So
all right.
Still matters.
We'll keep an eye on those prices. Our next guest has been leading PayPal's move into digital assets, including the launch of the PYUSD stablecoin. PayPal's Senior Vice President of Digital Currencies, Jose Fernandez de Pont, joins us now. Hello again.
Hello, good to see you. Good to be here.
Yeah, good to have you here. It's been a real stablecoin theme this morning, I have to say, and I've asked everyone, including Andy, about that stablecoin legislation. And so I want to hear from you. Do you think we're going to get stablecoin legislation before August recess in the United States?
Save my job for me, please.
How are you guys thinking about
That regulation
about tokenization beyond treasuries?
Well, we've done equities.
You know what I love about PiUSD is the experience of acquiring it, right? Because we're already in PayPal, people are used to it, and suddenly there's this new kind of module, right? And I think it gives people reason to just spend more time in the space.
So we're launching
right? And to investigate
in
it more, make
July
it more
our
of a
global
home
markets
base.
platform.
How do you think
which
about the user
wraps
experience there
really
and
any
making it
public
a place where
security that
people
you
want to
can
hang
buy
out?
it.
We have sleepless nights about user experience. We care so much about it. What we are trying to do in the end, we're trying to do three things. We are very aware that we have a very large problem.
Guys, I think his microphone is very low, or it's not been turned up.
Include some wisdom tree
So
funds.
hopefully they notice that and turn it up.
First, to make PayPal and Venmo the best mainstream crypto wallets. It's never going to be a crypto-specific wallet. It's never going to have
There we go.
You know, it's a secured tracker
certificate. But we want to be that gateway product that gets people into crypto. So we started supporting 4 tokens. We added Sol and Link recently. We will continue to add things that with that experience in mind. And then we're trying to get, for stablecoins to thrive, we need that to be not only available in institutional markets and in capital markets, we need to have hundreds of millions of people carrying a stablecoin in their wallets. And that's what we're trying to do. Not only, and everything is part of that user experience. We recently announced that we're going to have be providing rewards for people holding stablecoin in PayPal and Venmo. That's also part of the user experience, is giving people a reason to hold and to use it and to pay with it.
I think that's critical, right? Because I have a PayPal balance just generally, right? Because you kind of just do, you want it around. Getting rewards on it is important. If I'm actually going to send money in and have that expressed in PiUSD, having rewards is critical. You don't want people to buy PiUSD and then exit the platform and not be there anymore, right? You want them to stick around. Hey, while I'm here, I might as well buy some Solana and sit on that for a while.
And the way that you get people to use it is counterintuitive. But to have PUSD stay in the system and circulate, you need to make it really, really easy for people to get it out. Because if people are concerned that they're going to be frozen into
Did he say PiUSD?
they will not be using it. They say, hey, the moment that you want to take it out and go back to your bank account, you can do it. I mean, that conduit between...
Did I just hear him say PiUSD?
For us. The analogy
As
that
in
we keep using
PI?
is SMS, right? You were talking about
Oh
your PayPal
my
balance.
days.
The way
Hold
we
on a
think
sec.
about PUSD is tokenized PayPal balance. And the advantage is that you can send it to people who don't have PayPal balance. I'm old enough to remember when you could only do SMS with your people who were in your own carrier. And we look back at that and say, that was insane. That was a Stone Age. Same thing. You should be able to send value, stable coins, ours and others, to people who are using a different wallet.
Right.
Unless he's talking about
on the digital asset space, we get 2 questions from people. They want us to support more tokens. We get 2 requests. It's, hey, make our money work harder for us. Rewards is going to be a part of that, but also we're doing a lot of stuff in the traditional payments space. And then we want more tokens. We like the experience. We understand that you're not going to be the long tail of crypto. But
ladies and gentlemen, Pi Network.
Probably a little bit south of 80% of crypto market cap. We will continue to go there. And more, what you're going to see is
I heard PiUSD.
the place where I think we can help the most.
I did hear that, PiUSD.
Stable coins into core payment use cases.
Am I the only one who heard him say PiUSD?
Buy a checkout. You can use it in the remittances business. And we have already announced that we're going to be doing that for bill pay. So merchants can hold a stable coin and they will be able to pay their bills with the PayPal bill payment platform that. So we believe that the uniqueness of our stable coin is actually the merchant and consumer platform, and we really want to drive payment use cases.
Once again,
we want the stable coin to be available in crypto markets. That's where a lot of the volume is, and volume drives liquidity. That's why our recent partnership with Coinbase is so important. And I do think that institutional investors want more options. They want that ability to do more than 1 or 2 stable.
Pi Network
Jose,
addresses
it's such a
all
pleasure
these
speaking
ones.
to you here at the desk. We have to wrap now, but we look forward to seeing you around the conference.
Thank you
This
so
is
much. Thank you
interesting.
for having me.
I'll come and have
That was
a bit more
PayPal
talk
Senior
about
Vice
it.
President of Digital Currencies, Jose
PayPal.
Fernandez de Paz.
All right, Pi Network to the moon. So, ladies and gentlemen, I don't even have to say much. You heard it himself. The vice president of PayPal. I heard PiUSD. Unless I don't know what you heard, but I heard PiUSD. Now that could be referencing PayPal stable or a hint. Well, I'll let you do the referencing and reading into the various meanings of what it means, but I heard clearly he said Pi USD. Well. Canada, yep, we are here. Might not be there physically, but we are there. So, ladies and gentlemen, you heard what he said. PayPal's vice president came to make a clear statement. I heard Pi USD. Now, if he's referencing PayPal tokenization or using a crypto-based, more stable coin, fine. However, he also made mention of the fact that a lot of questions that they do get is, are they going to accept more stable coins or more crypto networks or coins? If they are in the future or in the coming soon, I'm pretty sure Pi Network is going to be one of it there. Let's not forget, today, Pi Network is making a major announcement on its platform, and we are going to be here for it. Nobody knows what's going to be
We're
said,
continuing the
but
conversation
we'll see.
at the
We'll find
crossroads
out.
of TradFi
Let's
and
keep
DeFi.
it
Ondo
listening.
Finance made headlines this year for tokenizing real-world assets like U.S. Treasuries and offering yield-bearing products on chain, pushing the boundaries of what's possible. Ondo Finance's CEO Nathan Allman joins the show now. Nathan, welcome.
Thank you so much for having me. It's great to be here.
I know the last time the three of us were together was
at
in
your
New
Ondo
York
Summit.
City at the
That's
Ondo
right.
Summit.
Absolutely. It was a great time.
I know that this morning you have some news to announce, so I'm going to hand the mic over to you. Take it away.
Great. Yeah, we're very excited to announce that we completed a transaction where an investor using a tokenized deposit on JP Morgan's permissioned blockchain ledger was able to subscribe atomically to a tokenized treasuries product, OUSG, on Ondo Chain, on the first real testnet transaction for Ondo Chain. And so this is the first time ever that you can go 24/7, 365 from a tokenized bank deposit to a tokenized treasury. And it really starts to break down the barriers between the innovation that's been happening in the public blockchain ecosystem with what the banks like JP Morgan have been doing for a long time in the space.
So as a test trade, I'm sure there were a lot of engineers kind of, holding their knuckles tight and product people and everything like that. Ultimately, we want this to be a button push, right? So
Yes.
the whole thing about your value proposition is interoperability. Here's a great demonstration of it. This was a first shot. How soon can this grow into something that people do without even really thinking about it too much?
Yeah, we certainly expect this will be the first of many. I mean, the transaction itself was done in real time, but certainly there was a lot of hand-holding and prep work to
that's right.
get up to that point. But yeah, I mean, this is moving into production, and the Ondo Chain itself is gearing up for mainnet launch, and that's in the not too distant horizon is what I'll say for now.
Nathan, lay that out for our audience even more. What does this successful transaction mean for the future of payments? What future does this enable?
Yeah. Look, I mean, I think it's important to take a step back and observe that for many years, I mean, from 2015 until now, there's been almost entirely siloed efforts where the banks have been focused on using blockchain to drive cost savings and efficiency gains. JP Morgan in particular is very famous for their intraday repo facility where banks are able to move cash balances between each other 24/7, very quickly. And then in parallel, we and others in the public blockchain world have been focused on using tokenization to expand accessibility to things like the dollar globally. I mean, that's where we look at stablecoins, $200 billion plus circulating today, several billion dollars in tokenized treasuries starting to, share some of that yield with the holders. But those efforts have been totally siloed until now. And it's very recent that institutions have started to look at the public blockchain ecosystem as an opportunity to diversify their investor base and really seeing the distribution angle. And so I think these benefits are going to start to combine, the savings and efficiency gains that the institutions have been working on with the accessibility, that we and others have been working on. And, ultimately, cash comes in so many different forms today. Bank deposits, money market funds, short-term treasuries. They're all on sort of different settlement rails, SWIFT, securities settlement at the DTC, and so on. And I think through tokenization and the ability, leveraging things like Chainlink to connect different blockchain ledgers and provide for interoperability is going to really break down those barriers, and it's all just going to kind of look the same on the back end.
So I've got two questions about Ondo Chain. I hope we have time.
Yeah, we do. Andy's going to get the last two in.
Let's get the last two in. In the end state, right? How present is the Ondo Chain function going to be in a transaction? Is it something that's entirely, is it a front of house?
No, it's very much behind the scenes,
right.
As I think most blockchains will be. I mean, I think most investors will hold certainly public securities that ultimately settle on blockchain rails, but that won't be known to them. Just like investors aren't aware of all the clearing and settlement mechanisms that take place at the NSCC and the DTC today. So, I mean, Ondo Chain in particular also helps to facilitate settlement between different permissioned and public blockchain ledgers, with the help of Chainlink and other interoperability platforms. But yeah, it's definitely something that the protocol developers will be aware of, maybe the asset issuers to some degree, but not the end investors.
So that leads to the second question, which is, people who are looking to place their bets on different blockchains for saying, what's going to grow? Like, where do I want to actually put my money and let it sit? How do you convey to them what your growth prospect looks like, what the value is, how Ondo Chain kind of fits in? They're going to be seeing a ticker, they're going to be seeing a price. People may be tempted to buy it and stick it in their portfolios.
How do we convey to asset issuers?
To potential investors or to potential buyers of the tokens?
Of the tokenized treasuries products?
Or of just the Ondo Chain, presumably, the Ondo Chain token itself.
Sure. Yeah, look, I mean, I think we're still very focused on tokenized treasuries, and I think the market size there, at least is floored at the stablecoin market size of a couple $100 billion, and I think we've really barely started to scratch away at that. So I think in the next, year or two, tokenized treasuries will be a much larger percentage of that, and then, sky's the limit from there. I mean, certainly there's $5+ trillion in, money market funds in the U.S. So I think we'll see them come on chain very rapidly.
Fantastic.
Nathan, we're going to have to leave it there. It was such a pleasure talking to you again here at the desk, and we'll see you around the conference.
Great. Thank you so much.
Thanks, Nathan.
That was Ondo Finance CEO Nathan Allman.
You have to make a more clarity on that question. A listing of, you mean Pi coins?
Welcome back to CoinDesk Live from Consensus
Pi network
2025, brought to you by MoonPay, the
on a
global
major
leader in
reputable
crypto payments.
central
I'm
or
Jen
something?
Shanasi, here with my co-host, Andy Bear. GSR is one of the earliest crypto trading firms, starting as a market maker in 2013. It has backed builders,
So if you're referring to Pi network, the potential is there,
GSR Chief Investment
and
Officer John
it's one thing that we are
Laughlin.
looking
This
forward
special
to.
edition
Probably
joining
Binance
now.
might
Hello, John.
the listing
All
might
right,
come
and we got to
through
start with a little bit of a
Binance.
trendsetter. We're
So
here at Consensus
it's
Crypto Live. We've been talking
yeah,
so much
definitely
about
a
the markets and what's
possibility.
going on.
All right,
When it comes
so
to
let's go back
institutions, but
to
what have you been up to at Consensus? What have you been enjoying?
it.
Yeah, just walking around and meeting people, connecting with a lot of people that I know, but it's just a great venue for gathering.
Great to see people IRL. I know so often we are stuck to our phones. We talk.
Behave in equities and certainly is absent of things that institutions have to do to manage risk. At what point do those two worlds collide, right? Because they're both kind of developed options markets. Where do you see them starting to cross streams?
Yeah, so I did spend 20 years trading options and running derivatives portfolios, looking for mispricings in equities, FX, credit, and rates. And I think that the main thing that I don't see, I guess there's several things I don't see in crypto yet. There is some call overwriting, but it's not nearly as dominant in crypto markets as it is in traditional finance markets. And I think part of that is just the markets really rewarded people for kind of staying long the upside wing. And they believe that it'll continue. So we don't see that as much in crypto, but maybe as more traditional and institutional players from, TradFi allocators get involved in crypto, they might kind of bring some of those same, thought processes and behavior patterns. I think the other thing we see a lot more of in traditional finance markets is index, right? Like within credit, like the options are primarily on the index, within the S&P 500. Really a lot of the traditional asset classes are kind of very focused on index vol first, and we haven't seen that as much. Obviously, the CoinDesk and Andy, you're progressing on your CoinDesk CD20 index and options on that, and we have seen some trades. We did, I think, the first trade in that. So I would say those are two themes from that we might see develop here.
I hope you're right. I mean, index options as a risk management tool, or as you say, they're primary. But even a year ago at Consensus last year, we didn't have Bitcoin ETF options yet.
Mm-hmm.
Now there's a lot in strategy options trade a lot. They're converts. We'd love to see index options in the United States someday. On the other hand, Coinbase goes and buys Deribit, and that's a scale-up maneuver. Do you see the two, I guess, the on-chain option market and the traditional option markets continue in parallel, or does one start to dominate? We're still so early in terrestrial market derivatives trading. So how's that horse race look to you over time?
Yeah, I think there's different market participants, right? There's hedge funds and traditional institutional allocators. If they're doing anything in crypto at all, it's going to be kind of on the CME or the IBIT options. Crypto native players tend to prefer Deribit. There's also Paradigm, which allows you to get kind of larger block trades done and multi-leg option structures. In terms of those merging, I think I might say there's probably a prerequisite for kind of more clear regulatory guidance, or maybe even legislation from Congress before you really see the CME and Deribit kind of merge into the kind of same thing. I think right now you can trade on either. There's good liquidity on both. Arbitrage in between them is something that can be done, but it requires a lot of focus and high-speed automation. It's more of a market-making game. So as an end user, I don't think you're getting a significantly different or worse price in one venue or the other, and just pick one.
John, we gotta leave it there. I think we could talk about this forever, but unfortunately we are all out of time. Thank you so much for joining us at the desk. We'll see you around the conference.
All right, thank you.
That was GSR Chief Investment Officer John Laughlin. Let's now head over to one of the stages at Consensus. You're watching CoinDesk Live.
actually sort of my spiciest take. We're on a yield-bearing stables panel here, and I think that whether the yield is endogenous, internal to the stablecoin, or you get the yield by parking your money in an institution may not matter as much as people think it does today. I mean, I would love to have more flexibility for entrepreneurs to build the products that people, businesses want to use. But ultimately, if you look at the verbs, the actions people take with stablecoins, it's they'll spend them, they'll send them to someone else, they'll save them, and maybe they earn with them. And for spend and send, it doesn't really matter if it's yield bearing, because it's a very fleeting moment. If the transactions now are less than 1 second, they cost less than 1 cent, and so we don't necessarily need to have yield for that really atomic unit of time. Yeah. But then when you're saving them, well, look, you're not spending them. You might feel comfortable parking them somewhere, and so we're starting to see obviously this great development in yield-bearing stablecoins, and we want to see yield-bearing stablecoins because they're going to be super useful for treasury management and collateral and all these other things. Yeah. But for a lot of users and a lot of use cases, you might feel comfortable leaving a stable with, I'll just say because it was a recent announcement from PayPal, leaving it in your Venmo or your PayPal account or some institutional version of that, where you can earn yield that's passed through from the institution that you're storing your stables with. So I just want to point out, Lee, there are other ways to construct this product that might mean that the two assets look a lot more fungible and they solve the same use cases, even though the yield isn't actually in the stablecoin.
And just to add to that quickly, I mean, you see that with USDC and Coinbase, right? If you're leaving your USDC, depending on, again, regulation and what's allowed in your particular environment, but it's just not directly through the token, but they're paying you back on the back end for distribution effectively. So I fully agree with you.
Yeah.
Sam, I want to go back to that actually, because I think it's interesting. Do you think it's just like, so crypto historically has risen in like a zero interest rate environment, right? Yeah. Do you think that it's like the marginal opportunity cost that is now sort of, investors are now faced with a marginal opportunity cost for keeping something in a stable coin that isn't giving them 5% interest that they could find in a bank account, right? So do you think that that is what's fueling the rise of the yield part of the stablecoin conversation, or do you think there's some other use case specific thing that's driving that demand?
Yeah, look, so we've had the term yield in crypto for a long time. We've seen these frankly ludicrous yield numbers in the industry. People offering 18, 20% and then saying risk-free. That's nonsense. We know what the risk-free rate is. It's something like 5% or whatever the treasury rate is. That's sort of like a classic economics term. And if the risk-free rate is going to be 5%, then people who are storing a lot of cash because they want to use it for investing, or they want to just save it in that format, or whatever their other reason for holding cash is, yeah, they probably should be receiving the 5%, and they're going to be a lot more motivated when it's 5% rather than 1%. But that said, I think that the current rise in stablecoin adoption, it's really, it's become uncorrelated from speculative use cases of crypto, where we're seeing stablecoin volumes and stablecoin transactions continue to grow, even though speculation is down/flat. And to me, that means that people are not, and look, most of that growth, as we mentioned, is in non-yield bearing, fiat reserve stablecoins. So for me, that actually points to the current use case that's driving the market is probably in more standard send and spend use cases, as opposed, or maybe composing with DeFi, but the point is the yield stuff has not yet been what's actually driving the market, although I'm excited for the use cases that use yield-bearing stablecoins in the future.
I do want to go back to the ghost of yield past, right? I mean,
And that's how you use CRMs. Questions?
Or you can just move to Monday CRM.
see like real yields come into the conversation in a different way.
Yeah, sus is the investing term for. Yeah, okay, fine. That's why I split these two different types of yield-bearing stablecoins apart at the beginning. There's this wrapped treasury asset that I think really mimics the risk-free that I think really mimics the risk-free rate. And then there's these dollar shares of hedge funds that are running some sort of strategy that if you're going to participate in it, you should probably diligence and understand. And one of those, I think, is the one that's wrapping a treasury, is a reasonable place to park your treasury if you're an enterprise, or to save your money, or maybe to use as collateral for other trades. The other should be taken as a product that where you're looking to get yield based on some strategy. And so that's sort of the simple way of looking at it. And just to tie it back to your question, like, are we haunted by past stories? I think that the cleaner version of these, the one where we're wrapping a treasury, probably shouldn't be. It's a really straightforward product. And the other, I think they're going to have to make a case for the fact that they can do the yields they're promising in a safe and transparent way.
I think, though, this kind of gets to the regulatory point, right? Which is, for the most part, these treasury-wrapped stablecoins, these yield-bearing stablecoins are securities. And so as long as they're deemed securities by regulation, you're going to be very limited in the use cases that you can use them in, right? You can't use them in DeFi. You can't really use them to make a payment. You can't send them off platform into emerging markets and different things. And so I think we really need, if you're going to truly have yield-bearing stablecoins at scale, the use cases have to expand. In order for the use cases to expand, you have to have regulatory clarity. And until we get that, I think it's going to be challenging. As you highlighted, Zach, I think yield-bearing stablecoins are 2% of the market cap today, 2.5%. And I think that's what's really preventing them from unlocking, is the fact that there really isn't a good way to earn yield and use it. So if you're in a developed world, why not just hold your funds in a money market fund in your brokerage account, right? So I think that's the unlock that we need to see.
Yeah, thanks for bringing us back to the regulatory pivot. I appreciate that. You did mention, people on the sidelines, right? Bank of America, others saying, hey, we need a little bit of clarity here out of Washington. Joe, I'm going to put you on the spot with this question. Do you feel like you have the clarity that you need as a state entity to go ahead and issue a token of this nature?
Well, we are a state, we are a sovereign, and even though we are a sovereign, we still have to look at what the rails are for us to launch not only a stable token, but also a yield-bearing stable token. We've been looking at both and also working with legal counsel. We've looked at the OCC regs, Articles 8, 9, 10, and 12. We've been looking at MiCA, which is the European regulatory framework, and we're still waiting for the Genius Act to formalize. We see what Canada has done here, and they've identified these to be securities, and we're trying to, pool all of that information together to build something that is suitable to the marketplace, that won't trip us up when we're, go out to market. Getting back to the yield-bearing tokens, we have been analyzing all the yield-bearing tokens that exist out in the marketplace, and I think over time, in order for this segment to grow further, there's going to have to be an understanding of the risk parameters that generate a yield that's anything over a treasury. So if it's between 20 and 30%, there's got to be risk parameters and a framework to understand what's going on, and you can disseminate that to the investing public so they can make better decisions about their investments or the transactions of monies.
Got it. All right, we have a few minutes left. We had a semi-spicy take already, so now we're going to move to the Galaxy Brain take section of the conversation. What do these things enable? What use cases are we going to look forward to in the 2 to 3 years that are unlocked by this concept, maybe of the endogenous stablecoin that bears yield in a crypto native?
Yeah, sure. So actually, I think that Ben, you made a point. Like, you're in a sophisticated market like the U.S. Why not put your money in a money market fund? Like, that's a reasonable alternative, and people should consider it, like, if that fits their needs. Well, there's things that you just cannot do with a share of a money market fund today. You've got lockup periods. You can only trade between 9 and 4. You've got contracts to write and people who have to review them, and you don't get this programmatic, permissionless flexibility that you get with crypto. And so what we're seeing use cases that probably are not the ones that bring people to this conference today, but maybe should be, which are things like, you are a large company, you need to write hedge contracts against something, your delta, and you've got to hedge against the price of jet fuel. Well, today you're going to be moving collateral from underwriter to take out options against those prices. This is like sort of an esoteric thing, but what we're realizing is that they're being incredibly capital inefficient today because they've got to store excess capital with each of the providers they're writing options against. I know there's a lot here, but what we're excited to see is people be able to move collateral mobility, so they can just be much more collateral efficient as they manage their treasuries. That's at an institutional scale, but I think individual investors and people will feel similar use cases as we move sort of down the complexity ladder and make these use cases more accessible to day-to-day people.
Yeah, Matt, same question to you. What's the next chapter here? What do you see this evolving into?
Yeah, I mean, I would really just echo that. Like, it just removes friction. I think it's very, very prominent and obvious for folks that operate on-chain businesses, whether you're a DAO, whether you're a protocol, whether you're a crypto market-making firm. Just the frictions of moving between your crypto holdings on an exchange to a brokerage account it's not easy. There's frictions there. It takes time. It's expensive, and so I think at least that's really the most important thing I think for now.
Yeah. And Joe,
yeah, absolutely. So in the state of Wyoming, we're going to be launching pilot programs. We're going to go through, I mean, the S&P 500 has 11 sectors. We're going to go through each and every one of those. We've done a lot of that work already. We're going to work with financial institutions, all the retail businesses in the area, and see where this is mostly applicable across all those sectors. And we're looking also to service those that are unbanked, and also the ones that are receive the less service. Getting back to your money market point, one of the other constraints are minimums across all mutual funds, 3,000, 5,000, 10,000. There's a lot of people that don't have access to
So we haven't talked at all about other fiat currencies on blockchains. I think that that's really, really interesting. Today it's denominated by US dollars, but at BitGo we're having conversations with firms in Canada, in the Middle East, in Latin America that are saying, hey, I want to put a peso, I want to put a Canadian dollar, I want to put these other instruments on blockchains, and that becomes really, really interesting when you think about how these interact with each other and how it transcends commerce and payments. So super fascinating times.
It is.
Yeah, interesting times indeed. Thanks for closing on that note. Thank you to our panelists. Let's give them a big, warm round of applause. And thanks to you all for being here. Have a great consensus. See you.
Well, ladies and gentlemen, you had everything that is going on. I'm really liking the consensus so far. It's getting very interesting. Now, if you're here because of Pi Network, Nicholas Kokalis, just know that his speech or his talk is going to be on the 16th of this month, which is in 2 days' time. And he's obviously going to be talking about the Pi Network and subsequent ones that needs to be addressed. But just to touch on a little bit of what was said here and to kind of like wrap it up. So basically, all the CEOs that you saw over there, we're talking about like futures. They're talking about using cryptocurrency or having it as a means of, in terms of the yield, the stakes, and all that, and how some firms or some cryptocurrencies have super unimaginable yields, obviously to attract investors to come on board. And then they also touched on fiat currency and how, if possible, to integrate not just dollars, or because most of the time you mostly see matching up to the dollar, or in most cases. And then there are other people who, for example, use peso, the Indian rupee, etc., who want to engage in the same, whether it's been using their asset as treasuries or futures or etc. So I mean, it's an ongoing process, and I think it's on the right track. It's on the right track. So we're going into lessons again. I think we have about 3 speakers who are going to speak right now. So let's go and see what they have to say.
I'm going to let the panelists, my esteemed panelists, introduce themselves. To start with you, Ryan. Go right ahead.
Thanks, Ian. Appreciate it. So Ryan Rugg, I head up digital assets for Citi's Treasury Trade Solution business. I've been with the organization about 2.5 years, and we'll talk more about Citi Token Service later. Prior to Citi, I worked for IBM, where I was head of their digital asset practice for the Americas, and we launched CBDC, identity projects, as well as several others. And then prior to that, worked for R3, fintech startup in the space, where we developed Corda. I was employee number 20, so I got to do everything from sweeping the floors to helping build, Corda as well as go-to-market.
Mike, go ahead. Can you hear me through this? Yes.
I can hear you.
It's better, I can hear you. Mike Higgins, I'm the International CEO and Global Head of Corporate Development at Hidden Road Partners based in London. Prior to helping set up Hidden Road 6 years ago, I spent over 20 years in electronic trading, multi-asset, and the bulk of my time in the foreign exchange markets. Very briefly on Hidden Road, we are a multi-asset PB and clearing firm that was set up and funded by the buy side, so a sell-side business funded with buy-side capital. Over the past 6 years, we've been razor focused on improving the technology behind the core infrastructure of PB clearing and margin financing in traditional markets, and applying those same applications and practices into the digital asset space. Ultimately, as a PB, we do one thing: we provide access. It's access to two things: access for counterparties to trade across the entire liquidity landscape unencumbered, and then access to balance sheet to trade across that in a capital and cost-efficient way. Recently, Ripple's in process of acquiring Hidden Road, and so that certainly helps us unlock the ability to deploy more capital against counterparties in existing asset classes as well as digital assets.
Nice. Ryan, Citi have been, people probably know this, Citi have been in this space for a long time. But you recently launched the Citi, I'll get the name right, Token Services.
Yeah.
Talk about token services. What's new? What problems are you kind of solving, and so on?
Yeah. So when I joined Citi 2.5 years ago, we had been working on a lot of projects on various networks with the Regulated Liability Network with the Fed. Now it's kind of matured into Project Agora. But to be able to connect to a network, you first have to be able to move a token safely and soundly around the four walls of your institution. So last year we launched what's called Citi Token Service, and it was based on the thesis statement that our clients gave us. They wanted 24/7, 365 payment and liquidity, regardless of bank holidays, regardless of cutoffs. Where if you think about the traditional market, if it's 5 p.m. in New York on Friday, it's 5 a.m. in Singapore, and typically you couldn't send money. So what our treasurers do of our multinationals is they park this money early in the day, or to make sure that the money's there. And now you can do it just in time. So if it's Friday night, if it's Saturday morning, you could send money. And the interesting thing to me is we started off with liquidity and payments being our thesis statement to solve for our clients, but we've now seen it go into the cap markets with, recently it was Chinese New Year in Singapore, but we had a client that wanted to settle US equities. So, again, they would typically forecast for what their margin calls are going to be, what their kind of cost of funds are going to be in that market. Now they can move it instantaneous. So we've targeted our large money hubs first, which is US, UK, Singapore, and Hong Kong. And those are the ones that have the largest cutoff, as well as the largest amount of friction. We move on a daily basis somewhere between $4 and $5 trillion for our clients, but there is friction in the traditional market. So we've kind of taken a two-prong approach where we are updating our traditional infrastructure with solutions like 24/7, Spring by Citi, real-time liquidity, but also looking at more innovative structures that are using emerging technology like Citi Token Service to be able to provide that access, transparent, and liquidity for our clients.
So it's live and it's saving the bank money.
We have dozens of clients on it, moving multi-million transactions 24/7. And as I mentioned, it's really interesting to see, where the platform is going. And everything we do is dictated by our clients. We build for our clients, by our clients. So every additional hub that we add, every additional currency that we have is really mandated by them. And we're seeing them not just use it in off hours. Our thesis statement was that it would be used when the branch was closed. But we have large clients that are just using it for, real-time settlement for instead of having to do batch settlement at the end of the day to reduce costs for, reconciliation and stuff. So yeah, it's live.
Lovely. Mike, do you want to talk about securities on chain from the prime broker through the prime
That's
broker
very
lens
interesting
and
from the
all that
ladies.
stuff, collateral and all that stuff?
Yeah, sure. I think, can you hear me okay?
Yep.
Yeah?
Okay, yeah.
Look, being able to move value 24/7 has a huge impact, not just on the crypto space, but in traditional markets as well, right? And really upgrading that infrastructure.
Yeah.
And that's ultimately going to change the way commerce is transacted. From the lens of a PB, traditional PBs operate in a T1 and a T2 cycle. In digital assets, we're already at T0 and instant finality, right? So these solutions will leapfrog traditional prime. So going through the lens of PB, the biggest knock-on benefit is actually on the risk side of things. If you think about what we do, we give access to counterparties, and we require them to post collateral based on their portfolio and all the assets that make up that portfolio. The math behind the margin methodology of how much collateral they need to post is based on and calibrated on what are the assets in the portfolio, the size of those assets in the portfolio, but also the ability for a client to top up margin and meet collateral calls, right? Cure periods form part of the legal framework and are part of your risk management. And so being able to ship assets 24/7 reduces the risk from a PB and shrinks what's called your MPOR, your margin period of risk. And so the knock-on to that is prime brokers are able to price that more aggressively from both margin as well as fees. And so that makes it cheaper or ultimately more efficient for counterparties to trade those assets. And if it's more capital efficient, then the treasurers can hold more collateral and generate more yield in corporate treasury. So ultimately, tokenizing assets improve 24/7 margining, better real-time risk management, and better settlement windows, which leads me to the point of who benefits from it. So certainly the prime brokers have less risk, but if you think of the proprietary trading firms or the high-frequency fraternity, they can reuse their capital over and over. And then the big hedge funds or the long-onlys, they need to post less collateral, and so again, earn positive carry by holding that in corporate treasury. So big step forward.
Nice.
That's
And
interesting. Very deep.
The Ripple deal. Do you want to, in the context of securities online and on-chain and all that stuff, but I used to report on, who's going to be the main crypto PB, and there's lots of companies jostling for that position, who's going to, in that. But tell me about what Ripple's going to bring to you guys, and also what you're going to bring to them.
Sure. Yeah, I think it's definitely both sides, but I think it's important to take a step back, right? Prime brokerage, clearing, and margin financing has really been a facilitation business built into banks over the last 30 years. Since 2008, that's a sub 5% return on invested capital. And so you can see this in a number of areas. The number of FCM, GCMs on a CME in 2008 was 153. There's 61 left in the world. Citibank, the largest FX PB, kind of puked out that business, and there's a number of these themes. And so Hidden Road was set up to be a multi-asset, non-bank prime, and there was 3 pillars to do that. The first was rewrite the technology. Banks are organized very vertical, right? So you have a clearing system for equities, a clearing system for foreign exchange, a different clearing system for listed derivatives, and certainly nothing in the crypto space. And so we wrote a single horizontal clearing infrastructure using modern technologies, and that's important. It allows us to manage risk, cross-asset, cross-process, real-time, 24/7. The second was get the entity regulated by market regulators, and so we've done that. And the third piece is to the point of Ripple is, well, how do you fund that business? Banks have been predicated on rehypothecating client collateral to fund prime businesses, which is part of the reason they have punitive capital charges under the likes of Basel III. And so we looked at public markets versus private markets and said, right, we'll fund it with private credit, which has been funding businesses. We took about $500 million and deployed that. We ended up with a supply-demand problem. And so late last year, we said, right, time to solve that supply-demand problem. Let's go look for capital. It coincided with the change of administration in the U.S., which had a positive tone in digital assets and to our business. And so the conversation with Ripple was very organic. They were a user on the platform, and when we looked at it, having access to that balance sheet and that treasury would allow us to really deploy material capital in traditional assets. And in the crypto space, that infrastructure has not really existed. And so solving that gap to put real balance sheet in the digital asset space will allow real, true institutional adoption. So that's on the Hidden Road side. There's two knock-on benefits. One is we'll be able to lend a little bit more XRP, and two is Ripple's stablecoin made its debut end of last year. And so being able to use that as good collateral and accept that on a 24/7 basis is a major step forward. Looking at it the other way, Ripple's an L1, and so getting more assets on chain is a big important piece. Hidden Road runs a very large traditional market business, so cross-border payments and foreign exchange, we do about 30 billion a day, and then our fixed income business, starting with repo, being able to move that on chain are things that we're looking at collectively, but exciting development with Ripple.
Sorry, did you say XRP is going to be used as collateral?
Well, we already accept digital collateral as good collateral, and I'll give you a really good example. Today, there's many firms trading basis, right? So they'll trade Bitcoin spot against CME front-month futures. None of the bank FCMs, or even non-bank FCMs, can take Bitcoin as good collateral and finance span margining on the CME. Go back to XRP, you have ETFs that are there, you have CME futures coming online, and so taking XRP spot as good collateral and providing finance against it is certainly part of the playbook, and I think all the trading firms out there will benefit from that.
Great partners. Ryan, I used to write a lot about enterprise sort of blockchain, old, in the crypto space, and there was always the idea of public versus private, and the banks are more comfortable on sort of very private blockchain, some of them. But this seems to be changing. Do you want to talk about where we are now with the public versus private debate?
Yeah, it's definitely been a journey. I think back to 10 years ago at R3, and when we initially started our journey in that space, we were looking at Ethereum and different public chains, but due to the compliance, KYC, AML sanctions that large enterprises have to abide by, we couldn't be on the public chain. So hence why at R3 we built Corda, and you've seen other kind of private permission versions of platforms kind of evolve since then. We are on a private permission version of Ethereum because, that was all that was compliant for us. Like, Citi's not going to operate in the gray area unless there's clear legislation and rules and regulation about being on public. Like, large enterprises like Citi can't do that. So I think that the technology has definitely matured a lot in the last 10 years, but we still do see vulnerabilities and like bridges and the whole interoperability between different public chains. So I think that it still needs to evolve, but in the meantime, we are on a permission version of Ethereum with the aspirations of, depending where regulation goes, to make sure that we provide the best services for our clients. So I think it has developed a lot, and I think more to come kind of out of DC in the next, hopefully, couple of months.
Really great, and talking about the kind of cash leg tokenized, we used to report on JPM coin a lot. I know that JPM have changed, they've rebranded it. Nobody wants to be a bank coin, it's not. And actually, going way back, I actually did a story about Citicoin because there was a kind of proof of concept, let's just say, because I remember I did that story in 2015, and I know that you don't do a Citicoin, it's a Citi token services. But the question is, interoperability between banks. You talk to the JPM guys. I know you work with them, Project Guardian and stuff. Where are you with interoperability?
I mean, we already started. We started with the network play before we actually had Citi token service. So we were working with the Fed on the regulated liability network way before we even had a Citi token. And we've made some very different design decisions. When I was at IBM, I advised a bunch of different banks in this space, and you don't need a blockchain if it's just going to be an internal token. We've always had aspirations of connecting externally. And the thesis statement that our clients want is they want multi-bank, multi-border, multi-currency, always on liquidity and payment. Like, why does money not match the speed of the internet, right? So how are we going to get to that evolution? And it is going to be multi-bank. It is, and we're part of several initiatives that are working on this and trying to drive that forward. But I also believe success breeds success. So, right now, being able to be live and adding value to our large multinationals that operate on a 24/7 basis to be able to move their cash across our 90 plus branches actually adds a lot of value to them. It adds a lot of transparency and value, and they don't have to, forecast money to the different regions across the globe, that they can just do it instantaneously. So yeah, I think interoperability is important. We're actively involved in several initiatives around this space about, and I joke with the team, if I had $1 for every network that approached me to join, I could retire. So it's definitely been on the forefront of our mind.
I bring it up because sometimes I got the feeling that JPM were not quite so into interoperating with other. I mean, someone said to me that interoperability and capitalism don't mix, which is a sort of interesting. Anyway, going back to on-chain securities, BlackRock, Biddle, that fund, Mike, that's been a huge success. Tip of the iceberg?
Completely a huge success. I think, don't quote me exactly on this, but I think in the first 2 months it amassed an AUM of about 500 million. I think we're closer to about 2 billion. But it's the play on, or piggyback on what Brian was just saying, right? It's the ability to move collateral 24/7. But one of the key components of this is moving collateral that pays positive carry, right? Like gold is a non-carry asset. So if you look at investment portfolios, gold is a small portion of it, right? It doesn't pay interest. Large shareholders of gold are actually are the central banks, similar to Bitcoin. So we'll see if that unplays. But going back to BlackRock's 2A7 funds tokenizing this collateral, I think it makes a lot of sense. You can meet collateral calls around the weekend. You'll see the Templetons and the Vanguards and the rest of these funds start doing it. Their infrastructure really allows them to do it. So certainly tip of the iceberg. And again, it improves the ability to cure collateral around 24/7, and that ultimately will improve cost and for counterparties. So yeah, early on, but very exciting.
And beyond tokenized money market funds, which obviously there's a lot of people involved in that world. Ryan, I mean, I did a story recently about Citi, and they're doing pre-IPO shares. And interestingly, going back to R3 and the R3 guys, who are great, by the way, they work with SDX, the Swiss exchange. So where are you guys at the bank looking beyond money market, other things, credit, stuff like that?
Yeah, so our issuer service business, as you mentioned, recently formed the partnership with SDX on later this year having the access to pre-IPO shares. I think it's to our strategy, and similar to you, it's build by partner. We're not going to build every solution out there that our clients want. We are building Citi Token Service. I think it's foundational to be able to move cash around instantaneously instead of having to go back to TradFi rails for our clients, but also partnering, and right here, our clients want access, transparency to pre-IPO shares. So being able to partner with an organization like SDX to do that, and I think that's going to continue in this space. These partnerships with large enterprises, as well as our venture cap team has a big book within this space also that we're going to invest in these companies also, because we're not going to build every solution out there, and I think that's important for the future.
Really good. And Mike, where do we draw the line? We're going to tokenize everything that's got any kind of value.
Yeah, I think it's simple. I think you look to tokenize, at least today in this world, before we move to a 24/7 market, which is going to happen, and then things should virtually all tokenize. But today you look at, does it make it more accessible? Does it improve liquidity? Does it improve transparency and operational efficiencies? And so we've started with the money market funds, stable coins. I think private credit is important because you'll have better tracking of IRR. Repo, I briefly mentioned, Brian already mentioned, that's a big space, right? That will improve capital efficiencies, liquidity for intraday liquidity, not 24-hour periods. I think that's where we start from. But I think if we think, fast forward, if markets move 24/7, then having collateral that, is recognized as good collateral and to be able to move that around in line with those markets, I think is hugely important. So we're at the very early start of this.
I mean, I hear people talking about tokenized real estate. It's been around for ages, like an apartment block somewhere. But Ryan, you guys actually did some proofs of concepts, explorations, with land registries and stuff.
Yeah, when I was at R3, we were working with, at the time, state of Illinois on a land registry, because the way they explained it, some of these land registries that they have within the state, if a tornado touched down, literally the whole entire land registry would be wiped out. There was no digital copy of that. And why do people have to do title insurance and the whole title effort? So being able to digitize this whole entire process, working with the state on that. But one thing I'll say overall about tokenization of different assets is a lot of what I've seen is if there's a shadow ledger or a shadow, like a regular, the system's not going to be the system of record and you have to go back to the TradFi rails, it's not going to work. Like it's created like conflicts, and I have seen some solutions, but a lot of them haven't scaled when they have to go back to the traditional rails. You're just kind of creating, two shadow systems. So I'd say, natively issued assets onto the ledger, onto the blockchain, are much more efficient, and I've seen like scale better.
Really good. And last sort of thing, I guess, regulation is coming. US, Europe, slightly different. Well, I mean, I'll start with you, Ryan. What's the...
Does your home have an RTS meter? It's a switch box near your electricity meter.
Very optimistic about this new administration. And I'm optimistic by the speed that these stable and genius bills, even though we had a little stumble, last week, that they're moving. That I want to make sure that large enterprises like Citi have ability to have a seat at the table if our clients want it.
And Mike, last thing, is there a significant risk maybe from having everything on chain, everything whiz bang on a blockchain? I don't know. I sometimes wonder that maybe we could be stumbling into a black swan event or something down the line.
Just to comment quickly back on the regulatory side, I'm pro that, but my fear is that we try to shoehorn this new asset class into existing TradFi regs when that may not be the opportunity to create something new and unique. But the Stable Act, the Genius Act are really important on the stablecoin markets to get that certainty. I mean, if you look at that market cap today, it's less than 250 billion. Like I think those stablecoin issuers will become very large holders of U.S. Treasuries, and the U.S. government likes that. And to be able to export dollars around is really important. But I think the approach we should take is probably like one where we did in the early stages of the internet, right? It's a pro innovation, light touch regulation. I think that is key. But yes, I mean, there is real risks of putting everything on chain. You've seen lots of hacks in this space. We're getting much better at those things. But yeah, I'll pause there.
Yeah, I think we're almost at time. Do you see? Are we heading towards another black swan event in crypto?
It was actually interesting. Right before this panel, I was having a conversation with a law firm that is actually litigating for one of these big hacks. And it is a completely different environment. The speed, the transparency, within minutes, the whole entire market knew what happened. And like typically they are able to, not release the information to media right away. It's completely changed. So I think the whole dynamic of the market and the speed and transparency that this adds is changing the way financial services can be done.
Well, listen, Bybit was a perfect example of that, right? The hack was immediately known.
Yeah.
Like think about, 2008 and Lehman Brothers, like you didn't know what was happening for days. We knew pretty quickly. Ben was out there and and solved that, right? That's hugely important. So I think there's more positives to this than drawbacks.
Yeah, the Bybit hack and OKX on hand to launder the funds. Anyway, both great sports. Thank you so much, both of you. Really appreciate it.
Thank you.
Ladies and gentlemen, I've got some announcements, real quick one. Whilst we wait, there's been an update on the Pi network regarding. I think this is part of the announcements. So on the Pi app, you see the change. Pi Network Ventures investing in scalable innovation across industry. So Pi Network is investing $100 million in investments to power the Pi ecosystem. Now that's big news. That's big news. I'm pretty sure Dr. Nicholas Kokalis will be coming to talk more about this. I'm just seeing it now. So if you go on your Pi app, you will see it. It's right there for all pioneers to see. It says 100 million in investments to power the Pi ecosystem. $100 million. $100 million to power the Pi ecosystem. That is massive.
We're coming to you
all right, that's just by the way. Let's continue.
Consensus 2025, sponsored by MoonPay, the global leader in crypto payments. GM, good morning. Welcome to the Milk Road Show on CoinDesk Live at Consensus. As I said, we got Kyle in the house. We're going to be talking all about what is happening in markets, what's happening in macro, and where we see the opportunity for crypto investors for the rest of this year. Now, if you are a CoinDesk follower, you might not know myself and Kyle. We're the co-owners of Milk Road, a media company that produces content for crypto investors. We have a daily newsletter, podcast. If you do know us, thanks for showing up again. Great to see you. Always good to be back. Today, we're going to discuss a few things. Should you be buying? Should you be selling? Or should you be holding right now? What are you doing with your crypto assets? Macro. What's going on in macro? Trump, China making some deals. Is all the macro noise over? Can we move on from that and forget about it? And then two big gainers in the past week. Ethereum catching a bid, absolutely rocketing right now. And then Coinbase over on the equity side, up 20% this week. What's happening in Ethereum? What's happening with Coinbase? We're going to touch that and so much more. Before we jump in, if you are not subscribed to the Milk Road newsletter, I highly recommend you do. Why? 5 minutes every day in your inbox. You get a laugh and you get some great crypto investment advice. Check it out. Hit the link and subscribe today. Also, today's episode is brought to you by Ledin. Get cash without selling your Bitcoin. It's also brought to you by CoinShift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. With that, Kyle, what's up? That was a long intro with you just sitting. It's not usually like this where you're sitting beside me.
Hey, you know what? It's fun. I'm glad to be with you. We're in Toronto, which is a city that Jay and I both lived in. It's actually the city Jay and I both met. We met here in this city. And you know what? I got to say it. It's all about the Leafs today. It's all about the Leafs. Go Leafs, go. I know our fans are a lot of them from the U.S., so you probably don't care about hockey, but we do. And we're actually going to the Leafs game tonight, so I'm excited. Game 5 against Florida. It's going to be a big thing. So that's actually what's on my mind. Screw markets. I don't care.
Screw markets. Screw crypto. Let's go Leafs. Okay, but I know you're not here to listen to us talk about the Leafs or sports. So let's talk crypto. Kai, this has been a bit of a messy cycle and a bit of a confusing cycle for crypto investors. A lot of hope and a lot of belief coming in to Trump's inauguration. Hey, we're all going to the moon. Markets are going to go higher. Everything's going to go higher. It's easy street, right? Well,
that's
you know what? It's not easy street. So where are we in the current market cycle in your view right now? Give us just sort of help us understand where we are so we can understand where we're going.
Yeah, so at Milk Road, for those, I know there's a lot of new people listening today, but we talk a lot about, and what we believe in for our investment framework is the business cycle, the liquidity cycle. So when he's saying cycle, I believe that's what you're referring to here. I know a lot of people talk about the crypto cycle, this 4-year thing. We don't necessarily abide by that, although the 4-year thing has happened, I think, because of the business cycle, because of the liquidity cycle. And so when we look at markets, that's where we tend to focus our thinking on. If I take us back to when Trump was inaugurated, around that time, we actually started to see financial conditions tighten, right? The dollar went really high, oil was going high. And so in that world, financial conditions tightened, liquidity was actually going down. We saw a pullback in new global liquidity I'm talking about here. And in that world, we actually started to get a bit bearish. I know everyone was euphoric and excited in December, and it was a great time because we were like, hey, finally the shackles are off and crypto can flourish. And we probably got a little bit too excited. But I think what really happened was financial conditions tightened. The business cycle actually ended up pulling back a little bit. And so we figured, and we said in December, we put a thing out to our members, our pro members at Milk Road, that, hey, we actually think we're probably going to see a pullback here, which we got over January, February, kind of March. Then things got even worse than we expected them to. We thought maybe a 20, 30% pullback overall in the market. And I mean, we did get about 30, 33% or something in Bitcoin, I think was the final thing, something like that. But obviously everything else got completely decimated over that time. And what we sort of saw in that moment was, you know what, financial conditions actually started loosening around March and April. So we were actually getting quite excited. Global liquidity started to pick back up. And what we believe is that crypto sort of follows that. But there's generally about a delay, like 3 or so months. Like 3 or so months, right? Now it's not perfect to that, but something around that time frame. And so around March, April, we actually started to get a little bit more bullish. And then of course, Liberation Day came and that ruined everything, right? And everyone was kind of caught off guard. And that ruined everything, right? And everyone was kind of caught in a bunch. We did. That ended up being an amazing, incredible move.
Tivoli Hotels and Resorts. Uncover distinctive havens of timeless hospitality.
In my opinion, again, this assumes that what we're hearing right now in markets in terms of Trump making with China, making deal with Japan, with India, UK, those actually go through. I don't think we go back to zero world. I think we don't with whatever it was, 250% growth with China. I think we probably find some around, and it's probably somewhere around 10% on select goods. And I think overall that's probably a good thing for the U.S., a good thing for the economy, and I think we'll go back to kind of where things were. year. Like, I think it does well, but will it outperform Solana? Will it outperform Bitcoin? Like, I don't know. I don't really know yet. Typically what I see is when the ISM, so this is sort of your business cycle, when the ISM picks up about 50, that's when we typically have our alt season. In that world, ETH will do really well, right? Obviously, other things will outperform it that are much smaller, but I think in that world, it will do really well. We're actually not there yet. We've had this kind of delay in the business cycle because of tariffs, because of what Trump has done. And so I think we're at 48.7 or something like that. We were above it. And so in that moment in November, December, we were above it. And it looked like altcoin season, things were going to go crazy. And so we're back below. So we'll see what happens here with all this resolution and tariffs. I think it's probably going to pick back up pretty quickly. And I think in that world, ETH will do well. Will it outperform Solana? Will it outperform a lot of other things? Like, I don't know. I think it's probably tough, mainly because it's a $250 billion asset. It's freaking huge, right? Most of these other crypto assets are 50 billion or 20 billion or 10 billion or 1 billion, right? They're much, much, much smaller. And so it's a lot harder to move a $250 billion asset. Now, I know Bitcoin has had an incredible run over the last few years, and it's a trillion or 1.5 or whatever it's at, maybe close to 2 trillion. But it's got people like Michael saying.
This video right here never really existed. It got over 8 million views. It's one of the first videos that is completely AI generated.
I don't know if it ever will, right? Like, at some point it will, I'm sure, but not today. And so I think it's just going to take a lot. Overall, I'm bullish on ETH. I think what Ethereum is doing is the right thing. I think Ethereum is building for the future, and it has the right kind of like scalability path. So I am very bullish on what they're doing. Obviously, Coinbase using them and Kraken using them, etc. So I'm excited for what Ethereum is doing. But is it the thing I'm most bullish on? Probably not. But I don't think it's a bad investment.
Let's look at one of the things that I know you are most bullish on, which is Coinbase. We were just on stage with John D'Agostino, head of strategy of Coinbase, talking, not talking so much about Coinbase, but I want to get your takes on Coinbase also having a great run, as joined the S&P 500 this week. What's your take on Coinbase and that as an investment going forward?
Yeah, look, I think Coinbase is one of the best companies that are run in crypto. They've been around the longest, pretty much, in crypto. They've been through it all. And what really excites me about them is they're diversifying their sort of revenue streams and their products, right? And not only are they an exchange and doing a lot of the like centralized stuff, they really are building at the forefront of the decentralized stuff, right? In the on-chain world. And I think that's really exciting to have a company that's that big, has that much capital, to be building both the centralized things. I mean, they just acquired Deribit, right? Another massive global centralized company for options. But then they're also really pushing the limits with Base, with Coinbase Wallet. They're doing some really cool things there. And I think they're going to do a lot to bring things on chain, right? Bring companies on chain, bring people, bring capital, and I think bring assets on chain. And so I think that really, really excites me. It reminds me of the sort of like early days of like, let's say Apple or Amazon or Google, right? Where they're very crypto native, right? And Apple and all them, they were very internet native. And so, you know, Amazon was able to pass Walmart and do a better job of Walmart in selling, different commerce, like whatever it was, because they went all in on the internet, right? And they were able to kind of leapfrog Walmart. Walmart took, 10, 15 years after Amazon to get online and build their online store. And so I think, yes, banks are about to start custodying assets, crypto assets and all that, but I think when you have a crypto native company that's doing it, that's really pushing the movement to kind of bringing the financial system on chain, when you have a company like Coinbase doing that, I just think that's super bullish long term. Obviously, they've had an incredible run here over the last week or so. I think they're up maybe 30%, both because of the acquisition of Deribit, two, because, just crypto has done well. So obviously, it's kind of a caveat of that. And then also, joining the S&P, which I think is massive. It's starting to start to get some passive inflows into it. I think that's a really big deal. The other thing to remember about Coinbase, they still have $9 billion in cash or something like that. Maybe it's even more than that today. They didn't have to put a lot of cash into Deribit. I think they acquired them for 2.7, 2.8, but it was only $700 million in cash, right? The rest was in equity. And so, we just talked about the size of Ethereum, which is a $250 billion asset. Coinbase is today 65 billion, right? So it's still fairly small. And so I think Coinbase, if you want to call it cycle or whatever, this next year is going to do extremely well, even though we're about to have a bunch of IPOs from other companies, which might sort of eat into it. But as John was saying just on stage before we came in, he's like, I'm not worried about that because what we're doing here is growing the pie, right? And I think Kraken IPOing, Circle IPOing, and the list of others IPOing is only going to grow the pie of crypto. It's going to grow its legitimacy. It's going to grow kind of the the education awareness around crypto. And so I think ultimately that feeds into and benefits Coinbase, right? So short term, I think Coinbase is going to do very well here for the rest of this sort of bull market that we have. And I think long term, I think Coinbase is, again, it's like these Make 7 companies where you can just buy this thing and buy it over the next 20 years, and it's just going to continue to do well. Now, that's assuming
Here's how I got my team to use Monday Sales CRM and actually like it. Let me start by saying it's so easy to use that I won them over right away. Onboarding was seamless, and now every little detail of
or SUI or like whatever DeFi protocol. And so I think with that, the large amount of capital that's coming in, obviously that's going some to the ETFs, but I think they're going to want to go into assets outside of just Bitcoin, and I think Coinbase is going to be the #1 option for them. And so I think it's so I think it's going to do really, really well here over the next little while. Revenues. Who is actually driving
Okay, ladies and gentlemen, I do apologize. The cut in the feed is not from my side, as you can clearly hear and see me. I'm trying to get it back on track. Obviously, the number of people that are streaming in onto the official side is in the greater numbers, but so definitely such issues are more likely to occur. But whilst we wait for it to be resolved, let's go over some few things. And like I said, breaking news is that the Pi Network have allocated, or probably this could be part of the news, that the major announcements that they were talking about. So on the Pi Network app, Pi Network Ventures, okay, is what has been presented. So the Pi Network is investing $100 million in innovative startups, okay, in innovative startup. Now, this comes as part of the ways to make real world usability or utility of the Pi crypto network, and hence the reason why they are embarking on this. Now, it comes with eligibility criteria, meaning that it's not everybody. You need to be eligible for to be able to hold, get access to this $100 million. That is a lot of money. That is a lot of money. And I will take my time to go through it and break it down probably on my next video. So do stay tuned. Right now is just focusing on the consensus. Now the timing couldn't be anywhere perfect because Nicholas Kokalis, who is the one of the co-founders of Pi Network and also the lead in the technology on Pi Network, is also one of the speakers on Consensus 2025, and hence he's going to be making a statement, and I'm pretty sure he's going to bring this up because These are real world utilities and usabilities on the Pi network on a continuous basis where everybody is given the opportunity to voice out or be part of the Pi network or the Pi community. And this is big news for the Pi community because now you're going to be having businesses and firms who are going to launch on this opportunity, create businesses that work with Pi network as a mode of payment or utility, and hence be able to embark on this, get their hands on the capital in Pi coins, which will be able, or Pi coins or USD, or whichever version that you're going to get it in, and that was going to go towards the establishment of their company or firm, whichever way you want to call it. But then at the end of the day, it's going to go towards making real world utilities on the Pi network. And this is big for those in India, Nigeria, United States, etc. This is big news. There's a lot that goes into it. There's a lot of information. I can't just wrap everything up. I'll take my time and go through it, and then I'll make another video where I'm going to be taking you through. So just to give you just a short recap of some of them. Just a moment. So just to give you a short recap of some of them, and then I'll return back to the consensus whilst we are waiting for their feed to come back online. So we have the likes of how investments will work. While the investments will generally be denominated in US dollars terms, Pi Network Venture will seek to make the majority of its investment directly in the form of Pi. This means that companies who join the ecosystem, will be incentivized in the very currency they are helping to strengthen and grow. That is big. That is really a massive push and a great turnout for the Pi network. Let's not forget, in addition to this, Pi network is also working on the domain, Pi domains, and also on the Pi auctioning of the domain, which is also generating a huge amount. So through this and others, you can see that a lot is going on, and a lot of things have been addressed, which is brilliant, which is really, really brilliant. I like the fact that things are going the way that it's supposed to be for the Pi network, and for each and every one of us who is currently on this. I am hoping that things will move the way that we want. So getting back on the Coinbase, it seems the traffic onto their site is really, really huge, and they are struggling to keep up. But all the same, I'll try and get you as much data and information as possible. So let's see. Let's not forget, today is day one, and I can see majority of the people who are watching are predominantly Pi network focused. Like Pi, they are so on about Pi network. It's about over 1.7K, and all I can see is Pi, Pi on demand, Pi on demand, Pi, left, right, center. This goes to show how important this is. Pi network is actually driving this whole. It's like all the people who are watching Consensus 2025 is predominantly about 60% are pioneers all throughout. And for this news to come in where Pi network is putting out 100 million US dollars equivalent, no, yeah, 100 million. That is crazy. Launching Pi Network Ventures, investing 100 million in innovative startup. Now, this is big. This is massive. Hold on, since I lost my 1 minute. It seems everything is just coming out. Yes. So it seems the Pi Network they are really, really, really focused, and this is a massive information. So whilst I turn my attention to what's going on the the consensus 2025. For some reason, we are not getting what we've lost feed of the consensus 2025. Yeah, it's an issue that has to do with from them. I don't know what is going on. Okay, there's definitely an issue on their side. It's not loading up. Are you all facing the same issue? For those who have tuned in and watching directly on, hold on a minute. So it seems to be an issue. But Pi Network, someone said Pi Network to the moon. That brings me. Let's have a look at how Pi Network, Pi token or Pi coin is doing right now. So the last time we checked, so Pi is okay. So the fact that Pi value is going down, it's an indication is about to go up again. All right, and that we can clearly see it's picking up again. Pi Network is picking up again. So I'll show you real quick. So don't go anywhere. Just stay tuned whilst we try to connect to the consensus, and whilst they get it fixed from their side. So just stay tuned for a minute or two whilst I'm going to share this bit with you. So you can see Pi Network is about $1, $1.07 at the moment. It dropped. I think this is due to the announcement that came through, and I can see it's picking up again here. So people are selling that to buy it's lower or cheap. I'll take my time to go through this. Like I said, Nicholas Kokalis's announcement is going to come on the 16th. His talk is going to come on the 16th. I'm expecting more information to come through. With that being said, let's have a look and see how the consensus is doing. Let's see if we now have clarity and connection back. So it seems they are still struggling to get things running. The amount of communication going on their side is incredible. It's incredible. It's astronomical. I don't blame them. So this is a good move. It's a positive move for the Pi network. I know a lot of people were expecting the Binance listing and announcement. It's never too late. Like we said, this might be just the beginning of the announcement. There's still more to come, so there's no need to be worried. I'm not worried. Pi network is going places with 100 million initiative or innovative startups. That is massive. That is massive. A lot of people, big time investment. So now, if you have the idea, you know what to do. You have the resources and the people to actually embark on this idea. The capital might be a problem, but here's the case: the capital issue is being sorted by this, which is a great startup opportunity. So it says today mark a transformative moment for the Pi community. The Pi Foundation is thrilled to announce the official launch of Pi Network Ventures, okay, a development initiative of $100 million held in Pi and USD, which will strategically invest in startups and businesses, including those that advance the utility, adoption, and real-world impacts of Pi. Now that is massive. If Dr. Nicholas Kokalis brings this up on consensus 2025, that is going to be a game changer, 100%. It's going to be such a game changer that we've not seen before. Yeah, absolutely. Now I'm gonna dive a little bit deeper into it, but with that being said, let me have a look here and see if we are getting access to. Okay, so it seems is on now. I think. Hold on. Hold on. Yeah. So okay, so it's moving. It's moving. It's back on now. I am going to connect it through, and then we'll be able to take it off from there successfully. Successfully. So hold on for me, ladies and gentlemen. Um, just a moment. Okay. I really want to hear what Donald Trump's son is going to talk about regarding the government's plans for cryptocurrency in the United States. Because they once it moves along with other stuff too, which is great, so we're about to go. All right, so we are ready. I'm ready. Let me put it that way. I'm ready to go. Just 1 minute, and then we're back on track and hear what consensus is all about. Okay, so here we go, ladies and gentlemen. I'll stop sharing this bit and then get you the one that we need. Yes. Okay. Now let's see. Oh, come on. Hold on. For some reason, having some issues. 1 minute. I need to work on a few things here. Hold on, guys. Just trying to act up in, but we are ready for it. I'm ready for it. Hold on a minute. So just a sec. Okay. So let's see. Okay. So what I'm going to do, I think I'm having some issues here, but it can be easily rectified. There we go. All right, ladies and gentlemen, sorry about that. It seems I need to restart my other streaming up. But let's talk about the Pi network while we wait for to be reconnected to the consensus 2025. So Pi network right now is on the go. Pi network right now has, like I said, they have taken on the role of taking the bigger step towards helping pioneers to be able to be part of the whole big picture, and that is amazing. Most crypto firms don't have this capacity, especially with the likes of Bitcoin and Tron, Tezos, and all these other firms. They don't have this capacity. However, Pi Network currently they are on a bull run, even though it's not showing on the real value is not showing on the external bit, where you're seeing a sudden drop in the price. Some investors might get worried, like, oh, what's going on? Don't worry about it. I'm pretty sure Dr. Nicholas Kokalis has more to share soon once we have things running, or once he comes to make his presentation come on the 16th. So I'm looking forward to it very, very, very much. So, okay, the connection is back on. We are back online. We're back online. It's 2 minutes, two minutes, and then we'll be back on. So 100 million is a massive amount. Is it going to make great changes? Absolutely, absolutely. That's my belief. I 100% believe in that, in the Pi Network's capacity to do that. Auctioning is ongoing. If you've not done so, what are you still waiting for? You need to get on, because time is not waiting for any man. Time is not waiting for anyone. Okay, so we're joining now. Hold on. Okay. Okay, ladies and gentlemen, we are back. We are back, and that means that now we can be able to jump in back onto the consensus and bring you consistent information. Sorry about the earlier glitch that occurred, but systems were finding it difficult to stream or bring back the streaming. But we have been able to rectify that. So now I should be able to bring you back. For those of you who stay, thank you so much. Really appreciate it. Doing the best that I can to make sure that we are getting all the information, or you're getting all the information which we need to get regarding Pi Network. And that's for that reason we are here. For that reason we are here. So thank you so much for waiting. I do apologize for the ready now for you.
Probably not.
There we go.
But again, I don't know. We'll have to see.
So thank you
Right now,
for
inflation seems to be under
staying.
control. So it's
Now
not so
we're
much
going
of
to
a
return
concern.
back
That was
to
the big problem
business
in 2022. We had to raise rates like crazy because inflation was at like what 8%.
Thank you so much for waiting,
We don't have that problem
everybody.
today, at least not yet.
So I'm just
Again,
going to go
tariffs
in.
could
We're going to
cause
hear
that,
what
at least in the short term. But I think
what we missed, a few of them.
I'm not as
and
concerned
then
about
we're just
inflation as a
gonna
lot of other people.
continue.
So I don't know. We'll have to see where things go.
Amazing. Kai, fantastic sitting down with you and having a chat.
What a
Doing it in
blast.
person, usually we're on the screen in different houses, so doing it in person is so much fun. Thanks to everybody for tuning in. I hope you are having a great day wherever you are. Make sure you're at Consensus next year. Great conference.
Yeah.
So excited to be here.
It's been amazing.
Just
It's
incredible.
huge. I wish I could show you guys what we're looking at over here. It's actually massive this year. Some great speakers. It's a great time. And you know what? We're in Toronto, and the Leafs are playing, and I don't know how many hours right now, but go Leafs go.
We got some people in the crowd here.
Yes,
Go,
let's
Leafs,
go. Look at
Thanks
everybody.
for tuning in, everybody. Have yourselves a wicked awesome day. We'll see you back tomorrow on the Milk Road Show, or we'll see you also on CoinDesk Live. I think I'll be back on the show Friday. Yeah, have a good one. Thanks, everybody.
Stay ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletter.
are there for the consensus. So I'm not sure the exact time that they're going to close, but I'm here for it. I'm here for
Our
all
next
of it.
guest is a leading
We're back
authority
on
on the
with
digital
another
age,
person,
penning
CEO.
16 books, including the
Let's go get
bestseller
some insight.
Blockchain
Crypto.
Revolution. His new book, U to the Power of Two, Redefining Human Potential in the Age of Identic AI, will be released this fall. But we're getting a world premiere early preview right here at Consensus, so please welcome Blockchain Research Institute CEO Don Tapscott. Don, thanks so much for joining us. You know, I've got to credit you in your book, Blockchain Revolution, for really helping me have that aha moment on why Bitcoin, cryptocurrencies are the digital transformation of our financial system. So thank you.
You know, I wish I had $100 for everybody who's told me that. It's almost a decade.
Yeah, you were early on.
And sometimes you get lucky with a book.
And now you're on to artificial intelligence, so already onto the next trend. And you're arguing that personal agents or identic AI will be very key to the next wave of technology. So tell folks, what is identic AI? What are these personal agents?
Well, the new book, as you mentioned, U to the Power of Two, it's about redefining human potential. And identic AI, by the way, my co-author is Joseph Bradley, who's the CEO of Autonomous. And Christine, there are all kinds of agents. There are agents in call centers, financial systems, supply chains. And this so-called agentic AI is the future of AI. But the one that really matters and will have the biggest impact is digital Christine. No, it's
my digital clone.
Yeah, well, it's more than a clone because it's infinitely more capable than you.
Oh,
and it will enhance your capability dramatically.
Yes.
So it'll be your personal doctor. Very capable because it's gone to every medical school in the world, read every text, and knows about every procedure that's ever been performed. It'll be your personal tutor. It's literally a know-it-all because it knows everything. It is all-knowing, all recorded knowledge, and it will help you manage that. It's your vice president. Actually, it is an infinite number of vice presidents. One's out negotiating problems with customers. The other is addressing a big opportunity in a new market. Another is attending a dozen conferences that you can't go to figure out which one would have been the good one. Another one's helping you manage your personal life. So there are a dozen different parts of our lives, all to which our digital identities are not just made of data, but they're becoming brilliant and smart. And if we do this right, this will expand human capability infinitely. If we do it wrong, it'll lead to the extinction of civilization.
Oh my.
Stakes are not very
That's quite
high.
a spectrum.
Yes.
So how are they being used today? Do you have a digital twin or a
Well, no,
personal agent?
right now.
How are they being used today? Do you have a digital twin or a
Well, no. Right now, we have agents. So we have an assistant like Microsoft Copilot. But this is happening very quickly. Over the next few years, all these different agents will come together. And AI will not be a tool that we will use, like you probably use ChatGPT or something like that to help you plan an interview. It will become part of our basic experience. And it'll be with us in all kinds of ways, initially on a phone, through the ambient world, like through Alexa or something like that, on your TV, in your car, but ultimately a hologram on your desk, ultimately a robot on your desk, ultimately a robot. Robotics are happening very, very quickly as well.
How soon is this happening? How soon is this happening?
Well, we're saying this decade. I'm guessing the book will be published in the fall. Within 3 years, most people of means and professional people, that raises an issue, will have a digital self that will be their companion, working with them on all parts of their lives.
Right. You mentioned it could unlock all this potential in productivity and helping our daily lives, or it could lead to the destruction of human civilization as we know it. So how do we make sure we do not have the latter case happen and we do maintain the utopian vision of what AI can do?
Yeah. Well, they say there's a fine line between vision and
So basically,
hallucination,
literally, this man is talking about, the future is coming, man. The future is now. We're gonna be having digital of ourselves, living in a digital world or digital space. Absolutely. Sorry about that.
important thing happening in the world. Responsibly for yourself. But over the next 2 years, sea change. That digital Christine is not just data, it has an IQ. It's going to be a lot bigger than your IQ, and you're very smart.
So the key is to, I suppose, gravitate toward decentralized AI solutions?
Yeah, well, to actually answer your question, we need to get control over our digital selves.
Own your data, yeah.
And the way to do that is by modest little undertaking. It's called reinventing the AI stack. And we show how that can be done in the book. We need decentralized physical infrastructure, decentralized data fabric, a decentralized set of AI models, decentralized AI logic, and decentralized applications. And this is not a pipe dream. This is a feasible thing. It's technically feasible, and it can be done.
That is incredible.
Another question I had was,
If this is done, that's gonna be
are you
incredible.
legally liable for what your
I don't think I'd like to have my
digital
own.
clone does?
As long as it can work and earn
How
me
do you
money,
manage that?
I'm good.
What if your AI personal agent that looks like you, Digital Don, does something that I don't know that may be illegal, and who's liable for that?
Welcome to the new world where every single thing that we know about law, human interaction, and governance is going to get challenged and questioned. And that kind of leads to that second issue that, digital Christine becomes godlike. If you think about it, you, with your agent, have an IQ that's almost infinite. You're all-knowing. You remember everything. You have a view of the world that is indistinguishable from magic. You know that song, What If God Were One of Us?
I don't know how I feel about that this bit, but
God will be us. Now, what happens?
I can see the lady's confused. So am I.
Decides that it doesn't need you.
This man lives in a different world.
Worse, that it doesn't like you. So this is creating a deity that's not divine, but is potentially demonic.
Wow.
And so, that digital God has unlimited power. Think about, once it's super intelligence, it can hack every financial system. It can hack the robotic version of you, which has physical strength. It could hack the nuclear codes. So the way we're going to solve that is not through technology. We need a new social contract in society, a new understanding between government, business, and civil society. And this has been my big mission.
Oh my days!
How do we form
There's a lot going on in this conference.
Understanding in humanity about how we're going to try and make sure that this smaller world that our grandchildren inherit and the smarter world is actually a better one.
Wow. That is
Hmm.
very mind-blowing. A lot of legal, ethical questions to consider in AI. Looking forward to the new book, Don. Thank you
AI,
so much for
artificial
giving us a
intelligence, is
preview.
taking a
Yeah,
different.
the new book is available for pre-order.
All right, Don, thanks so much. That was Blockchain Research Institute CEO Don Tapscott. Let's take you now over to the action at one of Consensus's dynamic stages. Stay with us on CoinDesk Live.
New players to hold the asset, to worry about custody, and they can still get that exposure. As far as staking goes, I really think staking addresses a target market that's already somewhat long crypto. Sure, you can get staking yield and hedge and not really have exposure to the underlying, but most institutions, whether they're TradFi or crypto native, that are interested in staking are already interested in crypto, are already somewhat long crypto. So I think the bigger question is, how do we get new entrants? How do we get new money into the space? And part of that is going to be regulation, which there's reasons to be bullish on and there's reasons to be bearish on. Reasons to be bullish on, we obviously have the most pro-crypto Congress and administration that we've ever had in the United States. We've had the DeFi broker rule overruled earlier this year. That was one of the most bipartisan votes that we've seen in a long time, where basically if that wasn't overruled, it would have squashed DeFi, but it was. So now DeFi has a chance for another day. But we're seeing hangups on the stablecoin bill. We're seeing delays. So all that's to say, you see headlines every day about this company, that company doing this in crypto or some transaction on the blockchain. But to unlock significant new capital, I do think we need to see some actual new regulation pass, which then will allow these numbers not just to be tripled, but 10x'd.
You're right on the money, because the next slide talks about the people who didn't want to go into DeFi. The main reason, as you can see, is policy. So how do you change someone's mind who is, even in this day and age, or this 2025 right now, today, is on that 57% percentile that said, oh, I'm not touching it. I will let anyone answer that one.
One thing, I just realized we have the slides right there. So
Great. Yeah, the slides are right there. Yeah. Although it's hard to see, it's better to bear.
Oh, okay.
But anyway.
So just one point on that is that I think the regs tailwinds are coming. I mean, there's never been a better time. We all know that. We're just really waiting for the legislation around stable coins to really show up and get passed. I often say stable coins are the new meme coins in some sense, because everybody is issuing a stable coin these days, right? So, and there was a report from Citibank as well recently, Citigroup, where they said they spoke about stable coins, a market cap from 200 billion as it is today, or 300 billion, whatever the number is, to 3.5 trillion or something like that over the coming 4 or 5 years. And it is just not going to be stable coins being thrown into blockchains. It's going to be stable coins that's also offering liquidity to RWAs. So it's going to be a growth of stable coins, which reflects fiat liquidity on chain, but also that is really providing the liquidity backstop needed for the bonds, the repos, the stocks that's going to go on chain. So it is actually, it's never been a better time for TradFi and DeFi to work together in this industry.
I just want to clarify one thing. You said stable coins are the
new meme coins.
You heard it here first, folks. Stable coins are the new meme coins. At Consensus 2025 Toronto. All right. Blue, what do you think about the regulations part of it?
So what I think is really interesting is that regulatory and compliance are like neck and neck. I think that regulatory is, we've been waiting a long time for regulatory clarity as an organization, as an institution. One of the things I really hope that we all take a moment to appreciate is the SEC's, the amount of technical understanding and knowledge that they have brought to the past several months in terms of what they're doing, the questions that Hester Peirce put out, the roundtables. Like, there is a level of technological understanding focused on providing clarity that hasn't existed before and can be a barrier. Like, this is not easy stuff, as we all know. So I think that is a huge plus. And I think the other one is, it is a steep compliance learning curve when you talk about DeFi, right? So it's very difficult to retool and sort of bring an entire compliance department up to speed, up the curve, when everything they normally focus on works on traditional rails, and then you kind of have to introduce this entirely different way of operating. And I think that it's something that we have to put time and energy into helping people understand. But I think that they can get there.
Right. I want to talk about two things. And David, I'm going to come to you because I know you're very excited about this. AML and KYC. Those were the main barrier for institutional investors to come into DeFi. What are your thoughts on that?
Yeah, if that's the one takeaway, I am very excited about AML and KYC. What's not to love about it, right?
Exactly.
But it's an unlock to a new target market to have permission DeFi, permission pools that are composable with the broader DeFi universe. So individual institutions can choose their risk tolerance for what type of pools they want to get into, but still have the on-ramps to play in sort of the arena to begin with. So that is kind of one of the critical elements. It's going to be one of the challenges, honestly, of the market structure bill, right? Sort of the stablecoin bill, they're going to work through that. They're going to figure that out. The market structure bill, the CeFi stuff, they're going to be able to figure that out. The DeFi element of how you have market structure and how you have KYC and AML regimes that allow for DeFi to thrive, but also allow for compliance to exist. There's just going to have to be some creative collaboration and solutions around that. And Wintermute, we're pretty interested in a solution that's going to allow CeFi and DeFi to thrive, right? We're very active in CeFi, we're very active in DeFi. We believe there's an opportunity for both. And I think, as Blue mentioned, we are fortunate to have regulators now that are very knowledgeable, and not just knowledgeable, that are interested in engaging with the industry to get feedback on what type of creative solutions can be put forward to address those real concerns that will unlock a bigger market for all of us.
Gotcha. Makes sense. I want to address one more thing before I told you about the scenario that I'm going to give you all at the end. Let's talk about the public and private blockchain. Is public blockchain or private blockchain, which one is more attractive for someone who is institutional? An institutional investor, they don't want their transaction to be public, right? We've seen it in TradFi. So how does that work? I don't know. Whoever wants to take that one.
So I think that I feel like 2 years ago, there was like an endless set of panels and working groups, and the question was always public versus private blockchain. And I think that we weren't that vocal about it, but I think if you look at the behavior and the actions of most of the large buy-side firms, we've consistently opted for public blockchains.
Why is that?
So I think that we get Web3 economics, right? So we get the concept of participating in the economics. Two is that we understand that the decentralization actually, as counterintuitive as it sounds, is actually a key pillar of the security of the network. And the third one is if you have a ring-fenced island and something, if I buy a tokenized bond and I can only ever sell it back to the people who were the book runners on the same blockchain that they sold it to me, I'm basically on a liquidity island, and that is a real market structure risk.
Right.
At some point. Like at some point, there will be a day that the market pukes and that system breaks down.
Liquidity,
and like we get that.
Yeah, liquidity. There wouldn't be liquidity where you're trying to sell it, but you can because you're on a private blockchain. Fair. David, did you have anything on that one?
Yeah, no, I just agree that the future really needs to be built out on public blockchains. Obviously, private blockchains have their use case and have their role, but to unlock the value prop of crypto, of digital assets, the composability is critical to have a public blockchain, and to have sort of the efficiency, the speed, the scale has to be public, and the transparency too.
Transparency. Arun, I want to ask you about the same question, but a little differently. What about the security, like the hacks and all that stuff? How does that impact, institutional investors' mindset in investing in public or private blockchain?
Yeah, so when a lot of these institutions started experimenting with blockchain, they started with the private blockchains. Understandably, they were very conservative in their approach. As of yesterday, or in the last 24 hours, JP Morgan has successfully executed the first transaction on a public blockchain, which is great, and that's where the world is going. I personally think private blockchains are obsolete. Even with there was an event in Switzerland last week, Point Zero Forum, and R3 basically announced that they were looking to launch their own public blockchain.
Right.
So that's a statement. It's big for that transition. So institutions are looking at public blockchain. Now, what is the fundamental thing that they need on public blockchains that will allow them to actually create this regulated, controlled space, financial services, while also being able to tap into the liquidity and composability and the app ecosystem? It's really token standards. So if you're looking at Ethereum, you have ERC-3643, and if you're looking at Solana, we have Token 22 standards. And what you do with those standards is you embed all these regulatory controls like KYC and AML into the token itself. You don't need to build protocols around it. The token itself has these standards. So if you're going to send this token to someone, they need to be whitelisted and have their wallet needs to be really kind of the right place where these assets can reside. So without that, you won't be even able to facilitate the transaction. I think those are already live. Those standards are there at the moment. So the rails are there. Now it's about making sure that assets can come at scale. They can basically make sure, and when assets come at scale, it's not necessarily the regulatory risk once the token standards are taken into consideration. I think it's more around liquidity risk. How do we make sure that these assets don't depeg from their real world price, and cyber risk, of course. That's probably the biggest.
Welcome back to the show. Injective, a Cosmos-based blockchain, develops a decentralized exchange protocol that enables fast, secure trading of derivatives and smart markets on a fully open blockchain. It claims to be the fastest layer one and has pioneered cross-chain trading with recent partnerships expanding its ecosystem to include Ethereum and Solana bridges. Joining us now to discuss is Eric Chen, co-founder of Injective. Hello.
Thanks so much for having me. Really excited to be here.
Of course, thanks for being here. I didn't mention in the chat that we just had with Leah that I have a Consensus Moose here, and I would just like to showcase him because he's so cute.
He's so cute.
I know. All right, we're going to talk about serious things, but Leah and I were just talking about what's going on here at Consensus, how nice it is to see everyone IRL. Even you and I have spoken over video call. Talk to us about your highlight of Consensus so far, or maybe what you're looking forward to.
I think one of the coolest thing about Consensus is that it's a perfect platform and venue for me to meet old friends and new. I'm really excited to talk about kind of like the merging of DeFi and TradFi at the panel earlier today. And of course, this is just my first day at Consensus. I think there's going to be a lot more exciting things I'm going to be talking about and discussing with folks here.
Well, let's talk about Injective. So maybe you can tell us a little bit about it, but also I know that recently you've had some integrations with Solana and Ethereum. I was wondering how that's actually impacted, say, things like trading volume, the users.
Yeah, certainly. I think recently one of the most exciting initiatives that we've been working on is a multi-VM layer, which allows for different types of Solana dApps and also, more importantly, Ethereum dApps currently to deploy on top of Injective and to really synergize with the existing ecosystem within all the Injective dApps. This means that in our upcoming testnet for the EVM layer, we kind of unlock this plethora of Ethereum developers, bringing billions and billions of dollars of TVL activity and millions of users onto the Injective platform, and unlock the true synergy for the very first time between the enshrined Injective DeFi layer and also the plug-and-play modules, and also with the Ethereum dApp ecosystem. And of course, like even today, I think Upshift has launched a vault targeting institutional yield that allows for Ethereum USDT deposit for trading on top of Injective to generate a target 30% yield. And of course, that coupled with iAsset has just been absolutely tear for the Injective ecosystem for the past month.
You mentioned the convergence of TradFi and DeFi, and I have to say, I know Consensus is just getting started, but that really has been the common theme in a lot of the conversations that I've been having here at this desk. What do you think it is about where we are right now in the space that is making it possible for TradFi and DeFi to come together to enable this mainstream adoption that we've been talking about for so long?
I mean, times are very much changing. Basically, what we're seeing right now is a complete floodgate of institutional capital, of regulatory clarity, and also a collaboration between industry leaders and also policymakers for the very first time in the history of this industry. And this means that not only in the US, but also for the entire global audience, everywhere is taking a very serious step towards recognizing and also adopting crypto and truly onboarding into the on-chain world. And this is the very first time that we, as a DeFi-focused chain, started to really interfacing and really kind of accepting and onboarding different types of financial giants of the TradFi world to really kind of showcase the advantages and the importance of DeFi in the on-chain world, and really bring them true value for DeFi users and TradFi users alike.
All right, and Eric, if you look at your roadmap ahead for the rest of 2025, any one piece, one moment that you are really looking forward to?
I think it's our multi-VM launch. First, we're going to start off with EVM, and later on we're going to be expanding to other smart contract environments. And this not only unearths all of the developer base, but also all the institutions are coming from all walks of life that are familiar with any type of a smart contract or on-chain environment to be able to co-locate and deploy and synergize at the same place. And of course, there's been a lot of very exciting asset issuances that are going to be happening on top of Injective beyond iAsset, which has been primarily consumer-friendly product, and we're really much looking forward to that.
Eric, thanks so much for joining us at the desk. We hope you enjoy the rest of the event.
Thank you so much.
Great. That was Injective co-founder Eric Chen. All right, we are at Consensus 2025. As you know, we are coming to you live from the CoinDesk studio. So let's take a look at what's going on social media now. All right, we have EZA on X, a mega workshop being delivered by Ninja Code on our EZA Consensus 2025 hackathon main stage right now. The hackathon is going on right now, Leah, and this is the largest blockchain hackathon in North America. And just seeing, I know that's a video, we can't really see the video now, but that's a lot of people.
That's a lot. Yeah, I actually got to judge the EZA hackathon in Hong Kong, the last consensus event, and some of the ideas that came out of there were absolutely fabulous. I was so impressed with the quality of the teams.
I love that. We're going to check out the hackathon in just a little bit. Let's take a look at what else we got going on social media. I loved this when I saw it on X earlier today. We have Michael Stewart who said, time to find out which building holds the most whales. And Michael's photographed in front of Ripley's Aquarium, which is right here in Toronto, and also in front of the conference center. So which holds the most whales, do you think? The aquarium or the conference center where Consensus 2025 is right now? Someone in the audience is saying here. I think the most whales are here.
My money's on Consensus, yeah.
All right, and this one I cannot read, but I do see Charles Hoskinson there. You said that you're on the booth with Midnight. I didn't bring my glasses, so people who are watching this are going to have to read that tweet. It's very long, and this is my own doing because I chose that tweet to go there. But I think that this tweet really encapsulates the fact that you can come to Consensus, you can meet the people who you idolize, you know, the people who are building the projects that you really love, and you can also meet the people who think like you and who envision the same type of future, which I think is awesome.
Yeah, it's such a community spirit, and I love that people who have been around for so long and have these like larger-than-life personalities, they're all completely accessible here, just hanging out, chat to the fans. Love it.
Love it. All right. If you're at Consensus with us in Toronto, or if you're following along from home, share your favorite moments with us and tag Consensus 2025. Also tag us at Consensus 2025 or on CoinDesk, and maybe we'll share your post on this broadcast. Okay, let's get to our next interview now. Arculus, named after the Roman god of safes and strong boxes, is a cold storage wallet offering secure digital asset storage. The company recently partnered with MoneyGram to enable users to easily convert cash into USDC. Joining us now to discuss is Adam Lowe, Chief Product and Innovation Officer at Arculus. Adam, how's it going?
Great, happy to be here, always happy to be at Consensus.
Okay, we got to talk about this MoneyGram partnership because that's huge. Talk to us about what it entails.
Absolutely. So we already partner with some of the largest banks around the world, some of the largest fintechs, enabling payment and blockchain all in one. And we really wanted to go beyond that, right? The unbanked, underbanked, people who need remittances. So we make it super easy anywhere in the world to essentially on-ramp via MoneyGram, cash in, and then cash out globally. So that's all done in partnership with Stellar and the Stellar Development Foundation. So all of those assets ride around the rails. And then when you want to cash out, you can get fiat anywhere. And it works on the Arculus platform. We're the first hardware wallet to integrate. So when you do have those funds on USDC on Stellar, they stay safe with your keys in your pocket and your Arculus card.
How does this align with your long-term strategy?
Yeah, so I liken it sort of to the 1890s and the railroad, right? Everybody was building rails on different gauges and they had to interact. So we've done traditional payments for a long time, and Arculus is that intersection. So whether you're doing payments on Visa, MasterCard, MoneyGram, et cetera, sort of Web 2 payments, going into the Web 3 world, we can do all of them. So we help people easily, without all the complexity of blockchain, on-ramp their assets on-chain, be able to spend globally, right? So like my corporate card is my hardware wallet, it's my passkey, and it spends at every Visa terminal around the world. So I can spend natively on-chain, I can spend on Visa and remit stables, and we make all those trains and rails interact.
Amazing. Okay, so I know we're not allowed to keep you too long because I think up next you're actually on the summit stage
I am on the
doing
summit
a
stage.
talk. It is titled Are Your Funds SAFU?
Yes.
So I want to ask you, in terms of keeping our funds safe, what do you think people are not talking about enough?
So I think what people aren't talking about enough is everybody's trying to on-ramp quick and get people on platform, right? So a lot of times you log in with social. Well, if someone hacks your Gmail account, they instantly have access to your funds. So I think sometimes we conflate security with friction or being hard. The Arculus card and the Arculus platform passes the Adams bomb test, which means I can give it to my mom, give her no instructions, and she can use it. So security can be safe and easy to use. So if you can tap a card to a payment terminal, you can tap our card to a phone, you can keep your keys safe, and if it's a centralized platform, you can tap and securely log in with a passkey. So what people aren't talking about is, it's easy to hack an email address. I go to Black Hat every year, I go to DEF CON every year. It's a problem. So don't keep your assets safe simply behind an email address.
What do you think needs to happen to help increase adoption of hardware wallets, and I guess also help people understand that security is not hard, and it's also necessary in the world that we are heading towards.
Maybe more people need to hire their mum as head of QA.
Yeah,
exactly. You know, I think it's challenging. I think it's just an education piece, and like people have busy lives, they don't have time to do due diligence and everything. You know, that's where you're trying to get the word out on platforms like Arculus, you know, trusted by the largest banks in the world, trusted by federal governments to make federal IDs. It's the same chip as the US passport. You know, whether you use us or use someone else, use something to help keep your funds safe. And I think that, you know, people.
Does your home have an RTS meter? It's a switch box near your electricity meter, often labelled radio teleswitch. From June, the signal that controls RTS meters is being switched off, and some homes could lose heating and hot water. So if your energy supplier has contacted you about getting a new meter, act now. The RTS switch off is on the way.
Chief Product and Innovation Officer Adam Lowe. Coming up, Ava Labs President John Wu on the latest developments in the Avalanche ecosystem. Our next guest is the president of Ava Labs, the team behind the Avalanche blockchain. Avalanche has shown its versatility across industries, bridging gaming, DeFi, and now TradFi on chain. John Wu, welcome to the show.
Jen, it's great to see you. Hi, Leah. How are you?
Of course, great to see you. I mean, the last time I saw you, I think we were in Buenos Aires, where CoinDesk is going to be with the rest of the Avalanche folks in London after this. Talk to us a little bit about how the year's been for the Avalanche ecosystem.
Oh, the year's been fantastic, and we can't wait to have you in London. The summit's in about a week, so I encourage a lot of people to go there. The year's fantastic. It's becoming known that Avalanche is the tested and trusted chain for institutional clients. We've done many projects with Apollo, JP Morgan, Wells Fargo, Wellington, you name it. All the major banks and alternative asset managers have been working with us. On top of that, we still have a huge presence and a dominant presence into, call it, crypto native world, because it's the only way the place where the scalability happens in a way that allows developers to have their own blockchain on the Avalanche network of networks.
What gives you that competitive edge, do you think? What is making the Avalanche ecosystem so appealing to institutions that I am sure have multiple more levels of scrutiny that they have to go through when choosing an ecosystem to work with?
It's a network of networks. So if you are an institution, you need certain requirements that a crypto native application may not need. You need privacy, you need the privacy from a transaction to possibly other things, you need regulatory compliance. So the security and the network happens at many layers. It's not just a whitelist for who can come in to do KYC, AML, or accreditation, but it's also at the network level, and you can run your own, call it proof of authority blockchain, that has the optionality to connect it to all the other proof of stake blockchains that are in this network of networks.
So I think subnets, can we talk about subnets for a sec? Because I think that's been a really big part of your scaling story. What are some of perhaps the most creative or surprising use cases you've seen so far?
So subnets used to be a term. We're calling them L1s now.
Got it.
Because subnet gives the wrong impression, because these are all your own blockchain. And you can customize it for the specs you need for whatever you want. Again, the institution, they may need privacy, they need regulatory compliance, they need to control who comes in and out, and that's one type. Another type, you just need lots of throughput and transactions. So one of the areas that are super exciting is gaming.
I knew you were going to say that. Congratulations on all the success with Off the Grid. We've been very much
talking AAA games. We're not talking, the
Yeah.
old school games, which those are fine too. We love those too. But like, there's a company called Nexon, a publicly traded company in Asia.
Largest gaming company in Korea, I think.
Largest gaming company in Korea. It actually trades publicly in the Tokyo exchanges. But they have a game called MapleStory. MapleStory's been around for 15, 20 years. They have over 250 million users. And they are creating an instance on an Avalanche L1, artist formerly known as Subnet. And so far, in just like this early launch, they are creating 10 million plus transactions a day. It is massive right now. And that's just one example. We're hoping a lot of that 250 million people will now come, and those consumers will be using the Avalanche blockchain as a whole. We also see a company called Gunzilla. Gunzilla has this game. They spent $100 million in traditional funding to create an unbelievable game called Off the Grid. And they're creating a marketplace for all the in-game items, again, on Avalanche. And so they need a different customization than, call it, Apollo, large alternative asset manager would need. And the Avalanche infrastructure allows you to have your own blockchain customized for whatever you need.
I guess, is the mark of success for Avalanche, not being talked about, like fading into the background and powering use cases for, like Godzilla Games and MapleStory, and not having the users know that they're even in the Avalanche ecosystem? How are you thinking about that?
Well, listen, I think right now you have to be out there and basically give the world an understanding what the benefits of blockchain is, especially open permissionless blockchains, and Avalanche, because there's different value propositions. But all the people in this conference right now, if they were really deeply honest with themselves, the hope is in 5, 10 years, the functionality, the efficiency, and the productivity is all done without anyone mentioning blockchain at all. That is the future, and that is the hope.
It seems like these days when you talk about blockchain, you have to talk about AI. I'm noticing it here at Consensus. I know that Avalanche has the InfraBuild AI program, and that is really to attract interesting AI use cases into the ecosystem. Talk to me about what you hope to achieve with that program and how it's going.
So the longer version is this. I just wrote an AI and blockchain and how they work together, and it was just published today in the American Banker Association, the ABA. So I think that's a very TradFi magazine, but if anyone here is in TradFi and wants to read what I wrote, they can go there and read my article. But pragmatically, I think you have two transformative technologies converging in the next few years. AI, obviously, especially the AI agentic world, is going to make all of our lives better. There's going to be your agent, Jen, your agent, my agent, and our agents are going to interact with each other.
We won't even need to be here. We can have our agents just do the show.
My agent will talk to your agent.
Yeah.
Possibly. But all those agents are going to be, the data is going to be created like crazy. Agents are going to be all over the place. There needs to be some provenance and some understanding of the history of what these agents, as well as the underlying LLM models, are doing. So the blockchain being a great place for a ledger for provenance and for all that will serve this crazy world of AI, especially in the agentic world. On top of that, I think there's going to be a thing called micropayments. Visa cannot do things under $1, at least efficiently. And when these micropayments happen, if people want to go to CoinDesk Live, imagine a world where you don't have to pay a subscription for the premium subscription. You just want one or two things, and that data or that information, you don't want to pay $20 for a month or something. You just want to get bytes and pieces of it. So maybe you want to pay, call it milliseconds of the data, like cents for that. These things can happen in an automatic way, and they can just talk to each other that way. You're going to need the stable coins and then the blockchain rails to do that.
So on this, still on AI agents, I read that in the program there is something called Alfred, and Alfred has been optimized to have VC-like traits. So can you talk to us about that? What's Alfred actually doing? Like, does he assist with the evaluation process for VCs? Is that how it works?
Alpha is something, so it's very cool actually.
Okay.
And there are others also doing similar things. If you look at a lot of the funds that exist who invest in not just our space and other space, they are now banks as well. For better or worse, the lower entry-level analysts, if you will, they are somewhat getting replaced, or a lot of the functionality is getting replaced by these AI agents. So when a VC firm goes and decides on what their portfolio is, and they do due diligence on whether this company is good or not, what they do is you collect a lot of data, you analyze it, you come up with insights, and then you go to a committee to make decisions. Alfred is a way that you don't need as many of the analysts from the early days, so it becomes a more efficient firm, and you can go to committee much faster as well. So it is, think of it as an assistant or a junior analyst.
Has Alfred presented any challenges?
Well, I am part of Ava Labs. This is an Avalanche Foundation thing.
Got
so
it.
I think it's helped and not presented
Right.
challenges. I think any challenges you do see will be the same challenges anyone else is seeing in terms of how well the information and the insights are coming back.
Now, the last thing I want to ask you is about the Consensus Conference itself. It is in Toronto for the very first time. Talk to us a little bit about what you're looking forward to over the next few days, but also about maybe the significance of having a crypto conference of this scale in Canada.
I think it's really cool. I mean, obviously Toronto has been very deep into tech and in the crypto world for a long time. There's some great founders who came out of Toronto. I think it's about time that the city is able to host the premier event of the space.
Amazing. Well, thank you for joining us here at the desk. Thanks for being with us at Consensus, and I know that we will see you in London next week.
Look forward to it.
That was Ava Labs President John Wu. Thank you.
Okay, ladies and gentlemen, Consensus 2025 still going on. There is a lot of good stuff that are coming up, man. I must say I wasn't really expecting it, but they've moved from the world of cryptocurrency, DeFi, staking, and now we are gradually entering into AI and its significance, what it can do, and how the future is looking as of now. And we can clearly see with some of the stuff that they were talking about, I personally, I'd say it's going to be a very scary one, having AI do everything. I don't mind, as long as they are doing the right things and regulations are in place to make sure, because no matter how good you want to do something, there will always be someone also wanting to do it the other way. And therefore can be very, very, can affect you in so many ways. So we're going to go over again. It's good. The break is over. We're coming back. Let's see what's next on the agenda.
It's ladies' day at
It's
Consensus.
ladies' hour, but it's
Okay.
only 3 minutes. So
The best 3 minutes of the whole day.
it is the best 3 minutes of the whole day. I mean, Christine, I know you took a little break there. What did you get up to?
I mean, there are so many interesting sponsors, booths. I am wearing the chipped NFC nails. They have a booth here.
Did you get them put on there?
I put them on myself.
Oh, okay.
But they had 100 at the conference, sold out within an hour.
Oh, wow.
But they're NFC chipped nails, and you can, I guess I could go to your phone, you'll get my contact information.
Okay, let's try. So how does it work?
Oh my God.
Let's do
I don't
it.
know about doing this.
Okay, no, we're not going to do it on live television because whenever I've tried that, it never works. But what are you? So you tap your nails on the phone and then
We're going to
give it a go. We're going to give it a go.
We're going to try. Okay, here. Is it?
It's not working, but maybe if I unlock. Okay,
Okay.
they definitely work, but live television is not conducive to these kinds of demonstrations.
Didn't quite nail it.
Oh, that was a good one. All right, NFT nails. I have a consensus moose.
Oh.
For Canada, it's kind of cute.
A noble animal.
A noble animal.
Why don't I have
Of the
one of
north.
these, and how do I get one?
I'm not sure. I stole it. So.
Okay.
Yeah.
Steal it. Good advice.
All right, let's take a look at our prediction markets. The question that we've been asking all day here at this desk is, will Drizzy Drake make an appearance at Consensus? We are in his hometown, so the chances are higher than if we weren't. We're taking a look at the poll right now. It looks like most people think he is not going
I'm
to be
rooting for
here.
the 12%.
I'm rooting for the 12% too. I mean, maybe Drake is going to be here, and yeah, you'll have to wait and see. There are still 3 days for Drake to show up at Consensus. You can go over to myriad.markets to take part in that prediction market. There are 3 other prediction markets that are on Myriad Markets right now. 3 of the 4 are just for fun. They are, will Drake show up in person at Consensus 2025? Will Eric Trump mention President Trump more than 3 times? And will MoonPay President Keith Grossman tweet more than 20 exclamation points during Consensus? There's one market that you can bet USDC against, and that is, will Bitcoin hit 110,000? Bitcoin hit 110,000 during Consensus. Joining on the phone. Bitcoin hit 110,000 during Consensus. Joining on the Bitcoin hit 110,000 during Consensus. Joining on the fun, like I said, on myriad.markets.
Wow.
We're going to take a quick break. We'll be right back.
We're back again, ladies and gentlemen. The Consensus 2025 day one still ongoing and it's still making waves all around the globe. There have been talks about the Pi network, which announced, I think, a couple of hours ago. Its big announcements, which we're looking forward to, is finally in, and that has to do with the fact that Pi Network has released or has made available 100 million United States dollars as an incentive towards its ventures, meaning that Pi Network has made this money available to any developer, whether you are being on the Pi Network or you're coming into the Pi Network, who is looking for capital or that which you need is capital to develop real world usage apps or softwares or whatever it be with the Pi network in mind. Okay, in quote, the Pi network. So it has to be Pi focused and has real world utility and usage. So sometimes, I mean, they've realized some people have the ability to develop and create. A lot of developers can do all these things, but what they lack is capital, and that has been made available. $100 million. That's a lot of money. And big up to the Pi network. Pi, we're going places all the way to the moon.
Look at this. Consensus
So
is popping
let's
right
go
now.
back
It's just like
in
the open money
as the
stage.
break is
It
over.
is standing room only. So there's a lot going on right now.
There is a lot
The
going on.
lines are long outside. That's what I'm hearing. That
There
the
are some long
security,
lines.
the lines for the badge, but a lot of people are just very excited to get in and get on the floor and see what's new in Web3.
The lines are also really long at the food hall, I must say. Everyone is enjoying the food here at the conference center. Our audience hasn't seen Debbie Soon yet, so I just want to introduce Debbie. Debbie is the author of Digital Mavericks. Her book is with you there in front of you, but you've also been hosting some segments around the Consensus 2025 conference floor that we're going to see later on in our programming. Talk to us about what you've been seeing.
Oh my gosh, I think the excitement here has been so great. It's been so fun to see all the different activations. I love the Blockbuster Revive store with all of these vintage DVDs, because videotapes, oh gosh, and there's like a nail salon. Just feels like there's so many things to do and so many things to see.
We've been seeing a lot of that, these older brands being repurposed for Web3 and just rejuvenated with the digital age.
One of those brands is Enron, and Sam, I know that you had Enron on your Gen Z show.
Mhm.
They have an egg in their booth. What's going on there?
The egg, I believe, is an at-home nuclear reactor.
Okay.
From what I've heard, they are trying to reinvent energy. Now, I'm not positive it is a legitimate device. Exactly.
I'm hoping it's not a legitimate device.
I mean,
But I like the idea.
we are in
Only
an
one
energy
way to find
crisis.
out.
Yes, we might need one of these in our home, but they have it in their booth, along with some other fun mannequins, and people just love the Enron brand. I think because they were so chaotic back in the day and like one of the biggest financial scandals in history. So now that they're back, and you know, the Enron team is the team behind Birds Aren't Real, which is a meme that's been around for years and landed them content deals, and they really understand viral media more than almost anybody. So now they're trying to reinvent that with creating a new energy company.
I know DeLorean is here, Christine, and you're going to be featuring them, I believe, on our programming tomorrow. Another little blast from the past. What's going on with that?
The Back to the Future car is on the conference floor. We've got a lot of observers taking a look at that with the mementos from the Back to the Future movie. But this is a very interesting story in the sense that the This is a very interesting story in the sense that the folks at DeLorean Labs had a chat with the DeLorean family, and really wanted to revive the brand and convince them that they were the ones that would be able to do it. John DeLorean, of course, a very controversial character in American history. He created incredible cars, which look to me a lot like the Teslas we're seeing on the roads these days, getting back into fashion, but they were doing it way before, decades ago. And unfortunately, John DeLorean got into some trouble with the law and had to go to jail and just had a very roller coaster ride of life and history. But he had an energy, a pioneering spirit of, I'm going to do the impossible. And I think that is something that many folks in the crypto industry can relate to. And so they are repackaging that and recreating it for the Web3 era.
That's awesome. Now, so many of these people here are digital mavericks. Debbie, you have your book, Digital Mavericks, and in front of you. Tell us a little bit about the book. What kind of stories are in there?
Yeah, oh my gosh, the most incredible stories. I call it a 50% guide to how does one enter, but more importantly, navigate this crazy world of crypto and stay sane through the ups and downs. I'm sure we've all lived through it. And the other half is really just inspirational stories of how people even entered the space for the first time, like my co-founder Randy Zuckerberg and Jesse Pollock, who's the creator of Basic Coinbase, and a lot of artists and collectors as well. And I find that their stories are so relatable, and it's just so fascinating how everybody took their own different path, but yet somehow we have all chosen to be here, and we have all chosen to build in this wonderful world of crypto.
It's kind of a representative of all four of us.
Yeah, exactly.
Are NFTs coming back?
I would like to say that I think we are back. We had actually a really big day in the digital art space yesterday. We had Rafiq Anadol selling $5 million worth of NFTs. We had the CryptoPunks NFTs being bought over by a nonprofit. So yeah, it's maybe a little bit early to say that we're so back, but there's some little spots that I like to look to.
You tweeted that we're so back this morning.
I did because I saw this blockchain video booth, and I thought there was nothing more back than VHS tape.
Did you get the card? You can get a card.
I have not yet.
Yeah, you got to get your blockchain video card. You're going to load it up with some cryptocurrency, and you can buy a vintage poster.
We will be doing all of that. It's the acronym booth, right? I'm not really sure what acronym does. I'm hoping that we at some point cover them and we'll figure out more, but
we're talking to them later on.
There we go. We'll have them on later. I would say, though, that here we are in Canada. We are in Canada. For the three of us, we were in Hong Kong earlier this year. We were in Austin last year. What feels different about being up north? You guys are natives. So other than just being able to get some home-cooked meals, what are the things that makes this show feel particularly Canadian right now?
Well, I think we're seeing different brands, and so it speaks to the nostalgia I had growing up and seeing the DeLorean, the Enron, and the blockchain video or blockbuster video. So I guess it speaks to our audience in North America, whereas but Hong Kong also was incredibly buzzy. It also just had a lot of energy to it. So, I mean, I'd say it really is global. That's what I love about crypto. It's that wherever you go, you can find a home. And it's exactly the way you envisioned it in terms of having imagination, being innovative, and having an accepting crypto community that wants to hear your ideas.
You know, I got into blockchain when I was doing my MBA at the University of Toronto.
All right.
And so
So,
my
ladies and
journey
gentlemen,
started in Canada. It started
just before I forget, yeah, a lot has been said. If you're tuning in to this show, my name is Emmanuel, or you can call me Hobbs Global. Okay, if you're first time coming here, you're welcome to Hobbs Global. We talk about cryptocurrency. We discuss about things that really matter in the crypto space, and primarily I focus on Pi Network. Okay, and then also other crypto. Now, I'm going to quickly chip this in, and then we can go back to the consensus. As you can see, right now they're talking about different topics within the crypto space, trying to ascertain and see if NFTs are coming back at some point. NFTs were a big thing in the crypto space. Okay, so I think we're going for a break. Okay.
I'm the author of Digital Mavericks, a guide
So
to
this is
Web3
Debbie.
and
Let's
becoming
just
the
hear
main
Debbie.
character of the next internet revolution. We are about to speak to former professional, hostage negotiator, speaker, and author Paul Nadeau. Thank you so much for joining us at Consensus 2025. So what are some of the things that you can translate from your learnings to this audience?
We have to focus on what we can control and not what we can't. When a person comes to any type of business or even personal matter, and they're focused on the other person, what is it that I can help you with? How can I help you? My intent is focused on getting you to where you want to be. It is asking those questions. It's being involved. It's being engaged in understanding what the market is, understanding, hey, here's where we were, here's where we are right now, and here's where we're going. How can I help you? Those 4 words, my God, how can I help you, are the gateway to connection and to rapport. Because people will deal with you when they know you, like you, and trust you. I'm going to have a talk with, someone, a very difficult talk. I've got to plan how I'm going to approach. I've got to listen. I don't tell the hostage taker, this is what I want, and this is what you're going to do. I'm going to say, how can I help? What is it that I can do? Planning, the intent, the engagement. So we've asked those questions. We've shown that genuine interest in the person and getting them to where they want to be.
Yeah.
That equals the R, which is a relationship.
Right.
This is what we want with any client or customer, a relationship. The important thing in determining lies or deception or discomfort is watching the facial expressions, the micro expressions, and trying to determine what we call a homeostasis. What's the norm? In any negotiation, whenever possible, take a few minutes to talk to the people about, hey, what do you think of the conference? Isn't this great?
Yeah.
What do you think of the weather?
Yeah.
Like, did you travel here? So we get to know each
Yes.
other. But
Establish a baseline. Yeah.
That's it.
Yeah.
You got it. You got it. So that's exactly what you want to do, so that when I get into that content,
Yeah.
the important conversation, I'm going to be taking snapshots of you and seeing where is it that the change has come.
Yeah.
It's so important to evaluate always, identify emotions, everything.
That was interesting. So I think he's going to come back to the decks. But while we wait for them to come, let's hit on some few things.
All right, we just saw some
Oh,
tips
well.
from a hostage
They didn't even
negotiator
give me
as to
time
what
to
can
talk.
happen on the consensus floor. BitGo has positioned itself as one of the leaders in institutional digital asset custody and recently became the largest staking platform in the world by total value locked, with $48 billion in assets staked. Joining the show now is BitGo's Chief Revenue Officer, Chen Feng. Chen, welcome.
Thanks for having me.
Thanks for being here. We were just talking about how 5e consensus is, how great the conversations are that we're all having. Before we get into the nitty-gritty of our chat here, what have you been up to? What's the highlight been so far? What are you looking forward to?
Look, it's a very well-produced conference, one of the best, in my opinion. I was just on stage with Justin Sun, some other folks as well. The production quality is next level.
It's really awesome. In terms of the vibes, yeah, like it's packed here in Toronto. You guys had a successful event over in Hong Kong. Great second conference of 2025.
I asked that question so people can give us compliments.
It works. I'm also going to give a compliment. You know, BitGo is one of our partners here. They spoke to the main stage, so we get to see you guys everywhere. Not the first time you've been involved with us, so thank you for also your partnership. I'm wondering, you guys are the biggest stakers in the world right now. We have some questions, but I want to ask this question first,
sure.
Which is the idea that does the average retail investor understand staking? Because it seems to me once you unlock that, then you start to see how your money can really work for you.
I would say most retail folks that's in crypto through various educational campaigns that our lovely exchange partners here in the US and overseas have done, most people get the basic concept, right? It's a way of securing the various networks that you're staking towards. At the same time, you get a bit of kickback, right? Via these staking rewards that's being generated and sent back to your account. So I would say yes.
From an institutional side, talk to me a little bit about the opportunities and challenges. Like, what are institutions saying when it comes to staking, especially when it comes to the varying different regulations that we're seeing around the world?
Yeah, so there are a lot of various takes on staking. I would say the vast majority of I would say the vast majority of regulators around the world do not have specific I would say the vast majority of regulators around the world I would say the vast majority of regulators around the world I would say the vast majority of regulators around the world do not have specific frameworks in place for staking. It's definitely more in the gray area. However, if you look at what you're able to do with the coins that are currently in custody with you, if you're not participating in staking, you're effectively losing money, if you think about it, right? The rest of the total value on the chain is being inflated, and your number of set coins is staying static. Number of set coins is staying static. So because number of set coins is staying static. So because of this, every large holder of stakeable coins is knocking on our door asking for set services. Even our friends who love Bitcoin services. Even our friends who love Bitcoin. Even our friends who love Bitcoin. BTC Vegas is coming up. Those guys are also interested in yield, interested in ways that it's possible to make additional Bitcoin from Bitcoin. So
All right. So seems the connection error came in a little bit, but we'll get it back on, and we'll be back to consensus again. Like I said, the Pi network. Before I reconnect, just to say the Pi network is active. The news is out now. As to if this is the main announcement that was announced, it is a big news. At the same time, too, I think there's more updates that are going to come through, and we'll be here for it and waiting for it. 100 million down for any business or any firm that are serious about creation of, on a global scale, apps that can be used on the Pi network is welcomed to participate and receive portions of this huge amount of money from the Pi coins or from the Pi network, which is, I think, is a great deal. A lot of pioneers, a lot of web developers are going to pick up on this. If you have great ideas of developing something, and all you need is just the capital, the idea is there, but you don't have the finances to be able to fund these ideas into real world utilities or real world usage wise. Well, the opportunity is here. $100 million is available. And I think this is an opportunity that a lot of people are not going to miss. So it's going to be great. It's going to be great. And it's going to be nice to see. Absolutely going to be nice to see. So, seeing the connection is back on. So we're going to see how it goes. Right now, there is a lot of talk. Most of the CEOs are coming on board right now. Mostly, this like a day that you don't get every now and then. It comes once in a while. So when it comes, you make good use of it. You stay true to it, and you stick with it to the very end. And that's why we are here, down to the very end of day one. We're going to be here bringing you up-to-date information, making sure that you are getting the best of the best. Because it's a one-day thing. Therefore, it's good to stay relevant. Okay, stay relevant and stay true to down to the very end.
Easy access to removing that friction. Is that sort of the way that you're also pitching this to your partners?
Yeah, I think sometimes it's about friction. Sometimes it's just things that are not doable in some regions, right? You look at examples like the decaf wallet, the non-custodial wallet, very big in Latin America, and they're serving communities that historically have just not have had access to the same financial instruments that you and I have, whether it's in the States, Western Europe, or other places. So they're actually getting access to these financial services. And like you said, we started out with stablecoins and payments. I like to think about these as kind of like the infrastructure layer, if you want, the checking account of this on-chain economy. And now that we're already there and we have this infrastructure, we can move on to things like, for example, like savings account equivalents with these type of like bonds and more kind of like conservative yield-bearing instruments. And then we can actually also introduce the more adventurous DeFi primitives, frame them as like your investments account, and basically build effectively like neobanks without, in places that historically just haven't had that infrastructure.
Do you feel, so when I got into the space, there was a lot of talk about accessibility, right? Like that's what all of this technology does. It gives people who previously didn't have access to these systems that have created monopolies all over the world access, right?
Yeah.
Tell me what you think. Have we as an Okay.
So I think, every year there's like a new narrative. Every year something like big is happening. A lot of times it's negative, I think, use cases, and I think a lot of times they're positive with like RWAs and institutions, but at the end of the day, I do think that a lot of times on the institutional side, we make things better on the margin, but for the retail and especially people in these kind of like less included regions, we can actually make a much more significant impact. And you look at the network of on and off ramps that we have, MoneyGram is the biggest one with more than 400,000 agents around the world. Like these agents are located in locations where you just don't have access to traditional finance. Banks are not active. We see war zones, for example, in Ukraine, in which we're working with the UNHCR on dispersing aid. Like a lot of these financial institutions are not there anymore, but MoneyGram are still on the ground and we're doing disbursements using them. So the retail inclusion story has always been there. It still is. Unfortunately, with the narrative, sometimes it goes back and forth.
Tomer, thanks so much for joining the broadcast today. We hope you enjoy the rest of Consensus.
Thank you. Have a great day.
Thanks, Tomer.
That was Stellar Development Foundation Chief Product Officer, Tomer.
All right, ladies and gentlemen. Yeah, struggling there a little bit for a minute, but finally got it through. So, like I said, we are on a mission and we are still on Consensus 2025 and it's still ongoing. Hold on a minute. Okay.
Canadian musician Rain made us championing the fan-artist relationship through his latest venture, FanDrop, a platform that lets artists take ownership over the communities they've worked so hard to build and foster. The Our Lady Peace frontman joins us now. Rain, welcome to the show.
Hey, pleasure to be here.
Pleasure to have you here. We're talking about the fan-artist relationship, right? Something that I think that you are deeply in tune with. Yes. Talk us through, I guess, the evolution of that from your career.
I mean, the genesis really is, I've been playing out live for 25 plus years. It's really biblical for like 2.5 hours on stage every night, having this intense relationship with the fans, whether you're in a club or an arena. But then the lights go up, they all walk out, and they're not anonymous to me. promoter, tickets, social media. Everyone kind of knows who these people are, but now I have to go pay to reach them. So the idea was understanding this is this pain point for artists not having ownership of that audience. It's not working anymore, you know. So the idea is with FanDrop, it's like they're there to see you. Don't let them walk out anonymous. And so we just developed this technology, geo-based, you know, kind of location-based marketing, basically. But it's to reward fans, but also get them invested in that direct to, you know, not D2C, direct to fan relationship.
And Rain, I think about the old days, and I'm on the older side, right? But I remember sending in a self-addressed envelope to like the Beastie Boys fan club, and
I did that.
You get a letter, you get a pin, and I never thought about it through that lens of they were building a database of people they could go direct to.
Yeah.
And with Spotify, with Apple Music, that's gone. Right?
Yeah.
So it sounds like what you're trying to do with FanDrop is about trying to reconnect the idea that an artist can have a one-to-one relationship. And how much do you think fans are willing to go that extra mile, especially when the convenience of a Spotify go that extra mile, especially when the convenience of a Spotify just makes it easy?
Well, I think fans are actually, they want that connection, and they feel like, it's not we haven't been duped. Like, I get Instagram and TikTok and stuff, and the and the unfiltered look that you get on that. And fans feel like they are connecting with you, but they really aren't, because connecting with you, but they really aren't, because now that they're starting connecting with you, but they really aren't, because now that they're starting
All right, ladies and gentlemen. Seeing the network just keep going. But anyway, let's have a talk. Let's have a talk. Let's have a talk. Now, consensus is going. The consensus 2025 is going on. I know a lot of people are very much confused about what is going on. Some people have been complaining about the fact that they don't really understand what you're talking about, etc. It's all crypto. It's all AI. It's all about the technology and upcoming technology, Web3, etc., and etc. And there's a whole lot of jargons that comes in it. However, I'll try and compress everything, try and break it down, make it much more easier, tell you the relevant information that you need to know, stuff like that. First off, just to say that there is a lot that's coming onto the year 2025, 2026 with regards to cryptocurrency, AI, and anything technological, Web3 that has to do with cryptocurrency. And that is from 2025, 2026, possibly 2027, there is going to be a lot of legislative or legalization that's going to come into the web frame of cryptocurrency. It is going to be there has to be some form of legalization or legal framework which some of these crypto firms will be able to follow for successful acceptance by the government for and easily adapted for its use within different countries, primarily America, with one of the massive biggest amount of population wise that are more than willing to engage in the crypto space, obviously for gains and not for losses. So, in order to avoid the bad actors within a legalization or government form of laws or rules or regulation has to come in. Now, the whole point of crypto was to avoid the typical banking systems. However, in my opinion, I think sometimes we are going a little bit back into those sectors, especially. But I mean, the government have made in such a way it's impossible, and the bad actors have also further pushed this agenda, making it something that has to be done, and hence what we are seeing in the space on a regular basis. Not because we want it to happen that way, but it has to happen if progress is expected to occur, and that's what we are seeing today and any other day, and it's still ongoing. So yeah, that is the first thing. Now the second thing, or the number two thing that has been set for today, which is day one of the consensus 2025, has to do with the likes of what the stable coins. Okay, what is securities or using the stable coins as a means of security, or as a means of holdings for futures, and also as a means of like treasury, etc., and etc. So all these things were talked about, where the potential to use cryptocurrency or to hold cryptocurrency as an asset for a long term. So basically, meaning the ability for you to hold your cryptocurrency as an asset where it appreciates. For example, Bitcoin appreciation. Bitcoin is currently like totally accepted as an asset, and hence it has solidified itself within the crypto space. Other ones are coming. Some of them have been through they are passing through the fire, with the likes of XRP that has been through the fire over and over and over again, and still standing strong. And right now, it's almost seeing the light at the end of the tunnel, which is its issues with the SEC now coming to in a way kind of like coming to a close, which it has been pushing for for a very long time, for a number of years, and finally it is coming into fruition. So these are some of the things that were talked about. Now, the other bit that were talked about was staking, the ability of staking. Some of the CEOs mentioned the fact that some staking, some staking firms increase the yield to unrealistic ones, which it should not be so. but should be within good yields if they are looking to get more people to come in to stay. Now, my personal take is educating most people about cryptocurrency is key. A lot of people, even the so-called Generation Z, do not have an in-depth understanding of when it comes to cryptocurrency, and hence, for a successful integration of cryptocurrency within this year, next year, and the future, there has to be a lot of education, which will eventually bridge the gap and gain more trust from both the new generation and the mid generation and the older generation. It should be made simple, easy, just simple as tapping a card and swiping a card here and there, so that people will be able to understand. Other things too that were discussed was on the AI front. So the AI front, basically, AI is gradually and very rapidly progressing. We have the likes of ChatGPT and the likes of DeepSeek, and now they are bringing in AI agents. Okay, so the AI agents will literally have like an image of you, kind of like a 3D, 4D printed version of yourself, where you'll be able to, but then having the capabilities of an AI with a lot of information, with a lot of intelligence, with artificial intelligence, I beg your pardon, with a lot of data at your disposal, having the ability to appear as a hologram where you'll be able to communicate with it. I mean, we've seen these kind of stuff in the likes of sci-fi movies, and yeah, but then it's gradually becoming a reality. All things are possible, so why not? So these are some of the major things that were talked about for day one. Okay, so day one, with regards to the events that happened today, and it's still ongoing. It's still ongoing. Like I said, I'll be bringing you all of it. So even though I'm having some technical issues, not from my side, but I think from the other side with the streaming services. But it's the reason why I'm doing it is so that anyone who couldn't, for one reason or the other, couldn't watch it, can later on be able to watch it and also listen to the dynamics that surround it, or listen to the commentaries which I came up with and brought in. Now, regarding other matters, which I am going over there, other matters too are gradually creeping in, but let me just double check to confirm. This has to do with regards to the Pi network. So currently, Pi is sitting at hold on a minute. The last time I checked, it was about 20 some. Okay, so Pi is back down to number 29, and it has considerably dropped. Obviously, due to the fact that the information that people were expecting was not what came through. A lot of investors probably they might have been expecting news of it being listed or something, which would have sent the price going the opposite way. It has dropped all the way down to 0.855941, and hence the position its rank has also dropped to number 29. But let's see, for example, somebody will say, well, wasn't there good news that was said? Yes, there was good news that was said. However, a lot of people have a set in their mind. They are expecting a certain amount of the certain type of news, primarily a listing by Binance or any of these other reputable companies. But unfortunately, it didn't go that way. So hence, people are taking the money, they're selling left, right, center, therefore dropping the value or the price down exponentially on for the Pi network. Is this good or bad? Well, I'll be honest with you. This is not bad, neither is it like good. So it's not bad in a sense that Pi Network is focused on ecosystem. There is no law anywhere that states that Pi Network has to be listed by Binance, etc. If we are fine, it's great. However, the primary focus of Pi Network is on the ecosystem. The fact that Dr. Kokoles has been invited to the Consensus 2025, it's a positive indication that Pi Network is not a scam. Because then, how can the founder of a scam be invited to such a prestigious and a world-renowned platform to come and give a talk on Pi Network, which he helped to create? But on the other hand, people are looking at the external bit, say, okay, they didn't come and make any major offer, therefore we're going to take our money out and or we're going to sell our Pi coins, and hence they are selling, and the price is dropping like flies, just dropping real quick. But don't be worried, don't be perturbed, don't be alarmed. Like I said, there's plenty until the sun goes down. You never know what is there awaiting for you. Pi Network is a long-term project, just as Bitcoin was. It's going to take a while before it gradually picks up. But like I said, Consensus 2025 is a big step for the Pi Network. Then we have the announcement of the 100 million United States dollars that has been allocated by the Pi Core team for any other person who wants to develop real world utility D apps on the Pi Network. And so you can be able to get your hands on some of that money if you have that qualification or skill set, which is great. Which is great. Let's not forget Pi Network also has the auctioning that is oncoming. I think the 28th of June or July, one of them. Correct me in the comment section. But it is a big and massive thing that is being looked at, and it's coming big. So if you're a pioneer, do hold on to your coin. Don't sell cheap. Okay, just hold on to your coins. If you can add some more, because what is coming is going to be great. Now I do know that the PiCore team does watch my videos. So if you're listening, please, a few things to take into consideration. Number one, a lot of pioneers want some clarification and clarity with regards to when their Pi coins will be released to them. Especially the ones that they've mined themselves. Also, there has to be some clarity with regards to if you're not going to, if there's going to be a deduction of Pi coins, which they haven't mined, there has to be some clear demarcation so that we can get that out of the way. I think this will do Pi Network a lot of good. Putting down $100 million venture for any business that wants is great. However, I think at the same time too, you need to address old wounds, address them, get them cleaned and dressed up and all clean and good. Maintain your pioneers who are node users, especially the ones in Asia and certain part of Africa and the rest of the world, so that there is clarity as to how much they're getting as a node user, when they're going to get these payments coming in. If you have Pi coins and you've not yet been able to receive your Pi coins, which you're expecting, you've done all the list, you've passed everything. I think the Pi Core team is due each and every person clarification so that they get things sorted out. I think that would be a great thing. Once those things are sorted out, then you don't owe any pioneer any cryptocurrencies. You don't owe them any explanation. Everything has been done. The ones that needs to be paid, you've paid them, or you've sent the Pi coins to their wallets. They are happy. They are good. Then there's clarity. There's focus, and we can be able to focus on other things. I think in that's my two piece. That's my two piece, which I believe that if the Pi Network embark on these kind of changes, is going to massively transform the ecosystem and the Pi Network as a whole completely. But with that being said, of course, who am I to make such claims or dictates? Yeah, I'm a pioneer who wants the Pi Network to grow exponentially as it's supposed to. Other than that, all things have been great. Like I said, so I can clearly see the 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 price went down all the way to 0.8, but it's kind of like picking up again. It will be nice to hear what Dr. Nicholas Kokalis will say in that is on the 16th. And also, it will be nice to know who is going to be speaking um, tomorrow on the consensus. Now, one thing I know, there is the likes of Michael Saylor. There is the likes of the one of the dragons. Then I've forgotten his name. Yeah, so it'll be nice to see what their take is on the crypto space, and yeah, yeah. So it's going to be interesting. Karim Bojuan says, I personally don't like Pi network to be listed on exchanges. I like ecosystem. Well, why not? Why not? The ecosystem is thriving. The ecosystem Pi network's focus is real world utility and usability. Therefore, anything that goes contrary to this is not really something that they will be chasing, especially when it comes to like trying to convince a centralized exchange to list them. Pi Network is trying to use the Pi coins for real world utility, not necessarily as an exchange. Although having it as an exchange is also part of the whole thing, and also should be considered. Should be considered 100%. So let's see. We are going back onto the coin there to see who is on now and to see how things are progressing further. A lot of people are really mad on yeah, somebody Mohammed Shah said, guys, Pi is still falling. Of course, Nicholas doesn't talk until yet. Absolutely. I know a lot of people are going on about the 314.159 USD DS. That is an amount, like I said, I don't think that amount is going to be showing on exchanges because it is too out of this world. I mean, most exchanges don't have that much money. So if many pioneers decide to sell, so it's going to be interesting. It's going to be interesting. I think we need to always aim high, but at the same time we have to be some to as much realistic as possible on a day-to-day basis. We need to be as realistic as we can. Absolutely, absolutely. So let's see. Do we have? Okay, I'm still waiting to get. I don't know, for some reason I'm not getting. Let's see. Let me see if it's still active and on, because I can't seem to. All right. Okay, ladies and gentlemen, we'll see if we can get it through here on this platform. Try and see if we can get things done via this way. Uh, well. Well, it's quite interesting. Can't seem to get. Um, just hold on for me, ladies and gentlemen. So consensus is still ongoing. It just so happens it's quite interesting. I have everything except exactly what I need. um, okay, hold on, ladies and gentlemen. Whilst I switch. Okay, so let's get disconnected. So we're just going to connect. I'm going to connect, and then we will get back onto the consensus. I think I've pretty much digested everything that have been said from the beginning all through till this time. The rest is just left to for us to see. I mean, today being the first day, there is obviously going to be a lot that got unpacked, and I'm not surprised with the turnout of events. A lot of people that bought tickets to go to the consensus, and some of them are already booked tickets for the Hong Kong one, which is going to be the next one. I don't know the exact date for that bit, but you can sort of appreciate and see the angle at which we're coming from this time around. It's quite interesting. So now let's see. If you just give me a minute. Perfect. I'm just going to use a different browser just to get myself in. Just hold on for me. Yeah, the consensus conference has been really going on for about almost 6 hours. I don't blame them because I mean it's a one-time thing that happens. It doesn't come every single time or every 2 months or 3 months. So when it does happen, yeah, in a way, I'll just allow things to flow the way it's supposed to or the way it has to, in a sense. Yeah, why not? Why not? All right. Perfect. Okay, ladies and gentlemen, yeah, we're managing to get things around. We have to. We have to. That's the only way forward. Why not? Why not? Brilliant. You're welcome back again. Thanks for staying. Thanks for staying. Like I said, a lot of pioneers are not happy right now with the fact that they didn't get the message that they wanted to. But don't be perturbed, okay? Pi Network is going to go all the way strong. Give Pi just 1 year. 1 year. 1 year is all I ask. Just give Pi 1 year. When Bitcoin started, it wasn't that great. I mean, 0.002. Yeah, I know. 0.002. I'm pretty sure you wish you had bought like thousands of it. Yeah, if it was that distant, easy. So don't be perturbed. Let Pi cook. It's cooking. It's cooking. Let's Nicholas, Kokalis, and all the other team, let them cook. Okay, let's let them cook. Let them cook for us any way that they want to cook. We are going to be here once the food is ready. Once the food is ready, we're going to be around. We're going to make sure that things go the way it's supposed to. So let's see. Perfect. So we are back. Consensus 2025. And then we will
However,
get things
reporting entities
rolling.
No, I'm sitting in
All right.
celebrities.
And we are
Sam's
back,
nothing.
ladies and
Ski
gentlemen.
knows
We are
everybody.
back,
He's so
ladies and
connected. He's
gentlemen.
like DJing the
So
Super
as you
Bowl.
can
He's
see,
doing things.
consensus is
Right.
still ongoing.
What I also love about
You're
Ski
not
is like
stopping.
you are
We are
authentic
not
to
going
the
to
people
stop
you know. You're
bringing
really
it to
loyal
you live
to these
so that
folks.
at
I
every
am worried
moment, even if
when,
after maybe
like,
you must have
I don't know
missed
if you all
it
got
in
this.
the
The
past, you can
Selena
always go come
Gomez
back to
pitching
Hubs
Look
Global
Crusade,
and rewatch it over
like
and
cookware kits
over
on TikTok,
again.
right?
Get
Really bad
every
AI,
single
right?
detail.
That
So at
sounds
this
like
point,
a
I'm going
Selena
to shut up
Gomez
and I'm
selling
going to
pots,
let you
right?
listen in to what's going on.
I think about all the folks that you know that you're advising, that you're doing these authentication for. We saw already the amount of times that people are getting like fake phone calls, fake Zoom calls from their CFO saying, wire me money. How do we use authentication in the future because of AI to authenticate just that you are who you are, that what you're selling is what you're selling? Because I feel like it's too easy to game these social networks right now. And is there a way in your technology to think about, I even have to authenticate the media that talks about the auction?
100%, right? And the technology is changing every day, and that's why we didn't stick to just one protocol. We covertly mark items, which not only do we have a sticker on them, but there's these invisible markings that the material changes, the placement changes. I don't even have access to that. We've built a separate arm run by a team that built Major League Baseball's kind of system that, you know, was best in the industry in class for that. And we always aim to stay a step ahead and be transparent with that, because it's a huge issue, right? Like these things, and that's why we believe that we have to be there. We have to document it. We have to upload it so we can't be hacked. We can't backdate it. It's just so easy to do. If I was not a moral person, I would go create memorabilia and sell it on all these auction sites. It's so easy to pass off, right? And that's what we want to avoid. And that's where, you know, we think this sort of technology like blockchain is so efficient. That's where you'll see us adding on more layers, uploading that media to it, putting in different watermarks and different identification tools that only our team knows how. We believe at the center there kind of has to be a trusted source, and that's why we work with the best in the business, and we're as transparent as everything as we can along the way.
All right, we got to wrap in just a second, but you know, you're a trend spotter. Sam made sure I know that. What's the next hottest trend you think that people haven't caught on to yet?
Oh, it's interesting. Good one. I think soccer's having a moment. Like you see what's happening in the U.S., right? Like we're witnessing it from some of our partnerships, but with the FIFA Team Club World Cup coming over here, and obviously FIFA World Cup, I think, you know, the globalization of this, and when we just look at sports items as an asset, and you look at the sports card world, which everybody references, you'll see sports cards selling for $4 million with a piece of a game-worn jersey. Where the jersey itself is selling for 400 grand, still a lot. I think that will invert. So I think memorabilia is an incredible sector, especially if you can get stuff that you know is true and trusted and from the source. It's wildly undervalued, and I think for this generation, they would rather hang something that's important and represents whatever is meaningful to them on their wall versus, you know, an old piece of art or buy stocks.
And I just want to make sure, the California fires, your vault is safe.
All
right?
good. We're
Okay.
all safe. We're all safe, luckily, right? And we're lucky we have facilities all across the country. So.
All right.
Right, lots to be thankful for there. DJ Ski, thank you so much for
Thank you,
joining us
guys.
at the desk, and we'll see you around the conference.
Of course, thank you all.
That was the Realist founder, DJ Ski. All right, Sam, it's time to talk about your favorite topic, because you set them up, the prediction markets.
Oh, our prediction markets,
Our
yes.
prediction markets. Is Drake coming to consensus? We know Kendrick is not, right? But Drake might.
Ski would have told us if Kendrick was coming.
He would have told us he has that alpha, but he said that he didn't give us any information. So Kendrick is not coming, but is Drake coming? You can make your bet on Myriad Markets right now. Let's take a look at what bettors think. Yeah, still not looking so good for Drake coming to consensus. We can see there that the majority.
We were at 11.8, now we're at 12.3.
Yeah,
so a few more people think he might show
a
up.
few more people think that Drake will be here. Proof of Drake. I think we would all really love for Drake to be here. And so get on Myriad Markets, make your bet. We have 4 prediction markets set up, 3 of which are points markets, so they are just for fun. They are, will Drake show up in person at Consensus 2025? Will Eric Trump mention President Trump more than 3 times? And will MoonPay President Keith Grossman tweet more than 20 exclamation points during Consensus?
He's already at 10.
I was going to say, I think he probably has surpassed that already. That's an easy one to check. There is one market that you can bet USDC against, and that is, will Bitcoin hit $110,000 during Consensus? Join in on the fun on myriad.markets. Now, Sam, before I welcome our next guest, do you think Bitcoin will hit $110,000 before the end of Consensus?
My bet was no, but that we're going to get closer. There's usually a consensus bump. We'll see what happens.
Consensus rally. Let's see what happens.
Yes.
All right, let's get to our next guest, who is best known for his bold ideas, deep technical vision, and outspoken takes on the future of finance. He is the CEO and founder of Input Output, the force behind Cardano, and a co-founder of Ethereum. Charles Hoskinson, welcome to the show.
It's great to be here. You guys having fun at Consensus?
We are having so much fun at Consensus. Are you having fun at Consensus?
It's a lovely event. You know, the weather is perfect. I remember when we did it in Austin, you know, it was really hot outside, but up here in Toronto, it's just perfect. It's not too cold, not too hot. Great attendance, a lot of wonderful people. I think I'm moderating a panel tomorrow with Eric Trump and the World Liberty guys, so that's going to be a lot of fun too.
What are you going to ask them?
I don't know. I think there's a prediction market, right? So don't tell me. I don't want any insider info.
Charles, I had the pleasure of hearing you speak before on something we're working on together. And you mentioned something to me which I thought, well, in the conversation about the idea of sort of these archaic middlemen in the finance world and how we need to change that relationship, especially with kind of the new folks who are coming into crypto who need to respect privacy and money in a different way. And I would just love for you to give us your thoughts right now on the state of the market with crypto, because we are seeing, I think, so many more people come in. And you've just been there for so long. What should people know about spending time in crypto, and especially around their own sort of like privacy and self-sovereignty, ownership of their information?
Well, you know, there's an expectation of a boom, expectation of a bull, but we as an industry are trying to do everything in our power to get rid of the bull market. But it's coming whether we like it or not. You know, every 4 years we run into this. I remember the first one I experienced was 2013, and that was a wild year because, you know, we had the Cypriot crisis and Bitcoin went from $4 to $250.
You know how a few changes on your website can somehow take weeks to ship? With Framer, that's over. Because while your site lives here, it also lives here, giving designers and marketers the freedom to update and publish all on their own, while your developers focus on the big stuff. With a powerful CMS, a growing universe of plugins, and your whole team unblocked, you're not just building a website, you're building momentum. Ship faster, build smarter with Framer.
Hey, we're going to pass pro-crypto laws, or the U.S. government choose to procure crypto for its operations, that's a good thing, and it's opening up the conversation globally. So the Middle East is becoming a lot more friendly. They were already pretty good, but now more so. The same for Europe, kind of, hey, maybe MiCA doesn't need to be as restrictive as it needs to be, in Japan and so forth. So overall, the state of affairs is bullish. It's just, we're not quite where we need to be yet. There's probably 2-3 more months of heartburn from macroeconomics like the tariff issues and these types of things before we start seeing that cycle happen. And they usually last about 6 to 12 months.
You know, at this desk today, we've talked a lot about stablecoin legislation, and just because we're talking about the U.S. government having a more friendly outlook on crypto, I'd love to get your reaction to the Genius Act, the stablecoin legislation that everyone was so optimistic about failing that first Senate vote.
Yeah, Well, we've been working pretty closely with certain key lawmakers. We work much more closely with the legislative branch than the executive, but we do talk to both sides. And there were some recommendations that we put into the Genius Act, like getting NIST, for example, to work on international standardization. Because the thing is, like, it's not just stable coins in the United States, it's, well, how do those coins work with Europe? How do those coins work with the Middle East? How do they work with Japan and other places that just have so much money flowing through them? So that was a big component. But we expected that there would be some friction, especially given that politics are so violently partisan. But the reality is that when you look at the postmortem of the 2024 election, one of the contributing factors to Harris losing was being anti-crypto. 55 million Americans own crypto, use crypto, know about crypto, and the majority of them are young and left-leaning. So why would you, as a politician, go and burn down 10, 20 million people of your own base? It doesn't make any sense. So part of the postmortem that the Democrats did in December and beyond was, let's try to figure out a way not necessarily to be pro-crypto, but at least neutral to crypto. So one area of compromise that had been since 2022 under Senator Toomey, when he first proposed stablecoin legislation, was stablecoins seem to be an easy to regulate, easy to understand, and easy to handle subset of the cryptocurrency industry. There's $243 billion worth of stablecoins minted, mostly tokenized treasuries, and about 120 million transactions per month. So it's a huge sector. It's the very first real-world assets, just tokenized treasuries floating around, and it's something where well understood regulated financial vehicles handle it, like banking or trusts or other things. So I think we'll get it done. Probably another month or two of squabbling, it'll get signed. The big one's going to be the market structure bill that'll come in the second half of the year. And that bill is the security, commodity, that bill's the taxes, potentially memorialization of the reserve and law. And there's no clear, concise opinion on that. There's a very wide variety of things to discuss. And there's kind of a third initiative that we've been pushing for, which is we need to update and modernize our securities laws in general. See, everybody's scared of being a security because being a security kills all innovation, and securities are not global instruments that trade 24 hours a day, 7 days a week. They tend to be bounded to a jurisdiction, to an exchange, and that was the view we had in 1933, 92 years ago. But what if we had like lightweight securities where they can trade globally and it's okay to be one of them? Then that would open up the real world asset space. So tokenized real estate, changes to how we sell equities, fixed income securities. These things would be much better suited on token markets than traditional exchanges. So that's one conversation that the stablecoin debate has already sparked, because Coinbase, when they came in with the stablecoin debates, they said, hey, we want to, find a way to get interest-bearing stablecoins. And that was kind of dead in the water with that bill. But more broadly, what if we could open up securities regulation a little bit, and it's easy then to turn a stablecoin into an interest-bearing instrument and trade it globally without owner's registration regime.
So Charles, the project that we're doing together at Consensus is around privacy. When I look at stablecoins, I kind of look at this is the future of internet money, right? AI agents transferring little bits back and forth. And we're going to need some way to protect ourselves in that. How does Midnight specifically, which I know is a product that you're very proud of and put a lot of your own effort and money into, how does it help solve the challenge as we move into this new internet age, especially with AI?
So the big challenge with the crypto industry in general, I'd say there are three demons we have to slay for mainstream adoption. And the number one demon is this concept of privacy. So the issue is that we did a really great as an industry building public ledgers. And that's awesome. And everything you put in it, it's immutable, it's time-stamped, it's irreversible. What Satoshi wanted, we got, and we overdid it. So the problem is there's all classes of assets and activities that you probably don't want the entire world knowing for the rest of time what you did. For example, would everybody want their Amazon transaction history being publicly known, or every Google search, or your medical records, or things like that? So it's kind of obvious, but look at the stablecoin space right now. All these Tether transactions, all these Circle transactions, that 120 million, they're all public and trackable. That's basically a panopticon of financial surveillance. So you need to build a private side to the system in addition to having the public side. And the issue with that private side is then it invites all these second, third, fourth order conversations about, well, how do you regulate that? How do you build selective disclosure? How do you identify people? What level of proof is required to know that this is compliant? But it's a necessary thing for real world assets. So Midnight as a program has been going on for about 6 years at input-output, and then we spun out the engineering side into a subsidiary called Shielded, and then just recently the Midnight Foundation got started under Fahmy Syed, wonderful friend of mine, and it now allows us to kind of centralize a lot of the bootstrapping of the ecosystem in one place. But the goal here is to solve the second problem in addition to the first, rational privacy, with what are called cooperative economics. So because it's not good enough just to have a privacy framework, and it's not good enough just to have identity, you also have to have a situation where you acknowledge that network effects are network effects. No matter how much money Microsoft spends, they don't seem to be able to break up that Google search monopoly. And similarly, if you look at all the dApps on Solana, Ethereum, if you look at the network effect of Bitcoin, it's very unlikely that a cryptocurrency, especially a new one's going to come along and in a few years' time be able to steal all those users, all that volume. And that's the wrong thinking, it's adversarial. Instead, what you got to do is say, well, how do we be cooperative? How do we enter a new realm of cooperative economics? So one of the hallmarks of Midnight is it works with most of the major smart contract systems. So it talks to Solana, it talks to Ethereum, it talks to Avalanche, it talks to Cardano, it talks to BNB, and XRP, and so forth. And the idea is that developers there can extend their infrastructure and pay transaction fees with their underlying currency. So if you're an Ether user, Ether holder, you're an Ether developer, you can spend Ether for that transaction. And the same for Solana with Sol and Bitcoin and so forth. And the magic of that is then people stop viewing this as separate stuff. They view it much more like a developer in the AI space would view OpenAI. Let's say you're building like Spellbook for lawyers, and you want to build the ultimate thing for law firms to use to read contracts. Are you going to go and build your own large language model like Elon Musk and start a $100 billion data center and all this stuff? Probably not. What you're going to do is you're going to call OpenAI over an API. It's going to do all this intelligent stuff, and then you'll have whatever stuff makes your business model work on your side. Similarly, do you really want to create your own snark system and your own privacy layer and your own disclosure system? It's a lot of complicated mathematics. I'd rather, as a developer, just pay a transaction fee and call it through an API. And that's what we've been doing with Midnight, and I think we've made enormous progress there. And the last thing is, how do you do a distribution where you get rid of the Ponzonomics? I was at Ryan Selkis' conference, Masari's, years ago, and I coined that term on stage with them. And they say, why don't people like Cardano? I said, because we don't have the Ponzonomics. We didn't do a VC raise or anything, so nobody had any ownership of it. So I said, you know what? Instead of doing an ICO or a venture capital thing, I'll just spend my own money, build it, release it finished, and do an airdrop to these 8 different chains. So the distribution, 37 million people, and so the odds are people listening to this probably already hold it once the airdrop happens. So, if you like it, great. If you don't like it, well, I put it in a bucket or something. I don't know. It's your decision. So, but I think those things solve the big problem: the rational privacy, this cooperative economics, getting rid of the Ponzonomics, and pulling those pieces together. It's going to change the industry, because suddenly we can now have a rule of assets. We can have supply chain. We can have secure voting systems. We can have healthcare record systems. We can have financial systems which are much more nuanced, where you, your accountant, your CFO, your organization gets to see one set of books, but then the world sees another, but you preserve everything that makes cryptocurrency special: the auditability, the verifiability, the provability of things. So once I give you the record, you know it's never been tampered with. You know it actually is real, it's time-stamped. These types of things. So it's really exciting.
You mentioned a lot of different ecosystems that are working together. I'm just curious to get into your head and hear about how you're thinking of the future of this industry. Do you imagine some sort of consolidation? Will all of these ecosystems that are featuring here, that we're talking about here at this desk, exist in 10 years from now?
Well, 1.4 million cryptocurrencies have been launched since I've joined the industry, and 94% of them are dead. So obviously there's a Cambrian explosion and Cambrian extinction event that happens. But to be useful, you have to have good governance. To be useful, you have to be adaptable as like a complex adaptive system, and resilient and grow. And ultimately, you have to have a community. You have to have people there. That's why Doge will never die and Bitcoin will never die, because there's an extremely strong community, and they're able to, generation by generation, keep that ethos going. So what we've thought a lot about is, how do you bring people together and give people strong incentives to work together, and how do you build communities that are self-replicating and self-reinforcing? People crack it like Ethereum did and Cardano did, and they have a durability and permanence that you just don't normally see with most projects that launch. And you can't astroturf it. You can't go and just open up your checkbook and pay people a lot of money and somehow they love you. That's a transactional relationship. They'll be there until they're not, and then they'll look for the next big thing. So really community building is the core of it. The other is philosophy. You have to have something to believe in. People, when they talk about Cardano, they say, hey, we love the economic, political, and social systems of the world being subject to change. We love the idea we have a constitution, we have a vote, we have an on-chain governance system, we actually have a say, we have an on-chain treasury, and we get to decide year by year what the roadmap's going to be, what the budget's going to be. We love the fact that the people involved legitimately want to change the world and actually try to find everyday businesses and governments to adopt that. It inspires people. It keeps them going around, especially in the bear market where, you know, everything's really sad and depressed, you know, and it's like, oh, yeah, it's bad news, this guy got sued, this thing happened. Bull market's easy to keep people excited because there's an economic incentive, but over the long run, you only survive if you have good philosophy and good community.
Charles, thanks so much for joining us at the desk. It was such a pleasure having you here, and we'll see you around.
Absolutely. Thank you so much.
Thank you, Charles.
That was Input Output CEO and founder Charles Hoskinson.
Oh man. So. Oh boy. We are back. Like I said, it's back to back. And a lot is going on. I like this gentleman who just did this presentation. I think he touched on some very interesting things, which I 100% agree with him. But like he said, community building is the most important thing within the crypto space. Okay, and the higher the community that you have, the better that you're getting stuff. And that reiterates what my point was saying, that Pi Network, Pi Coins, or Pi has been building its community, and it needs to do even more to help the community. That's why it is bringing in, great incentivization and ventures, which is the $100 million that is pushing for companies, corporate companies, for individuals that have real world capabilities of the app, software, whatever it is. They are ready to push to get you there capital wise. Okay, and this is great. It's really great. So it's all going consensus. 2025 is amazing. I love it. I'm not gonna lie, I love every single one of it. Tomorrow I will not be able to, so today I'm just relishing and reliving, absorbing every information that gets presented out there.
You're watching CoinDesk Live from
and we are back again, live from Canada.
MoonPay made 2 historic 9-figure acquisitions this year, building up its payment stack from on-ramps and trading infrastructure to now enabling commerce and asset management. I'm Jen Sanesi, here with my 2 co-hosts to close out the day, Sam Ewan and Renato Moriarty. Hello to you both.
Great to be here.
Sam and I have been at the desk all afternoon, so Renato, you really are the new face. What have you been up to today?
Well, I've been talking to leaders in this space, not leaders in, let's say, the Blockchain Association, but people who are chief legal officers, CEOs of companies in this space, and really everyone is concerned about the future of crypto. We just had the stablecoin bill essentially put on hold. We weren't able to get cloture passed in the Senate. I think, I guess you just heard something about that a moment ago, but not everyone is optimistic. Some people are concerned. And of course, market structure is sitting out there. If it doesn't happen this year, I just had somebody tell me, if it doesn't happen this year, it'll never happen. And it's existential for our industry. That's what I was just told.
That's kind of wild. We've had a lot of people at this desk here today weighing in on if stablecoin legislation will be passed. One of them, Bo Hines, who we're going to hear from in, I think, 10 minutes from now, he's going to be on the main stage. He said that he is pretty confident that stablecoin legislation will pass, and likely before August recess. It seems a little bit contradictory to what you've been hearing on the floor.
Well, Charles Hoskinson, not moments ago, said the same. He said within a couple of months he thought as well.
Yeah.
And so I'm wondering where they're getting their information versus what you're hearing, because you're hearing it from a very different side.
Yeah, I think people in this industry who are leaders of companies are very concerned.
And part of the reason that they're concerned is if stablecoin is this contentious, which is something that we had people on both parties signing off on and co-sponsoring. And if you got I had somebody tell me this morning, you had their entire Democratic caucus come together, exit and have their own counter programming and their own counter meeting about the president, really, having this political fight there. What does that mean for market structure? What does that mean more broadly for crypto? And if we don't have market structure, where is that going to leave us? So I think there's some concern if potentially stablecoin may not get passed, but I think it's tied to also a concern about market structure, which is really, I would say, the main course. In many ways, stablecoin for a lot of people who are here today is the appetizer.
Well, Renato, you and I on our show have pre-gamed SEC roundtables a few times. We've talked about what's going on at SEC roundtables, how that's going to contribute to rulemaking from a regulator standpoint. So talk to me a little bit about what happens if stablecoin legislation doesn't get passed, if the market structure legislation doesn't get passed. Does that leave it to the SEC and the CFTC to make their own rules? And then what happens when we have new leadership at these agencies?
I'll tell you, I was talking to a leader about this earlier today who used the example of the tortoise and the hare and said that Hester Peirce is like the tortoise, who is been working for years. We've had her on our program. We've talked to her a number of times. She is going forward and she's doing her rulemaking and she's doing her roundtables and she's going on as if there's going to be no market structure bill. And if you remember after the first one, Jen, I was like, okay, they're talking as if there's going to be no market structure bill. The SEC's just off doing their own thing. And at the time that seemed perhaps foolish on their part, but actually there's a real genius to it. Because if we don't get this passed, we're going to end up having to rely entirely on what the SEC is doing. And really, I think part of the concern and the frustration by a lot of the folks here at Consensus is, well, that means the CFTC may get pushed out. Maybe they won't have a seat at the table. Maybe the SEC, who's doing so much and getting out there on all these roundtables, maybe they're going to end up having the leading role.
Renato, I'm wondering, in startup culture, there's a sort of common thought process that says you are failing until you're successful, right? And I wonder if it's almost the same thing, which is we're just going to keep going. We're going to keep moving forward. We can look back at the last year and see all the incredible movement we've had, and there's been a tremendous amount. We're seeing a lot of the currencies near their high or at their high. So something is going right.
Yeah.
The question, I think, is how long is it going to take before people get what they want? Now, in crypto, the problem is they always want more, and that's really a challenge as opposed to being able to say, we've gotten a lot recently.
I think also there's people trying to look a step ahead. I was talking to somebody today that said that a lot of their deals have 5-year terms right now, and there's a reason why. There's a concern about what happens in the next presidential election. Everyone remembers the war in crypto. Everyone remembers, regulation by enforcement. Will that happen again? Will there be another Gary Gensler, that sort of thing? And I think given all of that, I think people are really just trying to game plan ahead. Like, we're not concerned about stable coins right now. We're not concerned necessarily about market structure for the short term. We're concerned about the long term and taking a longer term view. I also think, though, you talked about wanting more. Part of what's really going on here, the reason the stablecoin bill is so important is there are a lot of TradFi businesses, particularly banks, that want to get in on this, want to bring all these new customers in, want to bring all this new money, this new energy. That's great, and we need to unlock that. And really, how high crypto can go is, I think, going to be dependent on what happens in the next year.
Can we go back to the war on crypto, though, with so many big institutions and so many big names now in the game? We've talked a lot about BlackRock's offering. We've talked a lot about how institutions are thinking about different crypto products. Like, is it really a reality for us to take that many steps back and have another Gary Gensler at the helm of the SEC when these big influential names are here?
Yeah, that's a great question, Jen. We have like the DeLorean here at Consensus. So if we got in the DeLorean and we went ahead a few years, and let's just say hypothetically nothing got passed, and we had some rulemaking, and the Democrats got elected on a platform where they're like, look, the other party is too in with crypto, we're anti-crypto. I still think even then, I'm actually agreeing with you here. I think even in that circumstance, I don't think it would be quite the way it was before, where there's this knee-jerk reaction that crypto bad, non-crypto good sort of thing.
That said, I think the industry has so much PTSD from that experience that there's a lot of concern, there's a lot of trepidation. It's one thing for somebody who's involved in politics to say, oh, this is likely going to happen. But if you thought there was, let's say, a 30% chance that a boulder was going to fall on your house, you'd care. And I think that's where a lot of people are here in Consensus. They're concerned about the future. They're concerned about what could happen.
Renato, I'm thinking though, it's like, yes, we crack down on predatory lending, whether it's in home loans or it's in credit cards. Where we go might be even inching closer to that, to where we used to be, but it's not like the credit industry went away. So I don't think there's a place where crypto goes away. I don't think someone's pulling back all the ETFs and saying you can now no longer invest in them. I think the question for you is really how should one position themselves to play a volatile game, right? As someone who understands it from a legal perspective, I don't get. How do you sort of allow the framework to be change is there, and now we're going to plan for it?
That's a really smart question. I think it depends on who you are. If you're a very big player, if you've got a massive booth here at Consensus, you're going to want to be engaging with the SEC while at the same time doing everything you can to get legislation passed, and also having a plan for how you're going to be compliant in advance, because you're going to need to be ready to be compliant in 2-3 years' time. If you're somebody who's like on the sidelines just trying to make money off of this, one thing that really happened this last week, we had Coinbase acquire Deribit. That to me is a bet on derivatives. It's a bet on not only they're having their futures Coinbase derivatives product, but you also have the worldwide leader in options. You're starting to see institutional money coming in here, and I really think that a lot of the people who are going to be making money in crypto with a volatile marketplace are going to be people who are getting in and out and making bets on these derivative products where they have a lot of liquidity and they can come in and out and make bets maybe against some of the people in the spot market who are making trades and reacting a lot to the news of the day.
Well, Renato, you're going to be joining us at the desk here tomorrow, so I'm sure we'll talk about this a lot more with the guests that join us. We're going to take a look at the main stage now, where Bo Hines, the Executive Director of the President's Council of Advisors for Digital Assets at the White House, is doing a fireside chat with CoinDesk's Jesse Hamilton.
Our first day of Consensus. It's been a busy day so far. We've talked about stable coins a lot, and the role of the states in regulation, prosecution of software developers, how to head off truly bad actors, and we've now got a guy who's going to bring it all together for us. He's going to close it out for us. So we're honored and lucky to have a White House official cross into foreign territory today. Bo Hines.
Vitality gets your health moving forward. Whether that's getting you seen by a doctor quickly, taking a closer look at things, talking things over, or taking things out. Because at the end of the day, the most important thing is you. Move forward with Vitality.
Working beside crypto czar David Sachs, basically trying to move U.S. digital assets regulation forward. Am I getting that right?
That's right.
Okay. Yeah. So welcome, Bo. Thanks so much for joining us at Consensus. We appreciate it. So before we get started, by applause, if I could, I'm curious about this. Who here is from Canada? Canadians? Okay. And how about from the States?
It's a good mix.
Kind of a mix there.
It is,
but,
yeah.
Anyway, there is a considerable constituency for you out, the U.S. people out there. Obviously, this is, we're going to be a bit U.S.-centric on this discussion for obvious reasons. So, and of course, U.S. policy will help steer the rest of the world when we finally get around to it, right?
That's our goal, certainly.
So we have a short time to tap your knowledge here. I'd like to get an idea of sort of where you're coming from on crypto. Where did you first get interested, and people love this question. Had you personally invested anything in this space?
Yeah, I know it's a great question, and I have a pretty fascinating story as it relates to this space. I was actually a college football player at North Carolina State University my freshman year in college, and I had the privilege to play in the St. Petersburg Bitcoin Bowl. And the marketing worked. Lo and behold, it sparked my interest in cryptocurrency and digital asset technology more generally. I became a pretty avid trader and retail investor from that point forward, and this was, back in the day when a lot of this technology and change was considered uncouth, right? But I had a good group of friends up at Yale, and we kind of banded together and started to sort through a lot of this, and we came to the conclusion that this technology could certainly revolutionize the way our financial marketplace works. And I ended up going to law school at Wake Forest back home in North Carolina upon graduating from Yale. And I had the privilege to study under Professor Renee Hawk, and that is an intentional shout out for her at Wake Forest University School of Law. She led courses in blockchain and internet law. And this also, with no clear regulatory environment, you might be asking, well, what were you studying? And we were studying the practical applications of what a clear regulatory regime would look like. And those courses certainly kept me in tune with what was going on in the space. I ended up becoming a general partner in a growth equity firm in Charlotte, but did not have a digital assets vertical inside of that firm. Stayed very involved just from the retail perspective, and when the transition rolled around, I knew a lot of the folks in the Trump orbit from the days when I ran for Congress in North Carolina's 13th district. Unfortunately, fell just about a point short in that race, but it's led me to where I am today, and I'm ever so thankful for that. But they had reached out and said, "Are you willing to come in and help us, shape what this regulatory regime would look like and help us deliver on the president's promises to make the United States the crypto capital of the world?" And I said, "Absolutely." Couldn't think of a better opportunity, and I ended up, we had a meeting of the minds between myself and our AI and crypto czar, David Sachs, who is a brilliant human being in his own right. I think his reputation precedes him with all of his success with his business ventures and so on. But we started mapping out what this would look like. And I think that, we're well on our way of achieving the president's goal, but there's still a lot of work to do.
So I described you as a sort of a White House liaison to crypto writ large, but how would you describe your day-to-day sort of broadly, so they understand, folks understand what you do?
Yeah, so I view my office as basically being an administrator and/or Sherpa between White House policy, industry, interagency activity, and what's happening on Capitol Hill. We felt like the lack of progress that the industry had in terms of setting clear regulatory standards was in large part due to the lack of consensus that was there. There was no nucleus to pull it all together, and we felt like this office could be the tip of the spear in doing that. And I think that we've successfully done that thus far with a lot of different activity happening amongst interagency actors. And obviously we have a dream team built out in this administration for the digital asset space with Hester and Paul over at the SEC, with Brian coming in at the CFTC. I'd be remiss not to mention Secretary Lutnick, Secretary Bessent, phenomenal actors for this space. It makes my life a heck of a lot easier, and that's a testament to President Trump. I've told people many times that in this administration, I think that we're finally testing a theory that a lot of folks have had, at least in the U.S., is what would happen if you took private sector actors that have built and developed and sold businesses and injected them into a bureaucratic system. And I think that we're finding out that we can make this system work. David likes to say that we're moving at tech speed, and I would like to second that. I think that we're moving extremely quickly and effectively, for that matter. But with the president's working group that he established in this first digital assets EO, this gives us a streamlined process to engage in the activity that's necessary to provide guidance and clarity.
Well, speaking of speed and its antithesis, we're dealing with the Senate right now. What has been I guess you could describe as a bit of a roadblock for crypto legislation in the past, and it looked like things were going pretty well. So this is, arguably the biggest point of current affairs in crypto policy right now is the stablecoin bill, the bill to regulate U.S. stablecoin issuers. The Senate has been dealing with this bill. It got a little bit off track. There was a procedural, impediment to it in the Senate. We would hope to hear the latest on that, with the understanding that there may be floor consideration tomorrow. We're hearing very recently on the latest version of this bill.
We shall see. Negotiations are ongoing, and just to pull this backwards ever so slightly. Last week we did have the failed cloture vote, and many viewed this as certainly an impediment. But I remain steadfast in my optimism that we're going to achieve the president's desires to both put stablecoin legislation and market structure legislation on his desk before August recess. And I say that because of the good faith negotiations that are ongoing in a bipartisan way currently in the Senate as it relates to the Genius Act. I think that they've come together and pulled this bill to a place to where we actually get to the best outcome. And our colleagues up on the Hill recognize how important this is to the United States of America and the world more generally. And we're talking about updating very archaic payment rails that have existed for quite some time. We're talking about creating a world in which payments are much more expeditious with instant settlement times, much more cost effective, and much more transparent. This should be extremely nonpartisan in nature. And that's, a lot of the frustration that the American people have, especially, is when issues like this arise, where we're dealing with something that we should be able to come together on and push forward because, it's to the benefit of all Americans. There's really nothing partisan about it. My challenge to, my colleagues on the Republican side and the Democratic colleagues over the course of the next couple of days is, let's get this thing home. It's time. The traditional financial players are ready for adoption. We're ready to integrate these technologies, and we're ready to revolutionize the way in which our financial marketplace works.
Well, it certainly looked like it was on fire when it was coming out of the, not to get too procedural, but out of the Senate Banking Committee, had a very strong bipartisan vote. Obviously, there's, it hit this speed bump. But before I sort of ask a little bit more about that, if you were in the crypto loves the prediction markets, so you were laying a bet, Genius Act clears the Senate by the end of the month. What do you think?
That's a tough
Too
question
ambitious?
there, Jesse. I don't think it's too ambitious. Like I said, I remain optimistic it's going to get done. I think it's going to get done in short order. I'm very confident with where things stand currently, but this is an evolving process, and I'm sure I'll have more updates as soon as I get off the stage. But I just want to thank our leaders in the Senate. Senator Hagerty has done a phenomenal job. Luke on his staff, who's had the pen for most of this and worked diligently to get this to a place that is palatable for both sides, has been extremely effective. And now that we're finally in a place in which we can have good faith conversations and negotiations, and we know exactly what the other side is looking for, it allows us to achieve the best result. And that's where I can say we currently are, is that we're actually having those conversations in real time as we sit on this stage. And that puts us in a good place to get it home. So I remain, extremely confident in the fact that they'll get it pushed through, and we'll see where it goes from there. But we'd love to see it on the president's desk in short order.
In Washington, still talking is good.
That's right.
Yeah,
when the talking ceases to happen, that's when you're in bad shape. But we're not there.
In the House of Representatives, the discussion draft is out for the replacement for last session's FIT 21 bill that many people may be familiar with, the legislation to install regulatory guardrails for the crypto markets in the U.S. So, cart before the horse maybe, but where are we on that?
Well, look, we'll make a sequencing decision in short order about how these things should proceed, but we have to see what plays out in the Senate this week and over the course of the next couple of weeks. With that being said, we are absolutely adamant that both stablecoin legislation and market structure legislation need to be signed into law very quickly. One cannot be left behind. There's absolutely zero option for that from the administration's perspective. These things have to run together. That doesn't mean they have to be sequenced together. It just means that we need both, and we need to get them both done and signed into law. So I'm very pleased with where that draft sits. I think it's a much improved version of FIT 21 that we saw in the last Congress, and that's truly a testament to the writers that are working out of House Financial Services and House Ag on that side in that chamber. But I think this is a phenomenal starting point as the foundation to jumpstart conversation as they move this thing into markup. We'll certainly be there to Sherpa this along and get industry feedback and help to inject those comments into the conversation.
I think, if I'm not mistaken who it was, I think French Hill said from this venue that called them peanut butter and jelly, the two bills. So obviously they go together. So how much should people be concerned that the resistance developing for the stablecoin legislation in the Senate will be even worse for the more complex and sort of wide-ranging market structure bill it's meant to govern all of U.S. crypto?
Well, I mean, there are certainly conflicts of interest amongst industry actors on very minute issues that exist within these pieces of legislation. I think that one thing that we've proven with the Genius Act is that we're able to thread the needle to pull industry actors together. One thing that's worth noting is that with Genius, it's the first time ever you've had all three major trades come out and support a piece of crypto legislation in the United States. I think you've seen industry coalesce, all of industry coalesce behind it, including the folks that are competitors in that space and really just go head to head. So, I mean, again, that brings us to the conversation of why can't we get this through? You would think if competitors in the industry can agree upon the text, then our Democratic colleagues should as well. But we understand where they're coming from, and we've done our utmost to make concessions that allow them to get more comfortable with the language, and I think that we're there. But with market structure, to answer your question more directly, this is going to be a drawn-out conversation that takes place over the course of a couple months, and we'll be able to consolidate feedback from industry and attempt to thread that same needle there. And so long as we can get all of industry pushing behind this, I think that we'll be in a really good place. I think the problem with pushing legislation, we all know it's very hard in the United States with anything. I mean, that's how the system is built, that's how it's designed. But with digital assets, more generally, there's a knowledge gap that exists. I mean, this is new technology. It's scary for a lot of people. When you're only seeing headlines that are negative, like we saw under the Biden regime, in which people are positioning the industry as being a facilitator of illicit activity, it puts you in a tough place with people who don't understand how important this technology is. Now, we all know that that's not the case. We all know how important this technology is to be integrated into the traditional financial systems. Even those players recognize the unlock that this could provide in terms of revolutionizing the way that things work, and they're ready for adoption. I mean, that's one thing to point out as well, is these TradFi folks are banging down our door, trying to figure out what the timelines are, trying to figure out who the best players to interact with are in the digital asset space. And the unlock to that was what the president did with the first digital asset CEO, but I'll pause there because I'm sure we'll get there.
Yeah. So the Democrats who've come out to oppose the stablecoins effort, many of whom were in favor of advancing it out of committee, as we noted, have raised objections to the president's personal stake in the crypto industry and whether it presents conflict of interest. So what's the White House's response on that?
There is absolutely zero conflict of interest that exists. And I'll say this, the president's family has the right to engage in this industry like any other U.S. citizen, period. The president is focused on delivering on his promises that he made on the campaign trail to the American people. In the first 100 some odd days, he's delivered on a lot of them, which should be really exciting, not only for Americans, but for the rest of the globe, and just unleashing what this economy can do. And I'm talking about the global economy, not just the American economy. Obviously, our capital markets are in a very good place as we watch these tariff negotiations and trade negotiations play themselves out. We want to establish ourselves as the leader in digital asset financial technology more generally. And I think the fact that his sons are engaging in this is a good sign. If you're a good entrepreneur, my advice to you would be look for ways to get involved in this industry, because this is the next generation of finance, period. And if you're not thinking about ways to get involved, then you're probably not a very good business person.
So you think it's unfair to suggest the president can be influenced by outside parties based on this sort of crypto business interest?
I think it's absolutely unfair. I mean, look, if the president's family was engaged in real estate or any other place, you wouldn't hear anything about it. But the U.S. government certainly has interest in those things as well. Crypto has been treated unfairly for quite some time. And we saw this under the Biden regime with basically lawfare. They've been targeted in a way that no other industry ever has been. We like to call it blue tape. It's traditionally called red tape. You start talking about some of these regulatory structures that were set up that were enormous roadblocks, a lot of which undergirded the Operation Choke Point 2.0. And the president has made it very clear, both at the White House Crypto Summit that we had, which was a monumental step in recognizing industry for what they've been able to accomplish in the midst of headwinds, that we need to eradicate anything that undergirds Operation Choke Point and free up the traditional players from interacting with digital asset firms. And that's something that we're consistently focused on.
How, and I'll move on to the executive order and Bitcoin reserve, because I know people want to talk about that, but how are the Democrats going to be brought back to the table who are raising these concerns? Or maybe they already have.
Look, they understand how
getting a vote tomorrow.
they understand how important this is for the American people. They understand how important this is for the U.S. to lead the charge in this space. This has nothing to do with anything else that's going on with one individual. This can have a macro and global impact in a way that we can't even possibly fathom. When you start talking about stablecoin adoption, what it does for U.S. dollar global dominance is enormous. You talk about the foundation of what you can build in terms of creating these new payment rails. You're looking at tokenization of public securities, talking about the ways in which markets move and operate changing completely over the course of the next few years. That's too important of an unlock for us not to get home on this. And I'd like to see our Democratic colleagues put away political gamesmanship and move forward here and get this done for the American people.
So let's get on to this other biggie here. So President Trump put out an executive order that called for a Bitcoin reserve and a separate stockpile of other crypto assets. Those funds are at first only meant to be assets that the government has on hand from seizures and the like.
In its current state.
In the current state. So before we get into the idea of other ways that Bitcoin may be raised for the reserve, how's it going auditing the U.S. crypto holdings currently and getting this reserve off the ground in a more technical sense?
It's been a rather smooth process. Look, things oftentimes move slowly in government. I'd say not in this administration. There were clear outlined goals and dates set in that executive order in which the interagency actors have complied to. But if you look at the authority in terms of what's set up there, a lot of it falls underneath Treasury at this point. So Treasury is tasked with the responsibility of actually setting up the SPR. They're also tasked with the responsibility of consolidating that report and providing that to the working group that basically describes what we're currently holding and where we plan to go from there. And then you include the Commerce Secretary as well, that was mentioned in that executive order, as they're supposed to come up with budget-neutral ways to accumulate as much Bitcoin as we possibly can. And I get asked by journalists constantly, how much Bitcoin do you want? I'm like, that is an extremely silly question. The fact of the matter is, we view Bitcoin as being unique. It's a commodity, not a security. It has intrinsic stored value. It has the immaculate conception. It's finite. We want as much as we can possibly get. And we want to do this in a way that benefits the American people. We want to do this in a way that harnesses that asset class. Bitcoin is digital gold, period. I can't say that enough. And we view it in our long-term interest to hold on to it and find ways to harness more. There's limitless ideas in terms of how we can do this, and I don't want to poison the well by speaking to the ones in which we'll move forward on, just as of yet.
Oh, I wasn't even going to ask you about that.
But I'm sure you weren't. But there are passionate players in the room that are very intelligent, as President Trump likes to say, the high IQ folks in the building that certainly have very good ideas. And look, it's not one size fits all. We can do this in numerous creative ways. And so we will probably end up moving expeditiously on those that we can enact more quickly, but we can start building out long-term strategies as well on top of that.
And you certainly wouldn't want to name, like, I don't know, 2 or 3 creative ways that this could be accomplished?
Not just yet.
I have to try. So, okay then, if we're not getting into specifics on it, who is making the call and how are they doing it?
Well, look, this is why the working group was set up, so that we can have these conversations amongst all the interagency players that have some sort of stake in this process. Obviously, the Treasury Secretary, obviously Secretary Lutnick at Commerce. These conversations involve numerous actors, including DOJ, who's a part of this working group, and others. We want to make sure that this asset that's stored is protected and secure. We want to make sure that we're finding ways that will provide longevity in the process. And so we'll come together and flesh out these ideas amongst the group, and then we'll have a consensus decision on how to proceed.
Let's get a sense of kind of the color of your working life. So you're inside the halls every day. Well, White House has a lot going on, from tariff negotiations, border security, what have you. Not to mention sort of partially dismantling some of the structures of the federal government, the executive branch. But in all that, that's a lot going on. In all that, how much of a priority is crypto? I know it's your job, right? So you're going to hear about it all the time. But how much of a priority is crypto, which is admittedly a small corner of finance at this stage?
Well, I think with Genius moving forward and the regulatory environment that we're going to build and the integration of these technologies into the traditional financial system, it's going to be a much larger part of our economy very quickly. I think the president certainly understands that. He's the first openly pro-crypto president that we've ever had. He certainly understands the necessity to move on these things, which is why he's pushed to have these legislative priorities move forward in the first year of this administration. Our colleagues on the Hill understand how important this is for us and how important it is for the president. And so, it is a large part of the conversation that's happening in the building. We view this as a way to, unlock new technology for U.S. capital markets, and we're very proud of the ingenuity of the American people and their ability to integrate these technologies, their ability to be forward-thinking. We want to give them all the tools at their disposal to build and create and innovate in the United States. Like my message to folks that have gone offshore is welcome home. We are going to create the cleanest and most robust regulatory environment that could possibly exist for digital assets in the United States of America. And we're going to do it very quickly, and we're going to do it on the president's timeline.
I think people a lot of times think of those who work at the White House being sort of, maybe they watched West Wing or something, being sort of in the Oval Office all the time, in and out of the Oval Office constantly. But now we did see the president have the summit, the crypto summit at the White House, which you were, I'm sure, part of organizing. I think I spoke with you there, but
yep.
It's like how involved is President Trump in the crypto initiative? Do you talk to him on any kind of regular basis, or how does that work?
Well, look, there are certainly conversations that are constantly ongoing as the legislative process plays out. There's other offices in the White House that have stake in this. Start talking about the NEC, the National Economic Council, great folks there. Kevin Hassett, at the helm over there is phenomenal as it relates to digital assets as well. We have OLA, the Office of Legislative Affairs. We have OMB inside of the White House. All of these players are constantly having conversations with us about how do we move this agenda forward. And then, the president's certainly invested in seeing, a major priority of his get across the finish line. And so, these conversations happen on a daily basis. And, part of that is.
Does your home have an RTS meter? It's a switch box near your electricity meter, often labelled radio teleswitch. From June, the signal that controls RTS meters is being switched off, and some homes
on the Hill. And the president gave us broad discretion in terms of how we take industry feedback in. And I think that's given us, the tools that we need to get to the best, outcomes in terms of what the legislation should look like, in terms of the pain points for industry as it relates to rules and regulations amongst interagency actors. It truly is remarkable. In the first, 100 days, I probably had no less than 200 meetings with different industry players. Just soliciting feedback, understanding what their concerns were. As a private sector guy my entire life, I'm very keen on the idea that industry knows best. We need to hear from them and learn from them. And that's not just the Goliaths in the space. This is about learning from builders and startups and people at different stages in development of their enterprises. There's different pain points for each of these folks, and all of those needs need to be addressed in order to create the most pro-crypto friendly environment we possibly can and welcome innovation.
There were certainly a lot of people in the room for that summit, but I'm sure a lot of people. Would anyone want to go to a second summit? Anyone here? Yeah, no, oh, no, you don't have to have another one. Are you sure? It was, okay. Never mind, you don't have to plan another one. Is there another one?
So the way that
the
way that we've discussed this is, pairing this as the legislative priorities move forward and we start working towards this 180-day landmark that was laid out in the first Digital Assets Executive Order. For those of you that don't know, it references a report that we have to produce for the president that is a comprehensive look at what the cleanest regulatory environment would look like from the interagency perspective. And obviously we want to work with our colleagues on the Hill to do that. We view it as a means, if the legislative process runs its course, to fill in the gaps that might still exist so that there's, immense clarity and there's no stone left unturned. So with that, we'll certainly have, in my opinion, as we continue to flesh this out, probably sub-vertical summits in which we pull industry actors in from different verticals in the space. You can bring exchanges in one time, you can bring miners and energy firms in one time, just so we're actually hitting, and understanding exactly what the pain points are for each category of the industry and being able to address those needs independently.
Now, the U.S. regulatory agencies, such as the Securities and Exchange Commission and the others, they seem to be sort of exploring their own paths with with the industry as they await congressional action. Are you in, for your job, are you in communication with the agencies too on what can be done without the new laws?
Absolutely. I mean, look, this report that we're comprising and working on amongst our group is all-encompassing. When we'll talk about stables, talk about market structure, we'll talk about everything that needs to be done and what we can accomplish through interagency activity. And again, going back to this first digital assets executive order, it was penned this way for a reason. We had the 30-day landmark, which compelled these actors to do an internal audit or review of any rule or reg that they touched in the space that affected digital assets more generally. The 60-day landmark compelled the same actors to produce a list of recommendations of what things they could do independently to get us in a cleaner environment. We were hoping through this process, and we've seen this happen just through the guidance and the rescissions and the lawfare that's been eradicated. They're making our life easier with the report. It's less that we have to address. And with these actors that are currently in their roles, they're doing a phenomenal job of doing that. This report continues to shrink by the day. We're hoping that a 200-page report may only have to be a 50-page report. But we'll see, and we'll get there.
So you've, as you indicated, probably met with a couple of hundred of the people here at Consensus today. But are you still taking those meetings with crypto execs and founders? And if so, how should they approach you?
Absolutely. So the best way to reach out to me would be through the OPL office at the White House, the Office of Public Liaison. They'll happily set up meetings for us, and please do reach out. We want to hear from you. We want to hear your concerns on market structure as we move forward on this process. We want to hear about your pain points that you're dealing with in the industry, and use us as a resource to be that Sherpa, that administrator that can pull everyone together and voice your concerns for you.
Well, that is our time, unfortunately. Thanks so much for being with us at Consensus, Bo. Really appreciate it.
Thank you, Jesse.
Give Bo a hand.
Yeah, a good job done. That was nice. That was nice. So
welcome back. I'm Coindesk anchor Christine Lee.
yeah, I really like the
redefine
presentation
movement
that was
and
given by
storage of all forms of value,
the US
patenting the Open Value
rep.
Network that facilitates the
I think moving forward, there's going to be more clarity. There's going to be the rules and regulations are going to be set pretty well. I like the way he did his presentation. Very clear, very nice, very concise. Well done. Good job. So let's go on. Let's see who we have here.
Absolutely. I mean, you can call it merging out of stealth. We chose Consensus to launch our company, and we centered all our launch activities around it.
I love it. I love it. Okay, so tell me, what is Transactix?
Transactix is a Canadian company. We have a 100% Canadian-made solution. It is called the Open Value Network. It is patented technology that facilitates the movement of all types of value, whether it's crypto, fiat, loyalty rewards, credit, assets, and everything. It's a lot of work, especially all these instruments have different characters and personalities, and all of them operate with different regulations. So that was a lot of difficult work, and we've undertaken the difficult task of making it easy. And if I want to say very simply, our mission is to not just enable that movement, but to make it as cheap and efficient as sending a text message.
Huh. All right. So is this a decentralized blockchain? Is this, okay, it is.
It's not a chain of its own. It operates on many chains. So, I mean, we operate on the 9 most popular chains that exist out there. You can list them if you go on CoinMarketCap or anywhere you see them. So far we support 9 chains, and if the use case or the business case requires it, we're open to support more.
And so is it a layer 2? Is it a roll-up? Is that the idea?
It's actually a platform that consolidates all these layers, but it's not a blockchain of its own.
Okay.
Yeah.
And so, have you already onboarded projects to use the Open Value Network?
So we're our own project in a sense, if you want. What we have done is, so what we announced today was not just the Open Value Network, but we also announced launching CADX, the Canadian-backed one-to-one fiat-backed stablecoin. Oh. So CADX was launched today as well as part of our announcement, and more importantly, as an application of all of this, is our smart QR code-based payment system. So you get the smart QR codes, you get CADX, which is built on top of OVN that has a stablecoin as a service embedded within it. So all this trifecta was announced today, and we are our own project.
So I'm wondering, how are you going to get users onboarded onto this specifically? And I'm guessing you're doing real world assets, just everything that you can tokenize onto.
Yes, we're going in
Valley.
phases. 100%. We're going in phases. The first phase, which is the very simple use case that you can experience here at Consensus, we have the Transactix Cafe out in the F&B area, and it has this beautiful yellow umbrella. Go up there, scan the QR code, coffee is on us, so we gift you 5 CADX so that you can buy your coffee with. And then this is the first use case. It's a very efficient means of paying for small things. There are a number of other assets. When it comes to the real world assets, these will be launched in subsequent phases.
And you are a Canadian company
100%.
based in Calgary. Tell me a bit about the environment in Canada. Why choose Canada, and are you facing challenges in the regulatory atmosphere in Canada?
That's a great question. As everybody knows, the regulatory landscape in Canada is generally more difficult than other jurisdictions in the world. But we are Canadian, the founder and the team and the technology, we're as Canadian as it gets. And this is home, so this is why we set up here. Now we chose Calgary for where we launched the company, as it had some interesting promises on the blockchain front, and
it's very friendly.
It's friendlier than other territories at the moment. But we don't view ourselves as just like a Calgary company. We are a Canadian company, and we extend our services everywhere in Canada. And
is the idea to capture more, expand elsewhere regionally in the world as well?
100%. Like a 1,000-mile journey starts with a few steps. We're starting here at home. We're looking for local services offerings. But as I mentioned in the panel earlier, our vision and the dream is the dream that we're trying to achieve long term is to be able to go anywhere in the world, transact any currency in the world with just a QR code. There is enough tech and blockchain out there to make this happen. Some hotspots in the world, like in Thailand and Bali, you already see now a lot of prevalence of crypto-based payments. Now we need to build the bridges everywhere. So we're not the only builders. Everybody's trying to build out there. We're building here as well. And soon we see each other connecting everywhere, whether it requires us to expand or them to expanding. We're open, we're talking, we're bridging. This is what we're here for.
Yeah, and I know you want to emphasize this is a 10-year plan.
Oh, at least. Okay. So when we were thinking about this project, when we were planning, when we were designing, whether it's on the engineering side, whether it's on our commercial side, whether on our go-to-market, we're looking to be here for 10 years.
All right. And in crypto, that's a long time. All right. Ali, thank you so much for joining us.
Awesome. Thank you very much, Christine.
That was Transactix CEO Ali Abudaya. More with the Stellar Development Foundation after the break. Oh, no.
All right. So that was Transact, the CEO of Transact. Looking forward to have crypto easy using a QR code, but we all know Pi Network has already done that. See, in Pi Network, ladies and gentlemen, you have all of it, all that you need. It doesn't matter where about in the world that you are, you can make that transaction with just a QR code. Easy does it.
Imagine a future where you can use your nails, clothing, any object really with an NFC chip to pay for your goods and services. That's a future being realized by Tyler Spalding. He's the president of the Acronym Foundation. Who is
all right, let's go to the next person.
Anvil and the Digital Spenders Club.
Today has been a very productive one.
Hello.
All right, let's go and listen to
I will be known as the
this
future
gentleman.
of buying nail salon services.
It's all the rage. I've got an NFC chip nail. I want to buy things with my nails. Okay, so you are the talk of the town at Consensus. You had this amazing.
Hopefully good talk of the town.
You have this, yes. You have an amazing setup here with the blockchain video, blast from the past nail salons, and everyone is getting these little cards to buy
hardware
things.
wallets.
So, yeah, hardware wallets that you're giving out.
Mm-hmm.
Okay, so first of all, backing up, tell me what acronym is.
So it's a little of everything, but at a high level, it's really just a foundation that's really been dedicated to supporting Web3 in general. So it makes grants, it supports projects, it builds projects, really anything that's advancing the space forward. I personally have been in crypto for a little more than 14 years.
Oh,
so
wow.
I've seen quite a bit of things, met a lot of people along the way, worked on all sorts of projects, and so kind of putting a lot of that knowledge together. How can we best contribute to just the open source community in general? We have a slight focus on payments. That's a lot of my experience in helping found Flexa and kind of pushing forward a lot with real world usage of spending. But it really is all sorts of projects within Web3, anything open source that we contribute, help build, and fund.
All right, and so you have two projects under the umbrella here. One is Anvil, one is the Digital Spending Club. So I guess that's what we saw at the Digital Spenders Club. But I guess that's what we're seeing on the floor here. Tell me a bit about how that works.
Yeah, so the Digital Spenders Club is sort of built alongside sort of another project that we work with called AMP, which is a collateral token for Flexa. So again, kind of a payments network and the payments ethos. But we really tried to look at, well, what are people doing? What have people found most exciting? And it was really about this action of spending with crypto. There's hundreds, if not thousands, tens of thousands of videos of people buying things with crypto online, on Twitter, on Facebook, on Instagram. Yeah, exactly. And it's still really, really going strong. And so we wanted to support that. And so we tested this idea of, what if we made that even easier? What if we built some sort of like culture around it? What if we added this really utility-based element of a hardware-based wallet that was literally in a card? So it has this really small silicon chip with a RF antenna that literally is a hardware wallet in your pocket. It was developed a technology, it's called Burner is the name of the project behind that. And we've been working together for years, and it was a team that we just really trusted. They've been so innovative. We put it all together, said, what if we made this a spendable thing that people could now use, and then also kind of be a little bit in this club and be recognized and like have a brand around it. And it took off, and we're already up to closing in on 10,000 members in 3 months, just with like this very small launch of, hey, we want to try this out and see if people care. And it's just been really exciting. It's been really exciting. So now we want to really turn this into something. It's been really exciting. So now we want to really turn this into something. It's been really exciting. So now we want to really turn this into something big. And here in particular, again, with the whole installation, what we're here in particular, again, with the whole installation, what we're really here in particular, again, with the whole installation, what we're really proud Here in particular, again, with the whole installation, what we're really proud about is we all know that, crypto is really about, often, shilling some stuff, talking about them things like, why is this so great? And you kind of get caught up in the narratives. With us, it's how can we build this nostalgic, very approachable, very simple installation. You come in, you can see it, it's so approachable, and then we're going to onboard you onto crypto. Onboard you onto crypto and say, the priority, what crypto is. Onboard you onto crypto and say, the priority, what crypto is, but here's a really easy way. It's very convenient. You now have a hardware wallet in your hands, and you can start to use that in a real utility way, and that's something we're really excited about. Like today, I think we had over 2,000 cards that we gave away, like literally that many in that short amount of space. And so that's really exciting to us, and that now there's that many more people that have, Base wallets now. I mean, we gave them USDC on Base that now they can use, and they can buy things at our stores. So
very cool. Do you think in the future, since it's all on NFC chips and you could put them on anything, could you start putting them in any type of objects really and paying digitally with
I mean, there's really no limitation to that. They're often used for like authentication mechanisms, like for mechanisms, like for high-end products where you can scan them and verify. It could be like an NFT. An NFT or a token or something like that for authenticity. An NFT or a token or something like that for authenticity. An NFT or a token or something like that for authenticity. So we're seeing that already get used. But in terms of payments, for us, it's really how do we just make this as dead simple as possible, whether it's a QR code or a tap. So that's the really cool thing we did that is live today now. And working with Flexa, those cards you can literally tap to pay in a purely non-custodial environment. There's no other middlemen, there's no other MPC wallets or bank transactions. It's literally, you have 100% control of all of the funds on your wallet. You're then sending them into another wallet, and that's the transaction. And it's literally as simple as any other bank card transaction where you're just tapping to some sort of interface and the payment is made.
You're also working on Anvil, which is an Ethereum DeFi protocol for efficient collateral utilization. What does that mean?
It's way more simple than it sounds.
Okay.
The idea is that, so collateral management, we have all these different types of assets, whether bank assets, security assets, token assets, commodities, all just different sorts of property. And we use them as collateral and essentially borrow against them or get some sort of secured credit against them. And we see this in all different sorts of formats. An easy one is just like a loan. Formats. An easy one is just like a loan. I have collateral, I want to get some sort of a loan against. Formats. An easy one is just like a loan. I have collateral. Formats. An easy like a loan. I have collateral. Formats. An easy one is just like a loan. I have collateral. I want to get some sort of a loan against it. And that ends up just being very fragmented across all the various ecosystems, all the various chains. In fact, that's like the #1 metric, TVL, right? Everyone always, oh, how much collateral do we have? How many assets do we have? Like, why is my chain or my environment or my app the big or the dominant one? And so we took the approach of, or my app the big or the dominant one. Or my app the big or the dominant one. And so we took the approach of, well, what if you could just lock your collateral in a transparent vault and then use the state of that in a contract that could just issue credit. And so then anyone could use that. So an app could use it, a person can use it, and it's kind of like a bank check example. I mean, I'm really old, so that dates me It's where I use these things. But you have a bank check where if I give you a check, you can then cash that check for whatever the face value is. That's essentially what we did just in an Ethereum contract of here is a bank check for USDC. But it's really just a contract state that's essentially an IOU letter of credit for that amount. One of the things that was really cool that we even announced earlier, the wallet Bitcoin.com, for instance, that has been around for a really long time, has millions of users. They're now going to use Anvil to be able to essentially be the banking services to their users and issue them stablecoin loans using just an Anvil behind the scenes, which is like super cool.
I also saw there's a recent software development kit launch and integrations.
Yeah, so that just makes everything easy. I'd say not only the acronym, but then myself, again, through the 14 years, it really seems like 3 sometimes. I've really just focused on how do we make this stuff like real world usable. So there's a lot of narratives around this stuff, but how can we just really make it valuable to people? They use it every day. TradFi business businesses or traditional businesses use this stuff. And so the SDK we released, we could just embed this into wallets or interfaces, an online, a website, to just make it super easy. So you don't have to know what Anvil is, you don't have to go to Anvil, it's all customized to their site, and then they can now just put the actions in place and kind of authorize transactions really, really simply without needing to go anywhere else. So it's all incorporated within like an app.
I think that's when we know that we've made it. When it's so easy, we don't even realize we're using crypto.
Yeah, that is the goal for sure.
Tyler, thank you so much for joining us.
Thank you, appreciate it.
All right, that was Acronym Foundation President Tyler Spalding. That concludes day 1 of Consensus 2025. We'll be up bright and early tomorrow, Thursday, May 15th, to do it all over again, 10 a.m. to 5 p.m. We'll be joined by Mr. Wonderful himself, Kevin O'Leary, Barstool Sports, Dave Portnoy, and Ethereum co-founder Anthony Diorio. Don't want to miss it. Join us online at coindesk.com, X, and YouTube. Have a beautiful night, and we'll see you tomorrow.
All right, ladies and gentlemen, thank you for staying. And that brings us to the end of Consensus 2025, day 1. It's been a lovely day and it's been a wonderful time being your host, Emmanuel, or Hops Global. It's very late here. So have a wonderful day today. Have a good evening, good morning, good afternoon, wherever you are. Unfortunately, tomorrow I will not be able to come on, or I'll do my best to try and come. But like I said, today has been a wonderful time. And also to all pioneers, on the 16th is Dr. Nicholas Kokali's speech or part or time for him to also chip in and come in with Pi Network. and hopefully that will get some traction on the price of Pi, whether it's going to go up. But most importantly, it's about the ecosystem and the fact that Pi Network meets all the requirements and the various things that have been spoken about today. That is in my opinion, because every single time any CEO brought something up, the Pi Network seemed to be the solution to it, and it did it beautifully and in a grand style. So it's been a full 8 hours, 11 minutes, 46 seconds. If you've missed this time, ladies and gentlemen, do not worry. You can always go and check it out again. Listen to the different parts. Listen to the commentaries that came through. Until we meet again, this has been Hops Global. Thank you so much, and we'll see you shortly. Do stay tuned.
Good.
Lovely,
Checked.
lovely evening.
Crypto checked. Hoppers, welcome home. All systems engaged. Portal open. Ladies and gentlemen,